In today's video, I'm going over how you can do the same and cash these A+ data wick setups just like me, and how I was able to basically cash these two winners today on ES, netting me 4 reward, and then later we took 1 loss here, which is completely okay. And of course, there's 2 other winners here, but I just missed out on these trades because I was responding to messages in Discord. So if you're not in the free Discord, join up in the free Discord. I try to proactively help out the community if I can. And of course, we have a private chat for the course members. But nonetheless, let's go over this quick recap. It won't be a long recap today. So first off, we had the data wick at 8:30 a.m. This is not the ideal data wick. We want usually a bigger data wick because if you compare this data wick size to the previous price action, it's not much bigger, right? Now the wicks are definitely more prevalent, but it's not like it's anything crazy. So this is our data wick here. We took out the high. What did I take? I took an IFG setup. So if I go back in time here, real quick in replay mode, I took an IFG setup here. And let me make sure my IFG indicator is working properly here. Yeah, it is. So we took an IFG setup here, going short for 1-to-1, and that's basically how we were able to hit TP. Just using combination of data wicks and my IFG indicator. It's that simple. There's your 1R scalp right there to the TP. Now there's also another TP I could go for, which is a 15-minute demand, but I just went for the data wick low. So once we do take out that data wick low, we then look for the other direction, which we did later get. So wait for an entry model. I waited for my entry model. This is an entry model I teach within a course. This is an OB entry model is what I like to call it. So wait for an entry model. I waited for my entry model. This is an entry model I teach within a course. This is an OB entry model is what I like to call it. Week. So wait for an entry model. I waited for my entry model. This is an entry model I teach within a course. We had a low sweep week. So wait for an entry model. I waited for my entry model. This is an entry model I teach within a course. We had a low sweep week. So wait for an entry model. Course members. But nonetheless, let's go over this quick recap. It won't be a long recap today. So first off, we had the data wick at 8:30 a.m. This is not the demand, but I just call it weak. So right, but then we made this new high, and if you look to the left, we hit something to the left on the higher time frame. So we made this low now, taking out this inducement here, and we should be expecting higher highs. Now my draw on liquidity was also higher. So not only did we hit this 4-hour supply here, right? We hit this 4-hour supply, but also we have 4-hour supply or 4-hour demand. We hit the 4-hour supply up top here as well. So because we hit this 4-hour supply as well, that is my draw on liquidity. And that aligns perfectly with the POC on the 1 hour. Now, if you go to different time frames, you can also see it's a 30-minute POC. It's also a 15-minute POC. But most clear was the 4-hour and 1 hour time frame. So that was my draw for the day. So you could have just continuously taken longs. If you miss this long here, you could have used my entry model and strategy I teach in the course to take another long entry here, or sorry, here would be the right entry model here to take internal continuations. But obviously, I tell everyone you want to take the initial setup for the most part because that is going to give you the best price and best trade management. Now, after we take out London session high, take out 8 session high, we tapped into the 4-hour supply. This is where you can look for shorts. Now, for me personally, I wasn't on charts, right? I was answering some questions. I was busy, so I was not able to catch the short here or the short here. But this is a forward test here that I drew out that you could have taken with my strategy. We had a liquidity sweep, tap into a 30-minute unmitigated demand, tapped into a POC entry model, and you could have just TP'd at the origin 1 minute above for 2.5 risk reward. Why would you not want to TP at the high ideally? Well, it's because knowing we hit a 4-hour supply. So if we hit the 4-hour supply and POC, yes, we do have gaps on a 1 minute above, but those are lower time frames, right? So this is another POC or POI I drew out earlier. But yeah, we hit the 4-hour supply, so there's a lower probability in us continuously going to the upside. Now, we can still continue to the upside, right? It's probabilities. We could go up, take out the high, then go lower, or we could just mitigate the unmitigated 1 minute origin and go lower. That's what we did. So you could have taken this long here, which I did not, by the way, and then you could have taken this short with my entry model. And then lastly but not least, we have this SMT here with NQ. I would have taken this setup any single day of the week. This was just basically a setup that failed, right? We had an SMT here at the 1 minute origin here that caused this entire shift in external structure. And we had my entry model as confirmation, and I just took it. Like, it's just like any other trade, any other day, you could, for example, this could have won, right? But I'd say the only negative confluence going against the trade was that we hit the 4-hour supply. So because we hit the 4-hour supply, that is the reason why market structure externally later shifted lower. We externally later shifted lower. Now you could even consider this a change of character, to be more precise, than a liquidity sweep. Because if you're anticipating the 4-hour supply to hold, this is a real change of character and not a liquidity sweep, which is also known as a fake change of character. So you could have marked it as a change of character as well, but point is this is still a valid counter trend trade in a sense towards the 4-hour supply. So unfortunately, took just -1 risk reward here. A setup, I'm fine with the loss. You know, it's just probabilities. These A setups tend to have like a 70% win rate when traded properly with the right context in mind, with all the confluences I have in the PDF in the course. So when they lose, it just means the 30% of probabilities played out. You actually could have managed just to break even here. We actually made equal highs, so maybe not, but there's potential of you managing your trade here, right? Using your stop loss reduction method, which I wouldn't use here because it's basically at the normal stop loss. But if we did actually go above that high, that would be a place where you can break even, or 50% to TP, or any other break even method I teach within the course that you guys can use. So that was a -1R, and later you can see we basically dumped, right? We just completely dumped and continued lower off the 4-hour supply. So like I mentioned, we were in a between 4-hour demand, 4-hour supply. One side is going to take out the other side at some point. We cannot 100% predict which one will win, right? But we can anticipate in terms of probabilities of having more conservative TPs. Like if you're long here, you want to have this conservative TP here. If you're shorting this, you would have a conservative TP maybe here. But the thing is, if you're shorting this, this is something you can also use. Notice how this delivery here happened. First of all, this is bad delivery here. But the main point is everything here is fully mitigated, except for this. So you could actually just TP there. So technically this is not fully mitigated, right? But you can at least target all this because this is fully mitigated. So that can give you hints on price signatures in terms of maybe price will actually not hold and go lower. So there's certain things you have to understand in terms of probabilities. If you play just a mitigation, you can take a lot more winning trades on this day than maybe, for example, this one loss. But some days where we just expand and fail to respect supply, winners like these will run for a lot of risk rewards. So hope you guys do enjoy today's little recap video going over probabilities, the basics of it, and just, you know, the basics of my strategy and system. If you want to actually go deep into my strategy and system, if you don't completely understand this yet, highly recommend the 100 risk reward course. I literally go through everything in there. Most people, when they take the course and finish it, they don't have any questions at the end. And it's because the course is very comprehensive and it has literally everything you need. Trade management, stop loss management, different ways of entering, when to use which entry model, because I teach several ways to enter the market with confirmation depending on how price delivers, which not a lot of people talk about, right? How price delivers towards your POI is actually important. Some people never actually look into towards that. So quick little hint there, look into how price delivers towards your POIs. Quick little free sauce there. But hope you guys do enjoy. Join the free Discord if you are interested in just some free beginner content and just the community in general. If you want access to the private trading chat, check out the 100 risk reward course. So you get that as a bonus essentially of joining the course. The price is $399 currently with a plus 10% bonus on top if you buy quick enough. But again, in a few days, I will be raising the price to double. So join in now while you still can, and I hope to see you guys next week. In today's video, I'll be going over how I was able to personally make 11 risk rewards today at a 100% win rate. We took 4 winners and 1 break-even trade. And yeah, it was overall a really good training session for me today. So let's just go over the trades. Again, the strategy I'm using, I'll be going over small details and parts of it. But if you want to know the entire strategy, it is within my 100 risk reward advanced course, which is on my website, and it directly will link you to the WAP. Again, for those that are wondering, the sale currently for 50% off is going right now. And I will be back at the original price, basically double the current price by next month. So if you don't get in now, you will be too late getting in next month. So just something to keep in mind. But nonetheless, let's go over the trades taken. So We took 4 winners and 1 break even. Let's go over ES first because I traded ES and GC today, which is gold. So on ES, the trade idea was simple. We had a clear draw on liquidity. So that's the one thing I always check. First off, we took out liquidity here, right? And when we're bullish, because we have this gap above, when we're bullish, lows get taken as pro trend sweeps. So we took a low in a bullish market. Number 2, we had a clear draw on liquidity, which is above on a 30-minute supply. Again, for those that are wondering, you can go to different time frames for 50% off. It's going right now. Something you can also do, but I just kept the 30-minute supply there. It's a little big, but it's not crazy big. Like something big would probably be something like this, right? But it's all right size. And again, always wait for entry model confirmations with my strategy anyway. So I'm not just placing blind limit orders at these POIs. But unless, let's go over the first trade, right? We had an impulse delivery. This is basically, I would say it's an A impulse delivery. We had a little bit of chop here. It was overall a really good it looked trading session for me. On NQ, today. This is an A plus impulse model delivery. So I took my impulse model entry here and was able to catch this 5 risk reward. Whereas my target was very clear. Price is $3.99. Fully mitigated trend on liquidity right above. So my target was high here. We took 4, but my overall draw today was a 100. So some people may ask, why did I hold the full position to the 30-minute? I hope to see the reason why is because sometimes we, in terms of in today's video, I'll be going over how I was able to personally make 11 risk reward today in this position still if we get a mitigation cycle. I would actually want to double my money in terms of I secure my 5 risk reward trade, and if we get a mitigation cycle, I get my entry model again. I'll take another long here and make another 5, 6, 7 risk reward, right? So that in terms of mathematics gives you better results than just holding, for example, for this, right? With the potential of if we don't hold here and at this band POI, we could go lower. So it's better to score that 5 risk reward. And then if you get a re-entry or another entry idea or long off the new POI, take it. I would have 100% taken it every time, any day. This would have been an A setup for me after we had this SMT here. So NQ took out the low. ES did not take out the low. We basically made equal lows, which to me is not taken out. And we tapped into an origin POI that's very valid. And we had liquidity here as well internally. So we had so many confidence on this trade. And because the delivery was momentum, it was so good, right? A lot of people get scared. When you see momentum going bearish like this, a lot of people get scared long. But no, over here at ETU, we actually are taking this, right? We are very confident taking this because I've seen this play out all the time. This is actually, we want to see momentum going against our trade before we hit our POI, right? That's what we want. We don't want something like this. Right, it creates a lot more resistance when it comes to price mitigation to go to your target. So something like this is more ideal, right? So this is slightly right after open, right? Typically, I don't like trading right at open. This was the opening candle at 9:30. This is slightly after open. We had the setup, took the 5 risk reward, and yeah. And then we also had, if you missed the 5 risk reward, my stop under setup that I teach within the course, your entry would have been right here. Your stop would have been down here. And you would just target for your draw on liquidity for 7 risk rewards. So if you did miss the initial entry here because it never came back, that's okay. Because you still could have taken my internal continuation model, which is the stop under setup. And it would have played out perfectly here, as you can see. Now that we hit 30-minute supply, right? This is a B step to me just because my draw was the 30-minute, but we could also potentially see higher of these highs, right? So for me, it wasn't the best setup here, but it did work out today, right? So I took a counter here in a sense, but because this is a higher time frame POI, the 30-minute, it's a lot better. If this was just like a 1-minute POI here with no high time frame move, meaning not a big move, like look how big of a move this POI created versus maybe like a 1-minute POI, maybe something here, which creates only this small move, those are less likely to hold, right? Something like this is more likely to hold and at least give you some type of move or big solid move. So I was able to take this. I took the IFG setup. But if you took my OB entry model, your entry would be at 9 risk reward. So you would have made bank. You would have banked on this setup if you took the OB entry model. But me personally, I just kind of wanted to, it was more so in terms of a FOMO in terms of I didn't want to miss the move. So I just took the IFG. Even though I should have recognized we were not getting the best delivery in the POI, it was somewhat choppy. So I could have anticipated this, but I missed out and it's okay, right? Still secure 2 risk rewards, stop loss. I tell you guys to give it the wiggle room, so you get stopped out prematurely. Now we had a member here in our course that did actually take it, and he literally kid you not, joined the course like 2 days ago. And he's already recognizing these setups. He said he also took the IFG short here, which is awesome. My TP I sent out to the group was, I said either TP at this flip or TP at this flip down below. both were valid TPs and both did hit. So if I held towards that flip, it would have been a much longer trade for sure, 2.5 hours, but I would have made double my risk reward. Nonetheless, I wasn't confident enough during live trading to hold this all the way down here because it's counter to what I potentially was seeing the highs, which is okay. You know, you won't always be right. And I secured 2 risk reward here, right? So that was basically my 2 trades on ES, and I was basically done for a day here because obviously my next price target I was looking at the long here was this PY and this PY. So these 2 were valid PYs here to look for longs. We never got confirmation of my entry model here, so you don't take that. You take this because you got my entry model here, and you could have taken it with FOMC at 2 o'clock, holding to break even, and you could have TP'd at this origin above. Or at that origin above right there. So it worked out perfectly here. But again, I was done for a day. I was really satisfied, and you don't want to get too greedy, right? Because the longer you stay in the charts, if you start taking actual losses, in this case, this did work out, so you would have been fine. But I'm just saying, some people psychologically, let's say you take 3 losses after these 2 wins, you might go on tilt and basically give the market away all your gains. So that's not something you want to be doing, hence why I stopped. Now, gold here. Okay, so on gold, right? Gold, you don't have to wait till 9:30 because it's not an indice, it's an asset. I took a 1 hour scalp on 30-minute supply, okay? And I just basically TP'd at 1-to-1 here. And I go over ways or when you want to TP at 1-to-1 for scalps and when you want to look for those big trades in the course. So if you're interested in those specific details, check out the course while it's still on sale for 50%. Now here is a B impulsive delivery. We had good momentum, so I used an aggressive stop loss here. What's the context here? We swept liquidity here, right? So we swept it. We had a great reaction. We instantly reacted off of it. This is pretty solid price delivery here. We didn't have too much internal structure in the way. Something like, for example, this is not ideal. We want to ideally see something that's more momentum like this. And people get scared. Like I tell you, people get scared of this, but you shouldn't. You should actually be on the other side. You should be greedy when others are fearful, right? Warren Buffett said it best. So I applied to intraday trading as well. So my TP originally was at the 5-minute supply here, but we never hit it. At the time, we didn't hit it. We did not hit it. So it edged my TP and it came back to break even. Because I was so close. I was like, price is this close. There's no reason for price to come back down here. But it did come back down here. And my thesis, you guys always have to come with a thesis in the market of if and then statements. So if this happens, then what do you do, right? So for my idea was that if we do come back, I will take another trade going towards the 5-minute supply. I was very confident 5-minute supply hitting. I didn't realize there was a 15-minute supply here at the time, which did hit to the tick, as you can see. But that's not an issue with me because I can always just look to get a re-entry on a lower time frame back. So this is just a mitigation cycle, which is what I teach. And you can predict this and basically TP there at the 5-minute PY right there. So you can avoid people that are trying to short this. People are trying to probably short here. This is just market manipulation you can easily avoid if you learn all the stuff I teach within the course about manipulation and fake reactions. We avoid these losses here, right? Now, in this case, this trade did work out here, but this is a trade I probably would not be taking ever. So 5-minute was more clear to me. So I TP'd at the 5-minute for a 3 risk reward. So literally on gold, we made 2 winners, 1 break even. ES, we just had 2 winners. So 100% win rate today. Did a good job. Overall, just trading personally with my strategy. You know, you should be catching all these trades. This is very mechanical. My strategy is very mechanical. You should be basically catching all these trades with a proper draw on liquidity. So yeah, basically that's 5 plus 2, that's 7 plus 3, that's 10 plus 1, that's 11. So overall 11, like I said, 11 risk reward trading today. Hopefully this quick little trade recap goes over things. Again, I will see if I can post a more in-depth one into the course modules for the private members. But other than that, man, hope you guys do enjoy this course recap going over, or trade recap, just going over trades hitting today. I did do a live stream a bit later after on this day for free on YouTube. So if you want to check out the live stream, it was like a Q&A session. Feel free to. Otherwise, join the free Discord server. No charge, completely free. Join that. And then I also have the course and one-on-one mentorship. So the one-on-one mentorship, I only have one spot left for that, right? So whoever gets that, it's the last spot left currently. I opened up new spots whenever I'm done with a student, for example. But other than that, I keep it very limited. So 1 spot left if you want to secure a spot at the current price. And then I also have the 100 risk reward course, which there's no velocity like limit to stocks. So you can get that whenever you want at your own time. But I'm just letting you guys know ahead of time, the sale and the plus 10% promotion pop up right now will end in a few days. So get it while you still can, and I'll see you guys in the Discord. You're going to have a smaller edge for the most part in the market unless you have a very high quality trade with tons of context and confluences, because these are much smaller moves, right? An internal change of character. Like, so just to show you guys some proof of concept before we dive more into the video today, Kevin in our private group in the ETU team, he took some afternoon trades and also some morning trades with us, and he only had 1 loss and 2 winners in the afternoon. He made 3.7 later on in the session, and he total, this is the main thing, he total made net 11.7 risk reward today. And a lot of people are saying 100 risk reward, Jay, in a month is impossible. If you can average even half of this, that is 100 risk reward in a single month, right? Half of this. You don't need 11.7 risk reward every single day or 10 risk reward every single day. That would be 200 risk reward a month. Even half of this is enough to generate you 100 risk reward a month. This just shows, my system and the proven results that students are getting with my system and just learning and mastering it, right? And he said, this is a good day for me, since this is not typical risk reward for him yet, but he will get there, right? Once you guys master the system, gain some experience, do some journaling, and a little bit of discipline, you will get to that point, right? It's just a matter of time, essentially, at that point. So that is Kevin, right? And this is also in the free Discord. If you guys just join up in the free Discord, this is another student of mine. This is actually private mentorship student, Tyler, right? So Tyler, he ended up today 7 risk reward, which is still very good, by the way. 7 times 20, it's 140 risk reward a month, right? And he's saying he's trying to reach scale to 1 million by 2026. So that's great to be here. That's about like 6 months, in 6 more months. So he's been scaling very well. He also had an undefeated month last month, which he told us. So that is great, right? Literally, there's people that are begging to make even 11.7 risk reward in a single month, right? There's systems out there that only make 11.7 risk reward in a month, and over here at ETU, we're able to do that within a one day or maybe a week, depending on your skill level, right? And it doesn't take too much skill or experience to trade my system. For the most part, it is very mechanical, and if you add that little tiny discretion, you can also significantly boost that win rate as well. And then here is just proof real quick of just Kevin. He basically passed another topside combine, and he is now 3 express funded accounts on Top Step, right? So far he has 3 total accounts on Top Step. He got funded, and he's working towards those payouts. So that's exactly what I'm waiting for, right? Waiting for these payouts. I know Tyler's gotten a few already, but people are obviously still joining the group. So some people are just brand new or slightly new. So, it will take some time, but once you master it, man, the sky is the limit. In today's trade recap, we will be discussing about data wicks and the size of them and which sizes are the ones we are really looking for and why. So we had a data wick play today at 8:30, right? You guys can see we have Redfield News, and this is CPI. So this is literally perfect A+ in terms of data wicks, because CPI will typically, along with the other news releases I may specify, will typically give us a good solid size data wick to trade off of. Now, first off, before we get into specifics in today's video, I just want to ask you guys, liking the new background. I installed basically some new lights to see if it makes things look a bit more professional and whatnot. So let me know. But aside from that, basically for data wicks, typically we want to see a big candle for a data wicks. So typically my general rule of thumb is the bigger the better in terms of size of the data wicks. So something like this is an A+ data wick. Something that is quite small. So we have a very small data wick or data candle. It's going to be a little bit lower probability. I'm still going to consider, like I said, an A+ setup. It's just know that it's going to be a lower probability, and not just that, but also part of the reason why it will be lower probability is because we are entering on the 1 minute. So unless you're entering on the seconds, finding like an entry model on the seconds, again, remember, time frames are fractals. So whatever time frame you're on, you can just use my same entry model on that time frame. So if we do have, let's say if we do have a small data wick, right? And again, this is not something you can really anticipate fully on the size of the data wick. You just go immediately based off it is what it is, right? Let's say we have a very small relative data wick, and I don't have a specific mechanical size in terms of pips percentages, things of that nature, because each day the volatility of each candle will be different. So I would say for the most part, just look at the size of the candle of data wick and compare it to the size of the other candles that have revolved around that period of time. So maybe let's say within the first hour, or not the first hour, within an hour or so of that data wick, look at the size of the other candles. If the data wick basically looks like the same size of the other candles, then it's not a good data wick in my opinion, and it's a lower probability data wick, because that likely means the size of the candle is relatively small. And again, two reasons why you will have a play be a little bit lower probability is one reason, but the second main reason for why we want to kind of like be cautious really of small data wicks. Again, I will still take these, but if they're too small in terms of if the data wick looks like a normal candle, I'm not gonna really take the data wick typical setups for the most part, right? Unless there's some other confluence aligned. I'm not just gonna take it off it by itself. But if it's bigger than the other candles around it, sure. But obviously, again, like I said, the bigger the better, right? Something like this is amazing. And I'll explain to you guys real quick why. So let's say we have a small range here, and let's say this is a small data wick. The problem here is because we're entering on the 1 minute, each 1 minute candle is like this size, right? And if each 1 minute candle is this size, by the time we get our entry model on the seconds or on the 1 minute, you're likely to have already missed majority of the move of the profit, and you would be managing your trade way too high up. So let's say we sweep the low here and say you're entering along here. Well, at this point, we're already almost towards the target at your entry point, right? Which is not ideally what you want. You want to ideally have a good entry where you can still manage your trade to break even and whatnot if you want to, right? For me, typically, data wicks are A+ setups to me, so I don't really do break-even management for them. But for people that do break-even management, this is for sure something to take into consideration. It'll be harder to manage your trade. Not only that, but also people that want a higher risk reward, it's going to be very difficult to even catch a solid risk reward if you're trading a small data wick like this, because again, like I said, the 1 minute candles are already this size, right? It's going to be very difficult to trade to even the other side of the range of the data wick. Therefore, we want something bigger. Now, if you really do want to trade these small data wicks, again, typically you want to make sure there are at least red folder news, because orange folder will typically create these small data wicks, and I wouldn't consider them data wicks unless they fit my specific criteria, like I outlined to you guys about CPI, I believe PPI, and a few other ones I specifically talked about. Those are the specific ones you want to be looking for, and basically nothing else, right? So basically, if you really do want to catch these smaller data wicks, the only thing you can't do based on my recommendation is go in the seconds. So you ideally would have to just go in the seconds to catch these trades. So you just go, let's say, typically the 15 second and 5 second is what I use most for the seconds. You can also use 30 seconds. But again, depending on the entry model you want to use and the risk reward and such, you have to adapt based on the size of each candle. So switch to whichever time frame looks the most clear essentially, or whichever one you have done enough backtesting and have enough confidence in your data to show that, okay, me using this lower time frame, using this low time frame will give me an edge still in the market. Because the thing is, with lower time frames like seconds, you're going to have a smaller edge for the most part in the market unless you have a very high quality trade with tons of context and confluences, because these are much smaller moves, right? An internal change of character, like I said, on seconds is literally just a 1 minute candle break on the 1 minute. That's literally all it is, right? So not a lot of confluence or confirmation. But again, you just go on the seconds, and on the seconds, these candles will probably, obviously not this fat, but they'll be much smaller. Something like this, right? Let's say this was the 15 seconds here. And then you look for an entry, whether it's an IFG or OB entry model, or impulse if you want to be brave and aggressive. Take that, and then basically you just target the opposing side or whichever other target you feel comfortable trading with. Just don't get too aggressive, because remember, the other side of data wick is also liquidity that will get ran, and if we expect that to get ran and we get confirmation, price will go back on you, right? So again, it's just something to say for those that want to trade these small data wicks. Personally, I don't recommend for it. I recommend you guys just waiting for these bigger data wicks like this, because when we get these big ranges, we can get much more risk reward out of our trade because of the huge imbalance. Even if it doesn't create an imbalance, the huge range essentially to the other opposing side of the data wick, that gives us a ton of confluence, right, towards our trade. Or not confluence, a ton of space for us to manage our trade, right? Because you be essentially entering up here, what's data wick sweeps, and then whatever entry model you want to use there, and then you have this huge risk reward trade here. Now on this day, we didn't have an entry model here, so I cannot take this, but this is 8:30, right? The high of the data wick, and it's swept perfectly to the T we had an instant reaction, which is something that you can also use as confluence in your trades. So whenever you see we have instant reaction with entry model, it will give you a slightly higher win rate, for example, than a trade that stalls for a long time, goes up further and moves very slow and then pushes. That would be a bit lower probability. We want something that's, for the most part, instant, right? Instant reactions are reactions we are looking for when we're trading such models in the market. So something like this, right? There's no entry model here, so we couldn't take the short here today, but I did take the long here for the data wick low, right? Wait for the data wick low. We did mitigate this PY, so this PY adds confluence to this long here. Now, even if you did use this PY and you did not wait for a data wick low to sweep here, there's no entry model here at all on the 1 minute. Now, there might be something in the seconds, but again, for the most part, I don't really go off the seconds for these trades like this, especially when you have a big range, right? Big ranges, you don't want to be using seconds because there's a ton of fake outs. All these candles are much bigger, and so seconds literally stands no chance. There's not going to be much significance in the seconds, even if you get a lot of confirmation on the seconds, like 2 breaks to the upside. It's still not enough confirmation. So I would, like I said, big ranges, you want to avoid seconds at all costs. Just use the 1 minute for the most part. You will still have a very good edge once you understand my system and strategy on the 1 minute. There's no need to overcomplicate it and go on the seconds to me. Especially when we have this big of a data wick, we have a big range. This is exactly what we're looking for. This is an A+ data wick candle, essentially, right? Gives us a lot of wiggle room to the upside and downside. Now, since the data wick high already got taken out, right? There's no need to really target any other wick because, well, it already got taken out, right? So for me, I just did a scalp here. Now, if you were trading higher time frame, you can anticipate this as short. This is a mitigation of a potential higher low to make a higher high, right? That is something you could definitely anticipate, but I just scalped this today because I kind of oversized on this trade because I was chasing it. I didn't have my calculations quick enough or correct enough. And so I kind of had double the risk on this trade. So it netted me about 1.7 risk reward, which times 2, which is about 3.4. So this did net me a good amount of risk reward. So I kind of exited earlier, but if I didn't have my oversize and I was just sizing normally, I would just go for this at least, right? At least here, because we have trendline liquidity above. So at least that PY right there. And you can see it would hit perfectly for a 3.3 risk reward. Now, put this back here. Now, we obviously missed the high, right? And it is what it is. This is its probabilities. In terms of reasons we missed a high, I could not find too many reasons. However, there's this one thing that did mark out. So you guys can see on the very far left, I tell you guys not to really look at the left too much, especially if it's like an old POI, right? Something from this long ago. This is from 96 days ago. So it's not going to have as much influence on the market in a sense. It's more likely to get taken out, but we did take it out right here. As you can see, we swept it. We swept this high here, and because we swept that high, right, that caused this reaction here. So you can use that to try to anticipate us not potentially going higher because we did have a sweep on the very far left. And so we can anticipate a down move, which we did here, but that doesn't mean the down move just ends here, right? It could end here and go higher, or this down move could create a mitigation cycle, which it did here, to just mitigate and not create or break any structure and just go lower like this, right? So these are just probabilities playing out, man. I know some of you guys may have been targeting the high there, but this is probabilities and there's not much else to it. So I'd say if we didn't sweep that high yet, you can probably have there would probably be a higher chance of price taking out that high up there, or at least having a mitigation cycle then going higher. That's what I was basically anticipating later in the day. So again, I did not take shorts here. Shorts played out nicely here. And this pump or dump here actually was like off financial juice. But the point still stands that this was basically a valid trade. It would just be kind of counter trend, or basically just, yeah, it is counter trend to my strategy. But in terms of risk reward, if you think it's worth it, which this clearly is worth it. So if you just outline your risk reward tool ahead of time and you see it's a really good risk reward, you can just risk it and say, okay, I'm willing to take this risk because this is an 8.5 risk reward off this OB entry model guys here, right? And this is not even targeting anything crazy. This is keeping a conservative target at this PY right here. Almost 9 risk reward. You get it instantly. Now, can you anticipate this big of a move? Potentially. Why? Because of new information given to us in the market, right? We take old information as context and confluences, but we also will take in at times new information like this on how price is delivering, because that's new information. This is a 48-minute consolidation here. And this is something I wanted to bring up in other videos, but I don't have enough backtesting data to back this up yet statistically. But this is something you guys can journal if you want and let me know what your results are. But basically, I've been looking and keeping track kind of trades on seeing how often we get a break of structure in terms of liquidity whenever we consolidate. So for example, the theory or basis of this thesis is that whenever we consolidate, you can expect the other side of the range to get swept or taken out instead of holding. So again, we had major consolidation here, or accumulation, whatever you want to call it. Therefore, you can anticipate this low to get taken out. And that's exactly what happened here, but we do have to backtest this at least on a lot more sample size, right? One trade can just be pure randomness, or it will be pure randomness. Now, if you're talking about entry models, we did have, I believe, an entry here. So we did have an OB entry model here that you probably would have got stopped out, right? And after you get the second one, you can just consider this basically an internal liquidity sweep if you're still looking for shorts, right? And then no confirmation after that, you still wait, and you take this short here. So that would have been your trade right there for a risk reward shorting. And if you're incorporating the consolidation theory, which is what I'm going to call it basically, what that means is, again, like I said, when we consolidate in the opposing side of the range, we can expect the other side of the range to likely, more often than not, get taken out as liquidity instead of holding. So you can avoid, for example, maybe a loss here, or maybe like a loss down here. I personally would probably not take a long here, just because at this point, if you're gonna wait for an OB entry model, at least we already kind of mitigated the origin of the previous leg structure. And so you would ideally want to wait for more confirmation before taking a risky trade like that. In terms of maybe like another entry model. So you have your OB entry model, and then maybe you wait for another entry model on the women to confirm, and then you take the trade, which did not occur here. So there will be no confirmation here if you want to use double confirmation anyway to take that trade. So yeah, that's basically the consolidation theory or accumulation theory, whatever you want to call it, that I'm still currently collecting data on. You guys feel free to as well, but that's something to just, be aware and take note of whenever you're trading right now. Like for example, we didn't have consolidation here, thus less likely to take out the high. That's just an example, right? Probably find more examples here. We didn't really consolidate too much here. This isn't really consolidation here, right? Consolidation is when we have like a pure box like this, right? Where price is not really moving around. We're still breaking the structure and having better ranges here. So I wouldn't really consider that consolidation. You could argue this is not consolidation either here, right? But we did take out the low. So it's not always going to happen. It's just the theory or thesis is it's a higher probability. Now, the only other trade I took today was, well, it was just this trade, right? This trade I marked on my chart because I said I'm not interested in longs, but if you want to take a long, this is a potential long. And whatever your targets is whatever your targets are. This would be your very aggressive target or aggressive TP. Actually, no, at this point, this would be your aggressive TP. This, anything past this high would be considered very aggressive, like towards this PY, because we have a new range, AKA, you guys know, new value, right? This is a new structural point in the market. So hopefully that makes sense, right? So some people that took the longs as a loss here, that's okay. I would say that is still within valid, in terms of valid loss, that is a valid loss within the system. That's something you just have to accept. You won't always be perfect, because in this case, you can expect this should be a mitigation cycle to go higher. Now here for this trade here, this was the entry model off the IFG, and the TPs, you could have just kept it here for 3.6, which is, by the way, really good risk reward anyway. And then your stop loss, depending on where you want to put your stop loss. We never came back to the original OB, but we did come back later to this OB right here. So if you want to take that OB entry model there, it hits you to the wick right there. It gives some wiggle room for stop loss, and that would have been a perfect 4.3 risk to reward trade here, folks. After sweeping out, what do we sweep out, guys? New York kill zone session low, right? But I did write as a comment that I'm not a fan of this since we did fail the mitigation cycle. So this is a clue in the market that's telling me new information. This is a clue in the market telling me, okay, we might not be actually be going higher now at this point. We might actually go lower before we see higher prices, because the higher time frame is bullish, but we can expect a lower time frame reversal back down and then go higher later on. So again, we won't be able to time the market perfectly, but we will take context clues. And this is a context clue that I was looking at. We failed the mitigation to hold this PY, which should theoretically hold for the most part. Can we sweep this low and still take out all these highs? Yes. But what's the probability? It's going to be lower. So hence why I didn't take this long, but you could have taken it after we swept for scalps, or even just a normal setup up to this PY here, or even this PY right above if it looks unmitigated. And then we later tapped into, I think it was just this PY here that's unmitigated. I can't really tell. This is not quite clear. If you go on NQ, you probably see something better and more clear. But for the most part, I was on ES today. So this is, again, the trades today. If you took a short, if you were basically trading both longs and shorts today, you would have banked. You would absolutely bank, because there are entries you can take internal continuations here. I personally don't like to trade those often, but there is a good one right here, or good ones right here. And then if I know some of you guys in the Discord, you actually guys caught this move here, which is very nice. You guys took a stop runner setup right here, fractally, and you took this to the low, which is awesome and perfect, right? That's a really good setup. So that's basically going to just go over today. There's not much else in terms of price action I can really cover today, because my daily bias was also bullish, right? So there's not much else to me today. But like I said, if you were both long and shorting today, you would have banked absolutely. There is probably, let's see it based on the entry models I teach you guys. There's 3 risk reward there. There's 8 there. You take 1 loss here. You miss this setup. We don't count that. So 3 minus 1, 2 plus 8. So that's 10. And if you took another continuation short down here, at least here, that is probably like 6 or 5. So we say 5 to give the benefit of doubt. That's 15 risk reward. You probably, if you just avoid this loss, or let's say you take this loss, minus 1 is 14. This is another 4.3. That's 18 risk reward. And then if you take 1 loss here, and then you take this massive winning trade here, that is probably like 23 risk reward. Guys, this is literally 23 risk reward, and this is within what, about 5 hours. So yes, it may sound like a lot of time, but understanding 23 risk reward is equivalent to risking 1% per trade and making 23% return on your entire account in literally a single day, a single trading session, not even multiple trading sessions. This is within a single day, 5 hours of your time, and you will clock out before someone clocks out of their 9 to 5 job, right, and make way more, substantially more. And of course, there's other setups I do see right now, literally later on in the session, but we do get some a little bit more choppy price action later on. So again, basically that's going to be sum up today's video. Hope you guys did enjoy this trade recap and learn a lot, and I shall see you guys at least in a free Discord if you're not in there yet. If you do want to be a member of the ETU team, look at my trade ideas I send in the group daily, as well as get access to also the 100 risk reward course to learn my entire strategy system. Check out the link down below on my website, and as well as on the WAP. You can get access to the course and also the private one-on-one mentorship. Only 1 spot left for that currently, and once that spot's gone, it's gone. Today I'm going to be going over with you guys how I was able to catch 6 risk reward with 2 winners and 1 break even trade on a day, and we had many more actually A+ setups later on in the day with internal swing continuations that I was unfortunately not able to catch because I just ended my session here off this break even. And again, I'll show you guys screenshots of everything as well as me sending the trade idea out to the Discord as well along with my draw and liquidity. So here's a screenshot of earlier in the day where I was telling everyone there's a V-shaped delivery here, and all the members, if you've taken the course or mentorship, you know exactly what I'm talking about whenever I say that there's a V-shaped delivery. Those are high probability conditions where we're looking for a setup in the opposing direction, and I send out the trade here, and as you can see we hit TP for 4 risk reward here. Said I kept a conservative TP personally just because this is indeed counter trend externally, but we did have trendline liquidity below, so you can definitely target that for this first short here. And of course, I sent out all the specific confluences later that I'm not going to show in today's video, but join the group and you'll see all those specific confluences. There were several confluences for this trade, but I'll go over a few of them for today's video. So one of the confluences is, first off, we took out 80 session high, so session liquidity. Second confluence is we took out 80 session high, mitigated this gap here and tapped into a POI, right? So we had those confluences along with a very clear draw on liquidity, which is trendline liquidity. But like I said, since we were counter, I wasn't as confident in targeting that as my TP. And you know, this was a few minutes after open, so to me it met my rules in terms of trading during open. And yeah, so to this trade off the OB entry model, we had IFGs. I explained in the course in depth in the mentorship why I don't take this IFG entry here and wait for the OB entry here. And that was a 4 risk reward trade going short. Now, look, we play ping pong and we ping pong the markets. That's what we do for the most part, and we trade basically towards our draw and liquidity using ping pong. So once we sweep this liquidity here, trend liquidity swept, this low got swept, we tapped into POI. This is an A+ setup here because this is pro trend. Now I decided to take a more aggressive trade here in terms of a stop loss placement. So instead of being this low for 1-to-1, I took a 1-to-2 here. Very aggressive stop loss. We'll be covering the sell to buy here. But I decided to just keep it aggressive and not very aggressive just because of the fact that, you know, there's still an unmitigated, this is not the extreme OB here, right? So entered off this OB, TP'd at the flip here. My system tells me to go for the high, but here's the thing, right? Here's the thing. Because of how I enter this trade and where my stop loss is placed, it's not ideal to be having higher time frame or further targets. And if you guys know, right? So I also broke even at the 50% towards my trade. That's one of my break-even systems, and so that saved me here. In this case, it didn't really matter actually, but you know, hit my TP for 2 risk reward. Very small trade, basically a scalp, you can call it. Then we had a mitigation of the origin here. Now, if you go on NQ, okay, NQ here had an internal SMT. I explained this actually on live stream today. If you guys checked the YouTube, I did a live stream. It was about an hour and a half of a live stream going through questions, going through these trades, going through setups I saw, and reviewing some members' trades. Giving you guys feedback, proper feedback. We had an SMT internally with NQ, hence why we had this downside move. I took a stop hunter setup here because this is a weak high, like I said. And unfortunately, I broke even when we got very close to the TP. Guess what? Even though price got very close to my TP, I don't change my system. I don't deviate away from my strategy, and it hit my break even. A majority of times, I would leave this since it's an A+ stop under setup, but because of that internal SMT, that gave me a little bit less confidence here. So hence why I broke even early here, and it is what it is because guess what? My stop loss here held, and we later hit basically for 2.7 risk reward. Some people held the trade, some people scalped it. It really depends on how you want to P&L manage here. The typical standard TP would be that internal high there for 2.27 risk reward. So if you use that, perfect. You hit a full on TP within like 20 minutes or less, which is ideal. Typically ideal, you don't want to be holding trades for like 2 hours. But you know, this one unfortunately went back to my break even right, and as soon as it did, it ripped to my TP. And that's okay, guys. That's okay. I'm okay with taking that, knowing that basically what I did. Now, of course, you had some continuations off of flip here, right? You had an entry model here, and then you also had a POC entry model here. Like there's 2 A+ setups you could have taken for continuations, and this third setup that I called on live stream when I was live streaming on YouTube. I was literally talking about this setup when I was on live. and how this was a valid stop under setup. And you can see it went straight up. And if you go back a bit, we took out previous day high here. So I was saying it's lower probability to take continuations once you do take out previous day high, but that was also my draw on liquidity. So if I show you guys this here, and the reason why I'm making this trade recap very short is I do want to make these future trade recaps a lot shorter, because I don't think they should need that much time to go over the reasoning for every trade and such. It's pretty straightforward. My system's, I'd say, it's pretty mechanical, honestly. Like, as long as you follow a checklist, you'll be good in terms of profitability. As long as you follow it to a T and be disciplined, you'll be profitable. And so here, one of my members did take a long here off NQ, which had a better risk reward than my long, but it was the same trade idea, same time. And I just gave him some feedback on that. I said right here, if you guys zoom in here, look at the time, 10:40 a.m. EST. Previous day high is my high time frame draw liquidity on ES. We only have one unmitigated 1 minute PY holding us from that on the far left. And it did help hold for a bit, but we still took out previous day high in ES, right? And like I said, I at least sent the screenshot of the setup here, stop under setup that I'm currently in. And I said, if we do get a mitigation cycle, there's really no really good PY. So me personally, I'm thinking this has a very high probability hitting because of that reason. So I'm gonna close that out and delete that from the chart now. I went back in time on replay mode to show you guys how my indicator is marking the previous day high here, which is right here. So this was the previous day high, and that was the draw on liquidity. It was very straightforward as our draw on liquidity. You can keep this very mechanical as draw on liquidity, because this is what I was seeing on the higher time frame. We took out lows in a bullish market. Second of all, we had a swing change of character, internal change of character on the 1 hour, but this is a change of character externally on a lower time frame. We tapped into a 1 hour demand and we held this. And where do we go next? To the next high. So very clear, just trend following system, man. It's nothing too complex, nothing too crazy. Once you learn it, you cannot unsee it. That's why I tell everyone about my system. So I personally think it's the best system in the world, that's known on the internet at least, or maybe not fully known on the internet, because I'm still a pretty small YouTube channel, but hoping to grow my channel and you guys can grow it along with me. So again, here's my setups here. I'm gonna send one more screenshot from the Discord, because I believe one of our members did take this. So here's a screenshot from our free Discord actually. And I was also giving you the free traders or free members. So this is why you should join the free Discord. There's no cost to you at all to just join for free. Check out what information I got, because I do send trade ideas once in a while to the free Discord to help you guys make some money at least. But I want and highly recommend you guys to take the course in mentorship so you can actually be independent, because there's no guarantee I'm gonna be on internet for long, right? I'm only here to give my advice, knowledge to people that really are invested in learning, and leave. So I gave my advice here, my draw on liquidity, great volatility. And Tyler here, one of my private mentorship students, he's been in the mentorship. He got it about a year ago, I believe. And he said, thanks, Jay. I scalped the setup for TP, so it did not hit me out break even, green for a day. And he said, thank you for trade ideas. Helps him create some confidence when it aligns with his trades. Because here's the thing. The reason why I don't do live signals in a sense of what people do, which is copy signals. First of all, I think that's a bad idea, because that builds reliance on someone else for your income. And if you're serious about trading full time and not just gambling, you have to be self-independent. Otherwise, like, who says or who knows I'm gonna be here for the next 20 years or 10 years? There's so much more life to live. You have to be self-independent and know all this knowledge. Hence why it's crucial to be learning it yourself and taking these trades also yourself. Use me as a confluence, but don't use me as a signal bot, right? That's going to create too much dependence on me. And once I leave, you're done. You're done for. You have no income. So hopefully that makes sense on how you should be viewing trades, my trade ideas, and things of that nature. Now, Tyler said he scalped this, so I assume that means he either TP'd for 1 risk reward, or he just TP'd for 2 risk reward at that internal high there. So great trade there nonetheless. I just got a little bit greedy on my end, but again, this is still within my system parameters and boundaries, and you know, it is what it is, man. It's just probabilities. Price didn't deliver the way I wanted it to, and I managed my risk properly and came out with 6 risk reward, 2 winners, one break even, ending the day with off 100% win rate. And again, I gone through a huge Q&A also. If you're on my YouTube channel, I highly recommend you guys go check out the live stream if you weren't available. I'm gonna try to do this live streams maybe like once a month, check in with everyone that's also not in the group or in the paid group and see how everyone's trading. You know, I want you guys all to be successful and be very independent and full-time traders just like me. That's the ultimate goal of this channel. No flashing anything, nothing fancy, no luxury, none of that. We're here to just deliver you guys pure educational content that I truly believe no one else truly provides on YouTube for free like this. So hope you guys did enjoy this trade recap. I'm thinking if there's anything else I need to cover in today's video. I think that should be it. Yeah, if you guys have any suggestions on like what I can do for live streams, any cool creative ideas, let me know. I don't want to make this an entertainment channel in a sense. This should be more focused on education, but if making entertaining videos will help bring in people to learn the right information and education, that's something I'm willing to do. So just let me know again if you guys have any ideas for me for future videos, and I'll see you guys in the next one. Peace. Today I'm going to go over a red day, which is actually my second red day this entire month trading in May during this choppy price action. And if you need price trip, and I'll see you guys. We did have like news from Financial Juice. No. Hey, how's it going, everyone? I hope you guys have all had a very profitable month. If not, definitely check your journals, review your trades, and see what you could have done better to improve your situation in terms of, you know, trading through bad price action. Because again, like I said, this month was not the best price action for sure. Very low volatility, a lot of choppy days, but still came out green. I made about over 100 risk reward this month like usual, and I have 2 members in actually the Discord group. MJL, which he joined us like last month. He said he's literally green every single day this month, which is crazy because I'm not gonna lie, it's really rare for me to even get entire month of just straight green days without not a single red day. So I mean, the fact that you're coming out green every day this month is amazing work. And it doesn't mean you're trading every single day also, right? I don't know how many days these guys are trading. They're in the group, of course. MJL is in the course, just the 100 risk reward course, and Tyler is a private mentorship one-on-one student that's been with me for about a year now. He's been in the group for quite some time for sure. He's definitely had a lot of experience under his belt. But great to hear that Tyler, you know, he said, he took this last trade idea I sent. He said he's locked out all of his accounts, I assume funded accounts, and he said that this is his first ever undefeated month. Now, even like I said, it's very rare for me to have undefeated month. I don't know if he took a trade every single day, but if he did, that's like excellent work, right? And same with MJL, he's also green every single day this month, every day. Awesome work, people. Thank you all for your help. Loving it. And he said he's specifically up. So you traded about 3 weeks, so maybe he might have not traded for a few days, I assume. But even then, that's still really good. The fact you have 100% green days in a single month, nonetheless, means you're able to recognize when to not trade. So there's late days in a month where if you see bad price action, you should not be even taking a trade. Maybe just step away for the entire day, come back tomorrow. There's always tomorrow. If you blow your account in one single day, like a funded account, obviously not a personal, but if you blow a funded account one day, that is completely on you. That's on your fault because you know the market conditions are not in your favor, or you're just tilting, then that's completely also on you as well. Either way, the market is never wrong. You're the one in the wrong if you are ending red. And of course, you can't just always say you're in the wrong. As long as you're executing your system and you know your system is considered profitable over the long run, that's a green day to me. Following your system is considered a green day. That's how you should be viewing your trading. If you're viewing your trading just based on everyday P&L, that is not a good way to basically follow the process, right? But MJL said he's up 115 risk reward, which is amazing in just 3 weeks of trading. So proportionally, that might be even slightly more than me, proportionally. If I have to do math here, probably like 150 risk reward for 4 weeks of trading. And he's only been in the group for a month. So, I mean, it's kind of crazy to hear him say that. I'm not going to lie. He's only been in the group for literally a month and he's already getting crazy results. Tyler, he's been in it for like a year. So this wasn't too surprising to me that he had an undefeated month. But you did say, again, this was his first ever. So that's really good to hear, man. And people are saying, no, red days, but I'm here happy today. Anyway, that's just something I just wanted to share from Discord to help you guys, give you guys some inspiration and motivation to keep going, man. Even when times are rough, you really just need to be putting in smart work, man. It is hard work, but at the same time, you can't be staring at the chart 14 hours a day, grinding through this. You need to be putting in smart quality screen time, not quantity in terms of screen time, to an extent, of course, right? But today's video, I'm giving you guys a trade recap for free here, basically going over some trades. Here is an execution proof. I posted this all the time in a free Discord. If you're not in there, definitely join that. This is the execution proof right here for this short here. Since I know some people may not believe, I held through all this unrealized P&L drawdown here. So you can see how price almost came back to where you would break even. My stop loss, I basically kept it right here the whole time. I didn't really move to break even, I believe, on this trade just because of how structure was developing. I saw this as trend line liquidity that got ran, and we continued lower. So I was going to be fine holding this trade with a tiny stop loss right above here in managing this trade and ultimately hit TP. So for those that don't believe me, here is executions literally of that short right here. This was about a 4 risk reward trade, but in terms of P&L, this was about a 5 point something risk reward because I did scale in. Look at the entries, guys. Check the time. Do whatever you want to verify these results, but I'm just showing you guys the proof of me taking these across all my funded accounts. And so you can see I took my initial entry at the IFG entry, and then I scaled in here another 10. So I had 10 contracts here, and I scaled in another 10 contracts here, basically at the OB. When we came back to retrace to the OB, because we had that internal change of character here at that point. And I was confident in this trade because we have trend line liquidity right there nearby. We can at least run that. And once we do run that, I could P&L manage if I wanted to, depending on how price delivers, because that's very important. But to me, you can keep it very straightforward, very simple, very mechanical, and just leave your stop loss where it is originally if you wanted to for this trade. I just kept it right above this high here. Why? Well, because I teach you guys how to scale in, and whenever you scale in your position, you don't want to risk -2 risk reward if you lose, right? That's just doubling your risk, and at that point, that's the same thing as doubling your risk every single trade. You might as well just do that instead of scaling in. And so what I tell you guys, this is the scale in method I teach you guys in the course, and that's where you be placing your stop loss, so you still take only a -1 risk reward loss. So if you are wrong, so here's my TP exactly right there, as you can see, and there's my stop loss entry, and you can see later here is a screenshot of me basically exiting the trade right here. So I exited 20 contracts at that low as soon as we TP'd. So there's proof there of executions. And now I'm going to go over the trades that were here earlier. Now for this day here, we had news. And you guys know data wicks are 80% win rate setups that I teach. They're very high probability if you're trading them in the right context. This first one was not entirely a super high probability, but you can still consider this A+. It's just that this one was even more A+, and I'll explain the exact reason specifically mechanically why. We had 830 red folder news. You typically want at least a decently sized data wick. This one is all right. We prefer you want something that's like massive like this, for example. This obviously is not a data wick because I don't think this was a news release here. It's a weird time if it was. Usually news release is 10 a.m. or 8:30 a.m. The 10 a.m. one did not do too much if I remember correctly. Okay, I actually did. It was here, but we don't really have big wicks on either side. But you know, we did have a slight push here, but that is orange folder news, and you guys know red folder news has bigger impact on the market than orange folder news. So here, we just took my data wick setup here, very straightforward. I just took a loss here. This is on the 1 minute. And if I'm checking this chart, I believe I took this on a 30-second. I'll have to check real quick. Because when I sent the screenshots, we did have an OB entry model here. So you guys might have to go back in time and check this, but essentially took an entry here, and we later hit stop loss. Okay, so we later hit stop loss here, and I think it's because market closed. Oh, might have been something to do with market close. Not sure, but anyway, we took a loss here, -1 risk reward. You could have for sure break even here at this internal. In this case, this is internal break of structure. It could be internal chain character, but we didn't make a new high here, so you could have broke even here for sure. I didn't because I follow a mechanical system where I only break even for setups that are not A+. A+ setups, I want to let it run. So this one's a -1 risk reward. No trade here. So if you were just spamming entries, you would take losses here, at least here, and you probably take this win. But point is, I'm not taking these because they're not within my setup. We never mitigated the 1 hour POI right here. Hence, I'm not going to be taking a trade because it doesn't meet my criteria in my backtesting data. So here is the 1 hour POI right here. As you can see, I marked it right there. That's the 1 hour. We never mitigated the 1 hour. and my refinement for the 1 hour PY is right here, because that 1 hour is slightly big. So you want something a little bit smaller, refine it to the 1 minute there. I didn't really see anything else. This was in line with a POC here as well, if you want to mark that. But like I said, POCs is just another way for us to factually see PYs on different time frames, and you can see it worked out perfectly here. So we took a -1 here, and then we have the bottom of the data week that got swept. And why is this one a higher probability? Well, first off, this one has a PY connected to it. So you see how we have just an origin here. So we have a PY tap plus a sweep of the data wick. On this setup here, we don't have a single PY that got mitigated. If we had a PY here, yes, it would be the same quality setup, but no, we didn't have a PY mitigation here. We just had a huge imbalance actually. So draw liquidity is actually higher here in this case. So this is a lower probability data wick setup. And this is not hindsight at all. You really see there's no PY here that's unmitigated. This one has an unmitigated PY. We tapped it and we swept the data wick, and we had an entry here. I just took a fractal stop under setup here because I don't want to miss A+ setups. I missed the original setup entry, which is here. The original setup entry would have been here off the impulse model, because you can see not A+ impulse model, but we do have an impulse move here off this fractal structure here, internal structure here, right before we deliver it to the PY. Thus, that is still will be considered a valid impulse model if you want to take that. And we also swept, this low here, but that wasn't something I really was looking at. The main thing I was literally looking at here was we took out the data wick and we mitigated PY. So entered here on the stop under setup. My stop loss, you could have placed it here, honestly, for stop under, but to be fair, I wanted to be more safe, so I played it safe this time. I had 3 risk reward here. I mean, it's okay. You don't have to cash those 7 risk reward every time when you're trading. And I TP'd basically at the 1 hour origin here. Now, once we came up to the 1 hour, right, you can see we started chopping up in price action. Chopping out fractally. Fractally, we have a lot of internal structure chopping. You want to kind of, when you see this, it means there's a big move that's going to occur in the market. Especially all this just is more manipulation, giving people more chances, big institutions, to enter their shorts or longs, right? This could for sure shoot up. We don't know exactly which direction 100% the big move will be in, but if we are on a higher time frame, man, we are bearish. So if I can close this out here, we are bearish. You can see, and why is my drawn liquidity lower? Well, look, we have these 2 lows here, right, to sweep. First of all, we took out this low here. If we were bullish, we should be making, since we swept this low here, based on my structure system, mechanically, we should be at least doing a mitigation phase up here. At least do this flip, or at least taking out inducement of some sort. But we know we just failed to continue higher, and we actually made a lower low. And because we made that lower low and failed to go higher, it gives me clues and signs that we probably will go lower prior to us going even higher later, because the daily is bullish, right? You need to put these time frames fractally in perspective. The daily is bullish, but it doesn't mean we can't have 1 hour pullbacks to the downside. So for example, if the daily was like this, that's external structure. This is internal structure. Like, can I color it? This would be internal. This would be external. So like, for example, this here can literally be structure on the 1 hour. And all we're doing here is just trading this 1 hour bearish continuation back to some sort of high time frame, one daily demand or liquidity. And you won't always get these setups like this, but when you do notice it, it gives you higher quality chances of anticipating where price is going, because without price anticipation and drawing liquidity, it's going to be a lot harder to have a high win rate. And the reason why is because if you're just spamming entry models, like, think about it, you can just code that into a robot to trade for you. There's no point in manual trading if you're just going to spam entry models everywhere, right? Even at PYs, even if you price mitigate PY and you are entering off entry model, you can code that almost to an indicator, or not an indicator, a robot that trades for you. So there's literally no point in manual trading at that point. And hence why manual trading, we want to include anticipation, because that will give us an edge over the market, which is a higher win rate. And so here we were chopping up here, so I was not confident in taking this IFEG. Yes, I still take these IFGs even if they are smaller, but we were chopping up here, man. This is not clear price action. We want to see something more clear, so I waited a bit more, and we got another IFG set up with an OB entry model. So this here would be considered your internal sweep because we're within the same PY basically, and we just had a slight little 1 minute manipulation before. And so you can see we had IFG. This one is going to be a higher probability IFG just because it's a bigger IFG, but most importantly, momentum. You see how we had momentum pushing into the PY. If you go to the seconds, this is essentially the same thing as an impulse model on the seconds. If you want to think about it like that, you don't need to see this on the seconds to know it's basically an impulse model on the seconds. You can literally tell based on how the what's it called, the 1 minute looks. Like the candle, like this is a massive bullish candle out of nowhere, not delivery where we're chopping up like this. We just have a massive push up, and then guess what, we had momentum, very good momentum pushing the other way, giving us higher confidence this is going to be a valid internal sweep setup here. And so I took that here, and of course, like I said, showed in a screenshot, scaled in right here. Look at the screenshot if you want. Again, I'll show you guys real quick. Check the screenshots. I literally have these in the Discord for you guys to see. For to see my entries, exits. I scaled in on the OB entry model, kept my stop loss there the whole time, and we basically eventually hit my TP, which is here. Now, ideally, my TP would be down here, here. Now, the reason why I wasn't TPing down there was because one thing, we did sweep previous day low here, and you guys know higher time frame PYs, even if it's counter trend or even if it's like pro trend, it still can make a higher chance of us having a bigger move, meaning there's potential for us to sweep all these highs before making this continuation. So for me, after seeing like all this price action here, and also this is outside the kill zone, we're gonna have lower volatility at some point. In this case, we didn't, but it's not always guaranteed. And we basically hit, TP for 4 risk reward here, and P&L wise, it was about like a 5.2, I think, or something like that. You guys can check the P&L if you want. But yeah, I was just marking out my structure here while I was in a trade. You guys can too, or just do this for your journaling purposes. Mark out your structure and see what's going on here, right? We had a stop under setup here. That's what happened. We made equal lows here. I don't trade equal lows. We just took out this low, or had the same equal price. We had another stop under setup here that you could take advantage of to continue lower. You know what a retail, or not retail, I don't like saying that word since we're all retail traders technically. You know what a new trader would do? What they would do is they would get out of this position here at break even, which is fine. Okay, break even is fine. Maybe they might manually exit before their system even tells them to exit. So if your system is to break even, you should be holding your break even here and not just manually exiting for a tiny profit here. You gotta follow your system and probabilities. And to me, I've seen this happen. That's why, from my experience, I was able to hold this. I've seen this happen. And this looks like manipulation to me, okay? Because my draw was lower. And obviously, I was anticipating for sure this is not gonna hold. This PY here is literally basically in premium. If you mark the PY from the top, sure, we did hit 50%, but you guys know I don't like that exact 50% level. I prefer a PY that is slightly deeper, unless we have a ton of liquidity sweeps. Else, I don't like something like this, right? You can see the top of the PY is above the in premium, so not a big fan. I'd rather want something that's like down here, like here, for example. This is a much better PY to take an entry off of. And if you did take this one, it's all good. One of our members took this, and you would just be break even here essentially. Or if you scalped it, this would literally be a TP. So, it all depends on your targets and how you're trading the system, and completely up to you what your system is from your back testing. But to me, my system tells me to hold this, and so I held it, and it eventually paid out here, and I've hit TP. So what I was saying was a new trader with no experience would actually close out their short, and guess what? FOMO into a long like this, and they take a meanest stop loss, which in hindsight, this looks goofy, right? But like in live markets, people generally do that. I'd rather you close the low in profit here, for example, and not enter this FOMO trade long. I'd rather you do that. I would not rather, if you're just gonna FOMO long here, this is completely wrong way of trading. Completely wrong way of trading. And so we eventually went down lower, had basically inducement here because this here is a tiny pullback. It meets my inducement criteria, and we just have a big gap here that unfortunately we never hit the POC. I was hoping for price at least to come to the POC. We never did, unfortunately. And you can check NQ if we did have a SMT in terms of NQ mitigating the POC and ES did not. That might have happened. I did not check that. But if you took an entry here, I mean, depending on how you trade, if you scalp this, it's just a 2R trade. Otherwise, you break even or you hit stop loss if you think there's an A+ setup. And eventually we dumped. And we did have like news from Financial Juice here, but that didn't really cause a dump. The dump kind of started here already before that news came out on Financial Juice. So it wasn't anything important. The main thing is you can see how we accumulated here for such a long time. And like I tell you guys all the time, when we have price chopping around, consolidating, we're going to expect a very big move at some point. We just don't know exactly when. So that's one problem. And then the second problem is direction. If your draw liquidity is good, you will be able to cash huge moves like this as long as you hold your trade. And then obviously just not like break your rules and such of just trailing stop loss and such. If you are wrong, you just be wrong, you just take a -4, all good. But me personally, obviously it's worth the risk. Again, like I said, the only reason why I didn't hold was I was in this trade for already an hour. Most of my trades hit TP within 30 minutes or less based on my data. So for me, it's a pretty long trade. I just don't want to be holding this for that long. And another thing is we took out previous day low. So this could, if this held here and we actually continue to off here as a continuation higher, I would just basically lose out on my 5 sword, which is a lot for one trade. And I scaled in on this trade too. So definitely don't want to be losing those profits. So I just locked in 5 sword. And at that point, I was done, man. There's no other really setup here. Honestly, here, obviously, if you could take a long here off these 2 sweeps on the left side on the higher time frame, if you took those, but I was done trading here. And this basically ended my trading session. 5 sword plus 3, 8, and -1 is 7 sword. So I hope you guys do enjoy this little trade recap. Again, ending the month over 100 sword for me personally, and a few other members are literally undefeated for this month. So great to see a lot of people progressing. You have to put in the effort, man, because I can see everyone's progress within the course modules on WAP, and it's pretty clear majority of times to me, like when I see someone's progress, and it's pretty correlated to how much of the course they've watched. Of course, notes matter too, but how much of the course they watched, as well as their own discipline, which is a huge factor as well, for sure. You gotta stick to the system, and also, you know, their P&L, right? People that tend to be very lazy, slack off, that only watch 10% of the course, and just go straight to live trading without anything else, no back testing, nothing. There's a lot higher failure rate, obviously, because you didn't learn anything yet, right? You don't even have all the small little details I mentioned that you're not paying attention to, or you don't even know about. So it's definitely very important. I'd recommend to watch, try to, if you can, watch the entire course. And hopefully that will definitely help out a lot of people, you know, in terms of basically just developing that knowledge for trading and future success. And sorry, something was bugging on my trading view. For some reason, the window wasn't fully maximized. I don't know why, but that shouldn't be an issue here. Anyway, that's it for me doing this trade little recap with these executions proof. And I hope to see you guys in a free Discord if you're watching this on YouTube. It's been fine through this whole trade, but I basically break even around here once we had this internal break, and it came back and hit me out break even. And you may ask why I didn't keep the trade open this time. It's because I know that this high can still be weak as liquidity, and also the main thing is my stop loss. I didn't place my stop loss at the standard conservative stop loss. This is an aggressive stop loss choice. And when you have an aggressive stop loss, you tend to need to manage your trades more aggressively, because price can come back, take out your entry, and still be valid, because once we maintain this high here, shorts are still valid. So if you take this loss here, I don't want to ever see you guys go long here immediately, because majority of times, I'm gonna tell you right now, you're gonna get stopped out too many times and you get confused, and it's a whole mess, because that's what I used to do until I figured this out with liquidity and understand internal liquidity, how it works as well. This is internal liquidity here. We had a stop under setup here, basically anticipating price to continue lower. I literally entered as soon as we had that set up with my stop loss where where I originally should have had it if I had a normal conservative stop loss. And we had a 6.6 risk reward here. So this trade, think about it, guys. This is why I like trading a high risk reward system. And it doesn't have to be anything crazy high risk reward, right? My average risk reward usually is 3.6. That's my average based on my data, 3.3 to 3.6. And when we win, it's around 60 to 65%, depending on the setups I'll be taking. But on average, it averages out to those stats, which is still a very good EV. That's about a 1.8, I believe. You guys can check my website to verify that if you want. But point is, this one winner, all I had to do is be a patient for an hour, wait for my setup, manage my trades properly, and look, this one winner makes up literally these two losses plus this first loss here, and I'm up literally basically 4R for the day just off this one trade. And this one trade took 20 minutes, guys. A 20-minute trade got me up from down 2 risk reward basically to up 4, which is a huge difference. Now, I didn't take this trade here, obviously, because I was already in this trade here shorting. I just sent it to this group as an example of another stop under setup. You could have taken perfectly down here. Again, why is price, a lot of people that are new to trading, they gonna think too long here, when I should tell you no, there's no PY here to long off of. You might be using this, maybe this might have been unmitigated here, but with context, we already failed to hold this 1 hour twice. What makes you think we're gonna hold it all the way down here after this momentum here? And this momentum isn't really the main issue. The main issue is that we already failed twice. And all this just looks like accumulation to me to essentially go for a big move, which is literally what we had. And we just went straight for a pre-stay low. I mean, man, we just dumped like crazy. I missed that one, literally half the move. But it is what it is, man. We're just trading probabilities. This definitely could have just mitigated the origin and had high time for reversal to the upside. We don't know that, right? So a lot of new traders that don't understand, that didn't learn properly on how the market truly moves, which is off, by the way, aka liquidity, and understanding which liquidity points to market is also very important. They're gonna think of this as an internal trading character, and they're gonna be longing this, which is not what you do. You don't long against your drawn liquidity. You trade towards your drawn liquidity. So anything that is against your drawn liquidity is liquidity sweeps, whether that's internal or external. So this would have been a nice stop under setup if you miss this original trade, which is completely all good. Just be patient. You will get this setup for the most part, and that's a 9 risk reward. We held towards pre-stay low. We dumped, and look, we had an instant reaction. So whenever you sweep liquidity, you guys know, an instant reaction is what we want if we're looking for reversals. Literally no entry here, man. We had an impulse model delivery here. So you could have taken an impulse model if you wanted to here. I missed it, and I was waiting for an OB entry model. I sent this to the group, and it never happened. And I tell you guys, man, when you sweep high time from liquidity, or any times of liquidity in general, or internal liquidity sweeps, it's a lot lower chance of us to come back to the OB. And if we do come back for OB entry model, there's a little bit lower chance that the OB entry model actually holds, because typically we would just go, we should have momentum after sweeping liquidity. So here, this is very obvious inducement. If you don't recognize this as inducement, you have to go watch my inducement videos in the Advanced 100 risk reward course, because this is very clearly inducement. And there's specific rules that I made mechanically, and I even made a new video defining how you can define mechanically what's inducement. So watch that video. I'm not going to go too in depth into explain this here, because this video would be too long. Not too long, it's just I don't want to give too much away here. I don't know where I'm going to be posting this yet, but we took out inducement here. Whether or not this made equal highs or not entirely sure. But my point is, I was still looking for price to hit a PY. We had a PY right here. We could refine it to this, buy to sell, or you just use this as the origin. And that was my trade. I think I showed you guys the screenshot, right? Did I show you guys a screenshot? Yeah, I showed you guys a screenshot earlier. If you go watch the earlier parts of the video, this was the trade here with execution proof, right? I took this trade. As soon as you take that low out, I'm entering. Stop loss, you want to cover, the best stop loss is here. But to me, since we have inducement here, we're not in even a valid POI. If this was a flip, I probably would have had a bigger stop loss. But since this is inducement, it should get ran pretty fast. And we have huge imbalance right above. So this worked out perfectly. it gave me 3 risk reward in literally a matter of 10, 13-ish minutes. And that ended my day, y'all. Basically up 7 risk to reward, okay? Now, how long was my trading session today? From the start of my first trade, about 3 hours. So this is typically standard for me. Sometimes I finish my trading day within literally an hour after open. Sometimes it's longer, sometimes it's shorter. It just all depends, man. But today was about a 3-hour training session, and I was done here, man. You know, and I told the Discord here also I was done. If you check the free Discord chat or even the paid premium group chat, I don't remember which one I sent it to, but essentially, you know, I said I was done here because I don't see any other A+ setups. We had a setup here to run this trendline liquidity here. I sent this to a group, but I didn't take it personally. I missed it. This is impulse delivery. You would be targeting all this, and we did eventually later hit it, but obviously, you know, price took a while because we're not inside kill zone, so price moves slightly slower, and we're near power hour, so we should get some volatility soon back into the market. Unlike all this chop, you can see basically I was able to avoid bad price action after knowing there's not much else for price to do in terms of like where to go. Whenever you don't have a clear draw on liquidity, guys, don't take a trade. It's better to sit on your hands and wait for something to be more clear. I think a lot of people lose trades is also because they force too many trades in bad price action. If you're forcing trades, maybe like going up and down, or just taking random trades in this, you're just gonna lose a ton of long. You're like, if you're at long, you're just gonna lose a ton, right? You want to maintain and control your losses for the most part in your trading. So like to me, really, what else? I was not short bias at all here. I said since we took out, where was it? Previous day, we already took out previous day low, and we're bullish on a daily. We're bound to go up further, right? We're deep in discount. We are very deep in discount. Like if you go to the 1 hour, I mean, we are deep in discount. Like this would be the original range. We already broke past the range low, right? And we had a nice reaction off the previous day high or previous day low. So to me, I would only be looking for longs, and obviously I'm not going to continue longing up here since after we hit this PY, because this PY can hold. It's a lower probability to hold. It held this time, but majority of times it's not going to. So I would only be interested later on in taking this trade, but I was off the charts and I was just monitoring the charts, and I'm just like, you know, got to stick to my system. I don't want to get too greedy to a point where, you know, I'm up 7 risk reward after taking two-ish losses in the beginning. I just call it a day here. Price action was delivering very bad. I'm just not a fan of, you know, trading when you see bad price action, because you can anticipate bad price action to follow unless it clears up. So sure, you could have said in hindsight there's some continuation trades here, but we did still have a ton of choppiness here trading. So the only entry model value would have been this, and you'll be longing to take out this trendline liquidity. Let me see if I can find the screenshot real quick of me calling out this trendline liquidity as a draw on liquidity to the private group. So here, quick screenshot to the group. It's not the most clear because Discord, but I had literally trendline liquidity marked out, and I was telling you guys this was a draw, and you know, we took it out. Look how perfect draw was here. We took it out perfectly. And what happened right after? We reversed, and obviously the market closed, you know? And in fact, also one more confluence is my daily bias was bearish, so I did go against that. So that would be something you could say if you want to look for reasons why your longs failed here. Well, my daily bias was bearish. Now, that doesn't mean the whole day is going to be bearish, right? We did indeed still hit a valid PY in my eyes and my system. So still followed my system nonetheless, but having a daily bias a little bit going against me is, you know, just something that does lower my win rate a bit based on my batches data. The daily bias indicator tends to be more often right than wrong. So whenever my draw on liquidity, if it is in line with daily bias, it improves my win rate significantly. So hope you guys do find that this video helpful. I know these trade recaps are kind of long at times, but I do want to put as much information and knowledge to you guys as I can in these videos. And if you guys enjoy this, just all I ask is subscribe and like. And if you want to join the private group, join the private mentorship, or take the 100 risk reward advanced course, and I'll see you guys in there. If you're someone that trades IFGs and you sometimes find out that you're missing out on IFGs because you clearly don't see them with your eyes, or you like to have a more passive way of maybe for an indicator to send you alerts or signals when an IFG gets inversed, then this is the perfect video for you, because I'll be showcasing you my IFG indicator that I custom coded in TradingView Pine script, and everyone can use it. So all you gotta do is just go on my WAP to access it. But essentially it comes with the indicator package, and it comes with all these indicators here. I'm gonna remove all of these so we can really focus on the main indicator I'm going over today. This is called ETU IFG. Read this first if you want. Just explains real quick roughly how IFGs work if you don't understand how they get inversed and what's considered inverse and what's not. I have a system that basically filters out memory so you guys don't lag, or you only want to show the most recent IFGs. You can use this tool here. It just uses a first in first out queue to basically sort the memory for the IFGs. And then last but not least, you can have different types of customization features like border width for IFGs. I typically keep it at 2. This is very important. So this indicator is literally a 2-in-1. It's a fair value gap and IFG indicator. Why? Because when you have this disabled, show text when inversed, all this indicator is drawing is just the fair value gaps, right? Like we have a bearish fair value gap, it's red, bullish fair value gap, it's green. So if you trade fair value gaps, this is also a perfect combination for your trading. And again, it sends you alerts when these fair value gaps get inversed or mitigated. So if you go in here, go to add alert, you have a fair value gap mitigation, right? Fair value gap mitigated, prepare for potential inverse. So you can get alerts ahead of time before, so you get enough time to react and go in your broker, enter your trade, and manage your risk. There's also a fair value gap inverse, which basically sends you an alert on the candle close when the fair value gap gets inversed. Typically, you obviously want to know a little bit ahead of time, but if you're actively looking at the chart, you might just want something to quickly notify you real quick that your entry model is coming or it presented itself. So I do have a lot of different type of systems here. Obviously, you can change and customize the visuals. This is pretty straightforward coding, not too much there. Just change the colors here, nothing crazy. You also have text size. That's also a visual thing. It's up to you. Different text sizes, right? I typically just keep it at normal or small. But yeah, this is for people that maybe on the higher time frame you want bigger text. And show text, so you change the text color. And show text when inversed, it just shows you, it labels the fair value gap as IFG when it gets inversed, and it will tell you the exact candle that inversed the fair value gap. How do I know? The code is set to basically stop drawing the box at the exact candle bar index that inversed the fair value gap. And if you guys don't know what IFG is, it's just when a candle body closes above a fair value gap. You can see this candle body closed above. The closure closed above the fair value gap. Hence, you can see the IFG is drawn perfectly to that and it stops. It doesn't continue drawing forever. There's a lot of, I tried a lot of IFG indicators on the market, like in free TradingView community. And the reason why I made my own was just because I found out they suck. A lot of them are just bad and they just don't work properly, or they just miss out on a ton of IFGs. Hence why I made a solution to that also. You can use, first off, before I get into that real quick, you can enable 50% calculation, which literally is just filtering out IFGs. You can either set it to draw them out based on fair value gaps. So if you're looking for potential PYs and use fair value gaps as your PYs, you can use fair value gap mode. If you use IFG mode, all this does is essentially, it just basically keeps all the fair value gaps in premium discount, right? So like, for example, if you're looking for a short, you're looking for a bullish fair value gap to get inversed. Hence, when you have the setting enabled, it's only going to draw bullish fair value gaps in premium and bearish fair value gaps in discount, because obviously you're looking for these to get inversed, right? Like here's the entry model here, and you just TP at this internal for a very conservative TP. There's your easy free one to risk reward. There's other trades that you inversed here. You're taking this trade. There's so many trades you could take really with the indicator itself. Of course, you need maybe add some more context yourself in your trading, may add some more confluences, but the indicator itself speaks for itself, man. If you disable this, it just draws all the IFGs on your chart. If you just want to see everything, I don't like it like that. I like it to be more clean and filtered out. So I have this filter. And the last thing for filtering is the size filtering system. This filters based on, pretty straightforward, the size of the fair value gap. If you do extremely aggressive, it's only going to show you the massive fair value gap. Some people, maybe your trading system is you only want to take an entry off big inverse fair value gaps. Then you put the mode to extremely aggressive. This way you avoid those smaller, less significant fair value gaps or IFGs. And of course, there's different modes. You can see as we go down to no filter, it will just mark every single potential IFG, even these tiny ones like this, or this, or this, right? But look at what happens once we go conservative, those get removed. Once you go a bit more aggressive, those other ones on the left get removed, things like that. So I'm gonna reset this to default settings because these are the default settings I use. To me, my system, I don't care too much about the size of the IFG based on my, I haven't collected enough data, but just based on my past trading experience, trading live, I don't really see it to affect my win rate much if it's a small or big IFG inversed. So that's just for my system. Everyone's system is different, so definitely check that out, backtest your own system, and hopefully this indicator will help out a lot of those IFG traders out there trading and scalping IFGs. Monetary goal for sure, definitely no P&L goal. I'd say a good goal is maybe something like in terms of risk reward, but even then I think you can't do that because the market is not binary, ones and zeros. In good market conditions, you will make like 20 risk reward potentially in a session or in a sitting. In bad market conditions, you might only make 3, and you're still taking your A+ setups. It's just how price delivers that affects everything, right? So that's just something to keep in mind. I wouldn't not have risk reward target. I make money every single day trading in the market, and I'm saying this because I know so many traders online. You know, after I finish my trading sessions, I just look around. Sometimes I check online, and I notice that a lot of traders, especially other trading communities as well, they seem to be lost in the market conditions because they're saying the market conditions are very bad. There's a lot more chop, a lot more consolidation. Like yesterday or a day before, NQ was literally making a barcode in the opening session, which is crazy. So many of these things, people are getting chopped up. People are literally blowing their accounts, which is crazy to me in the first place. There should be risk management for that. But there's just a lot of people that are really confused right now in terms of understanding where the market's going, where should they be trading, where should their entries be, getting stopped out before their actual move in their direction. And today I'm here to give some solid advice on how you can navigate these current market conditions and what you can do and things like that. So let's just get straight into it. First off, before I get into that, or the trade recap, basically recapping today, we made about 7 risk reward with the team, okay? Well, 4 risk reward, 2 risk reward, and I took 2 losses back to back. Unfortunately, I typically don't take losses back to back like this, but you know it happens, and it is what it is. It just wasn't very clean price action, but this isn't something that's considered bad price action to me, right? This is just manipulation like usual that occurs, just a bit more than usual. But the delivery today was definitely much nicer than the past other days. The past other days, it would just take forever to hit my TP, right? Usually, based on my data, it takes about 30 minutes or less on average to hit my TP during New York session. Now, of course, during Asia session, during London session, it's going to take a little bit longer because there's less volatility, less volume, and therefore these candles will take a bit longer to form to hit my TP. But from my data, this is why data is important to understand. I know within 30 minutes or less, my TPs typically hit if I am right on the trade idea. Now, if it takes more than 30 minutes, it's not that it's questionable. It's just sometimes that may occur maybe later in the session, but during the kill zones, usually it shouldn't take too much longer than 30 minutes. But obviously, in the recent trades I've been taking, they obviously are taking a lot longer than 30 minutes. Like today, this one was one of the quicker ones, 16 minutes. So it was a great trade. This one was about my average trade duration, right? But this one took a while. This one was about an hour of trading while holding this trade to really get to my TP finally after all that manipulation, which is something you also need to understand in the market. A lot of people, they don't understand what manipulation is and how to take advantage of it, and therefore they're getting stopped out before the true move towards their draw on liquidity. And again, I sent out all these draw on liquidities to the group as well. I told the group that this was the weak high I was looking to get ran through, looking for longs here to take this weak high out, and that's exactly what happened. And it also aligned with New York session high, so a lot of confluences. But going over the main topic of today's video, which is, you know, how to navigate these bad market conditions. I personally think that there's 2 reasons mainly. Number one is the trader that's blowing their account or just losing a lot during these market conditions. They might not have enough experience trading different market conditions, right? Trading 1 to 3 months is not anywhere close enough time to really gain enough experience. I'd say you should be trading for at least 2 to 3 years to say you have somewhat of a level of experience of different market conditions, because within a year it could be all bullish, for example, right? we could have something maybe also like COVID where it was very bearish, right? And everyone's making money, right? So understanding market conditions is very important, and therefore that's why I really truly believe that you need to have some experience. You can't just do you can't just go off like 1 month of data, 2 months of data. You need to have a timeline of data plus a sample size of data, right? So 100 trades across 1 month is not valid data to me. It needs to be 100 trades across at least 6 to 12 months or a year or more, right? Now, typically I don't say to go over the 4-year time span, because typically the market thinks certain things about the market may change, and we want to be up to date still with the market without going too far back. So within 4 years is definitely enough data to have as to basically validify your strategy or system. So number one, again, the trader doesn't have enough experience, so they're blowing accounts or taking a lot of losses, trading this market conditions where it's very slow. They might be very used to the typical market conditions where typically, again, like I said, price usually hits my TP within 30 minutes or less, right? So it's used to the high volatility. Last month we had extremely high volatility. And of course that's driven by fundamental news as well. But my point is we still had extremely high volatility. But despite a lot of fundamentals coming out this month too, we have a lot lower volatility, right? So this is not something we can really change as traders. This is something you just have to pay attention to and recognize. And when you recognize it, you need to adapt. So this trader, number one, that's blowing their accounts or failing is because they can't adapt to the market conditions due to lack of experience. The second reason is that your trading strategy basically might not just be profitable over the long run. I'd say there's a lot of strategies out there. There's a ton of different strategies, and there's a lot of profitable strategies and a lot of unprofitable strategies that don't actually have an edge. Certain things like EMA crossovers have no edge whatsoever in the market. If you're purely trading EMA crossover, you have no edge. I have literally TradingView data. I can literally program something real quick right now within 5 minutes, and you can use TradingView data and literally shows from a backtest across. I think you can go back 4 years or more of data. I don't remember exactly. It's been a while. I think I actually went back 2006. I'll have to check later, but the backtester on TradingView is extremely good. It allows you to go back and robotically basically test out your strategies, things like EMA crossovers, and they don't have an edge. What I mean by they don't have an edge is the profit factor is basically a 1.006. After commission and spread, that is a negative expectancy, okay, in your P&L. So definitely not something you want to be trading. In fact, you should be avoiding strategies like that because it's just a waste of time. It's a waste of your mental capital and your actual capital. So again, number two reason, the trader does not have a robust strategy that works for all market conditions. Some strategies will work better in certain market conditions, like maybe trending environments versus ranging. Other strategies will work better in ranging conditions versus trending. It varies a lot, right, from different strategies. That's why I say not one size fits all, but you need something robust enough where your strategy will still perform under trending or ranging conditions, either of them. Your strategy should be robust enough and optimized enough and refined where you should be able to still be profitable in both market conditions. Because if you can't do that, you're going to have to, number one, either completely avoid trading when you recognize market conditions being consolidating or trending, if that's against your strategy, which can be a hit, of course, on your trading. The reason why is because you need to have that income coming in every month, right, from trading, especially if you're trading full time. Like me, you need to have income coming consistently every single month. And that's also why I like day trading instead of swing trading and other things. You can still make money swing trading. Don't get me wrong. I'm just saying I like the higher frequency for day trading, right? And I don't like holding positions for that long either. That's just not my cup of tea. But essentially the point is, right, you need something that's robust enough from backtested data. So that's why I backtest enough sample size across a good timeline so you understand these things ahead of time and you don't have to deal with losses later on. You get really confused. So that is number two. Essentially, understanding you need a robust strategy that works in all the market conditions. I'm not saying it has to work very well in every market conditions. It can work, for example, if you have a strategy that's a trending market and you know it works very well in trending markets, right? From your backtested data or maybe your live trading data. Well, guess what? It should be very profitable during the trending market conditions. And then let's say you go into consolidation markets or markets where volatility is lower, where you get a lot of ranges, a lot of liquidity sweeps, ton of manipulation. As long as the strategy is still above break even, meaning somewhat green, That's completely okay and acceptable. The only problem is when it goes down below break even, which is red. So you definitely don't want to be red. You preferably not break even. You preferably want to be at least a little bit of green, right? That's all you really need. So just a little rant about 2 reasons why people are unable to make money right now in the current market conditions, even though they were able to, maybe for example last month when we had high volatility. These are the 2 main reasons: experience and a robust trading strategy. Those are the 2 things that are lacking from a lot of traders online that I've been seeing. Now, don't get me wrong. I'm not saying the market conditions are perfect right now. Of course, they're still bad right now, but I'm still able to make money 30 minutes almost every single day. In the recent trades I've been taking, they also are taking a lot longer than 30 minutes like today. Other traders are doing something wrong, okay? Or their strategy is not good enough and robust enough like mine. It's not out of ego or anything. It's just stating the pure facts. I think last week I had about 1 red day. Other than last week with 1 red day, and I posted that as well, every other day has been green so far. So I generally don't know. I mean, it might just be, again, lack of experience. Maybe the people posting online
imagine waking up to an extra 100 risk
traders that haven't traded much, might be new traders. That could be very possible. But it's just certain things I've been seeing on Twitter, on Reddit, things like that in my free time. But nonetheless, let's just get back into the video. I'm gonna basically go over the trade recap real quick here. Again, these are trades, and some of our group members actually banked, which is awesome. You know, I love to see our group members in ETU banking as well with me. I know some people, or one trader in our group took the short here, and he TP'd at the flip, which is where I TP'd as well. And then someone also took, one of our other traders also took this long here, and I believe he exited a little bit prematurely, but nonetheless, it's still a good trade, right? It's still a good trade. It's aligned with the bias. He's not counter trend trading, so I'm completely fine with that. And last but not least, he actually took a really good OB continuation model here, essentially to the downside here when there's SMT. Now he trades, and you know, NQ, but nonetheless, this is ES. I personally like ES. ES is less volatile than NQ on average, but I just started off trading ES, so I've always been used to reading how price moves on ES, and you know, I just stuck with it. Don't fix something if it ain't broke, right? Never try to fix something if it's not broke. So here's the trade recap. I'm gonna make it real short today. I don't want to make it too long. We have trade, and this one trade took 20. It was about an hour of trading. Typically, you have no edge and refine, or we're not good enough. And real quick here, trend trading off trade, or we're not good enough. And real quick here, trend trading off trade, or we're not good enough. And real quick here, trend trading off trade. Have a flip here. Okay, so the origin's above here, which is very small. I wouldn't even trade that probably if I saw this. It's very tiny. But we have a flip right here. And some people may even consider this the origin because you might market structure like this, right? So to me personally, this didn't fully mitigate here, I think. If it did here, then sure, that's valid as a new structure, but it seems like it just barely mitigated. So I personally could consider this a flip, but that's not really the main point, right? This is a pre-market trade before New York Stock Exchange opens, right? New York Stock Exchange opens at 9:30 a.m. EST, but the kill zone for New York session opens at 8:30 a.m. So right here. So here is a very straightforward trade here. I took an OB entry model right here. It was on this candle here. I took an OB entry model. My stop loss, I put it above. I got to give some wiggle room. And I talk about this a ton in the course because this happens very often where price will make equal highs or equal lows in futures and wick you out. You don't want to get manipulated out of the market. That's how liquidity forms. That's why people get stopped out early. So you want to be, you know, giving your stop loss some wiggle room no matter what. So that's what I did here. And we TP'd essentially at the flip here. You could TP at here, or this bottom one right here. I personally prefer typically the upper one for the most part, unless it's a huge difference in terms of distance far away typically. But typically I prefer this one. It's a little bit safer because you don't know exactly if price will go back all the way to the extreme one. In fact, it actually went all the way down to the last flip right here. So you don't know exactly which one of these three price will mitigate. This one, or this one. Therefore, I just took the more conservative target here for full risk reward. And at this point, this was a counter trend trade to me. Why? Well, it's very straightforward. So if we go on, let's see. So if we go on, it's the 1 hour. Right here, we have a 1 hour swing low right here. This is very high time frame liquidity. You guys know high time frame liquidity causes big moves in the market. In fact, if you go in the 4 hour, this is also a 4 hour low. After we mitigated this PY here on the 4 hour, we failed to hold and we just did a sweep here. So we have a double sweep of essentially this internal swing low on the 4 hour and this also 4 hour low on the left here. So we have a lot of confluences to go to the upside as my draw on liquidity temporarily. Therefore, this was a counter trend trade to me. And if you were to target a low, I'd say that is a very, at least that's an aggressive target and pretty unrealistic for this trade. So for risk reward here, I did not close out here. I think this was news. What's this? Market open was, because market open is 9:30 a.m. right here. This candle is bigger than market open. I know we had news today on Forex Factory. I think it was 950 or something like that. So this one, it wasn't a big candle wick, so it's not like you can use this really as a data wick play or trade. But yeah, we did have news come out, and I think it was two news. I think it was orange or red. I can't remember, but we did have news come out. Nonetheless, this hit TP forward towards a perfect trade there for me. Next trade, we took London session high. This was like, I can't make this up, man. This is why I have an indicator to mark this, so I don't have to every single day wake up and have to all of a sudden and I ask you to mark the session high or low. You can still do that, right? So it's not like you can't or you don't know how to do that. You still do. It's just using indicators saves you a lot more time. And matter of fact, let me show you guys something. So here on the right here, I have my alerts log here, and literally these are just alerts I have set using my indicator. Like literally it's an indicator alert. I programmed it myself, and it just basically gives you alerts when your session high or low, 8 session high or low, or 11 session high or low gets swept, and it triggers once per day or per session basically. And I just have all these set as well as previous day high and low as well, because those are high time frame liquidity points that I definitely don't want to be missing out, right? Those are very important. I'm not going to set another at every single 30-minute or 1 hour high or swing high or low, but these are the main ones you really want to be looking for to take a trade reversal off of. So that's why I have those alerts, and that's why I literally made these indicators, because originally I made these indicators just for myself to help benefit my own trading, to make it, you know, less painful and easier really, to save me some time, because I hated having to look for the session highs low myself, and I was able to make it visually appealing too, and it looks pretty good. So, and it's the main thing is it's functional, right? I got an alert here, we hit London session high, and what do we have here? Well, this is something I talked within the course very deeply on, but this is a very high quality IFG right here. There's a lot of reasons. Again, I mentioned all the reasons in the course. If you watch the video about IFG setups, this is a very high quality IFG. If you can't see the text here, it does say IFG. It's just the way the candle is right here. But it says IFG right there, and of course it gets inverse right here. And we have two risk reward trade here. We just took here and a stop loss here. You can't really place this anywhere, right? If you place it above the IFG, you would have got stopped out. Here, me personally, you just can't really place it here because there's nothing really structure wise here in the middle of nowhere, right? We want to try to find like a structural spot if you can, and the only structural spot really was that high, so it covered that high, and we TP'd at basically, this would be considered the origin. Yeah, this is the origin here. There's nothing else here. TP'd at the origin. Again, what would this be considered? A counter trend setup, right? Two counter trend setups. They still worked out as long as you don't have aggressive targets. If you have your target here, of course your winner is going to be very low, right? You just don't have realistic TPs. You need to have realistic TPs in your trading, or your win rate decreases. Here is a very valid setup. We had inducement right here. Okay, This is, I'll just mark this for you guys. This is a break structure. This is also a break structure. This is my high time for drawing liquidity to go higher, but this was a very high quality continuation setup. It just failed. There's nothing wrong with that. The only thing missing here is a internal liquidity sweep or some sort of liquidity sweep. We didn't get that, but we did sweep inducement. Tapped into origin. This is a continuation model here. There's nothing wrong with this loss here. This is a complete valid loss. I just took it to the chin. I do have a lot of member notes that I did annotate as well. I removed them from this chart because they're for the members that paid for the course and the mentorship students. So hit them for the video. But here you can see there's some reasons why this wasn't a high quality setup, and I basically wrote that down to everyone to let them know. But still took it anyway. I was willing to risk it, and it hit a stop loss. We had, and we still maintained structure here. This is the low that made the high. So we maintained the low. This is important. We maintained the low here. I was hoping for this to get swept, but it doesn't have to necessarily get swept, especially in market conditions like this where we chop around a lot, right? Very choppy. It doesn't have to get swept. We can just create new manipulation here. And there's also another reason why I mentioned to the course members why we never came back all the way down here, right? There's a very clear, obvious reason mechanically. This, I took an OB entry model off here. You could have taken this one too as well. I just took another loss here, basically back to back. I was anticipating this was just an internal liquidity sweep. We did kind of, either these were equal lows or we swept this. I don't trade equal lows or equal highs, so whatever this is, point is we still took a loss here going long. It's all good, you know. Still following my setup, still following my plan. At this point, I was up just 4R on the day, and you know, it is what it is. We basically almost broke even here with these trades versus winner. But again, you just don't want to go on tilt. That's the main thing. If you start tilting, and I'm going to explain this real quick because I used to do this when I started trading my first year. It was very bad. It was horrible. My tilting was very bad. I would take a loss here, for example, this long, and a lot of you guys can probably relate, especially if you're still tilting right now. You probably short immediately, go short. You probably target your initial target here, and then boom, price hits you out. Then you go long here, and guess what happens? Price hits you out again, right? It's just doing a mitigation cycle here fractally, which is something I also teach. And if you don't know what that is, you're just gonna get stopped out and stopped out, right? And then guess what happens? You hit stop loss, going long, and then you try going short here, maybe at this break here. You have a tight stop loss again, and you maybe target a low here, and it wicks you out, basically. It basically wicks your TP, right? For example, and you just miss a trade. And then at this point, you're already like 3 to 4 losses deep, and you just start full porting. That's just how it is, man, when it comes to tilting. And I know about this because I mean, almost every trader that is profitable now has gone through this. I don't think I've known many traders that have never gone through this, because this is just like it's like a canon event that's bound. It's just bound to happen, right? No one's perfect, and neither is the market, right? The market is not entirely perfect because SMT correlations occur, so it might not always take out swing points like this low here, but majority of times it will. I took a break even here. We had a very high momentum here. We did one more sweep here. This was my last attempt, guys, here. Like here, if this trade didn't work out, I'd probably be done. If I go to NQ here, this was, let me see, this was 1056. So what happened here, and the reason why ES did not take out the low is because we tapped into basically the last unmitigated PY here on NQ. Okay, so if you have NQ and ES up, side to side or whatever you want, you will notice this. And this is basically what I call like a mitigation SMT. So instead of us taking out a swing high or swing low SMT, it's like more like an internal SMT when one asset mitigates in PY while the other one does not mitigate the PY yet, or doesn't have any other PY to mitigate, right? Hence why ES actually at the exact same time, as soon as NQ mitigated the unmitigated PY, ES shot up along with NQ. So at that point, you can anticipate we have a chance to go higher. So I just took this IFG. We had very good momentum, all in balance candles. And this is basically a miniature impulse delivery model. So if you took an impulse model here, this is not an A+ impulse model because you can see how we have a lot of internal structure here. Even though this is trendline liquidity, it's still not a perfect impulsive delivery. So it's not an A+ impulse model. But if you took an impulse model, it would just be a little bit more risky. And you probably wouldn't want to manage your trade very aggressively in terms of break even. I took this one, just managed this one pretty aggressively, even though to me this is an A+ setup. The reason why is because of stop loss, man. Like if I put my stop loss here, for sure I would not go break even. But looking at where my stop loss is, we still have tons of imbalance below. Yes, I expect price should displacement deliver with a lot of displacement, but it's not guaranteed, right? It's just probabilities. I know if price does come back to mitigate, we need more confirmation before entering the trade again. We're not just going to blindly enter here. So basically, my stop loss break even. I got hit out at break even, unfortunately. And, you know, it is what it is. And this is, I believe I broke even right here at this internal base pressure here, right? So as soon as we made this move here, we came back to mitigate. My entry went higher. At this point, price did not anticipate price to come back down here. We made a stop hunter setup here. If you took that going long, that's valid as well. Waiting for more confirmation when we came back to basically mitigate this buy to sell or sell to buy here. And we got another IFG entry model. You could take this higher one if you want to as well, right here. I just took this one because, you know, we have enough confirmation earlier that we have at least some sort of impulse or momentum in this direction. So there's at least some sort of confirmation with the internal change of character here. I took an IFG entry model here. Stop loss placed below the low. This is a bit more risky still. Why? Because price can still come back down here, mitigate this final OB, and then continue higher. Now, I just don't see that happening because of how much displacement, how big this gap is. The bigger the gap, the less likely price will come back to mitigate an OB there. So that's something I know from experience trading. I took an IFG setup here, told the group I was targeting basically the weak high here as my draw on liquidity, and it ultimately hit for a 3-risk reward. So basically what happened here is these two losses got canceled out by this winner. And then we have a 4-risk reward winner with a 3-risk reward winner, and that is 7 risks to reward in your session. And let's see, how long was this trading session? This was about 3 hours, which is basically the kill zone duration. So 3 hours of trading within the kill zone, 7 risk reward. I'm happy. I'm closing the charts, right? Typically for me, my typical goal, I don't think any of you guys should set a monetary goal for sure. Definitely no P&L goal. I'd say a good goal is maybe something like in terms of risk reward. But even then, I think you can't do that because the market is not binary, ones and zeros. In good market conditions, you will make like 20 risk reward potentially in a session or in a sitting. In bad market conditions, you might only make 3, and you're still taking your A+ setups. It's just how price delivers that affects everything, right? So that's just something to keep in mind. I wouldn't not have risk reward target goals, but to me, just with my experience and such, I'm able to typically make about 10 risk reward per session. Obviously, sometimes it could be much higher. I think last session I had 18 or 19 risk reward, but sometimes it's also gonna be lower, like maybe 7 risk reward, 6 risk reward, right? And I'm perfectly okay with that. As long as I'm trading my system, my strategy, and managing my risk properly and not tilting, I'm completely okay with walking with 5 or 4 risk reward. You don't need to be extremely greedy and making 10 risk reward every single day because that's 200 risk reward a month. I named the advanced course 100 risk reward course because with my strategy system, once you master it, you first off, you'll be able to easily read the market, and second off, you will be able to make 100 risk reward from my backtesting per month, which is a lot. That's a lot. That's 5 risk reward a day if you break it down consistently. So just something you want to keep in mind. Don't get too greedy, guys, especially with the TPs, right? Now, of course, we had so many nice setups later, man. We had a nice sweep of near session kills on a high. Look how perfect, again, session highs and lows work. Boom, perfectly out of reaction. Look at here, London session low, my kills on indicator. Boom, he had a nice reaction here. 80 session high, boom, great trade here. 80 session low, this one failed, right? This was one failure out of like 4 or 5 winners, right? So you can see how perfect these timings are and liquidity is. Here, if I were to explain this here, what happened later to the market, we just had SMT here. NQ took out the low here because this is all fractal trendline liquidity. Everything is fully mitigated. Not everything was fully mitigated on ES. This is a 5-minute POI. Hence why it's so important to have your POIs on your chart drawn. If you don't have an indicator like mine here, right, shows 5-minute right there, you need to be at least switching time frames yourself to find these things. Otherwise, it's going to be a rough road for you because you're going to miss your TPs if you're only aiming for 1 minute OBs or POIs all the time. Sometimes we'll have a POC even and press the reverse off that. So just something to keep in mind. Pretty self-explanatory here though. 5 minute mitigation plus SMT, continuation A plus setup. I don't see really an entry here. Well, there's an entry here off my IVG indicator here. I marked it, but no like very high risk reward entry here, I'd say. Unless you took a SH setup later, which for sure you could definitely get entry here. And you can see we ran so much higher here. But you can see how like important it is to have still like not too aggressive targets, right? Like for example, you don't want to be targeting all the way up here to the left here. There's no reason to, because look, you might even hit break even here, right? When you could just taking 3 risk reward out of the market. That's 3 risk reward. How I see risk reward is I'm up 3 risk reward. That means I can afford 3 losses and still be break even for a day with no risk at all. That's how you should be seeing your risk reward. You need to look at the downside first before the upside. That's how you should be trading, right? That's why risk management is important. You can't just look at the upside with no downside and full pour. Doesn't make any sense. It's not sustainable long term. So that's basically it for this video. It's a pretty long video, but just quick little trade recap. Again, if you want to see these exact trades annotated and such, join the private group, either the Prime Mentorship or just the E200 Risk Reward Advanced course. You get access to the private trading chat with me and all my members. We try to basically give trade ideas and such every single day. I'm in there active pretty much every single day. So again, if you guys want to genuine, check it out, and I'll see y'all in the next one. He was selling here as well, but for me, I don't count that as much as manipulation, but sure, you can count that as a liquidity sweep. Internally, we have 2 liquidity sweeps where you end very red on your P&L, and it's because you're making all these psychological, emotional decisions that are driving your trades or trade ideas and not actually following your system. Well, today I'm going to give you guys basically somewhat of a solution to essentially how you're able to, like me, make some psychological decisions or mistakes or trades that are outside of your trading system and still end the day green. This day, on April 24, 2025, on NQ, I made 3.60, so about 3.1K per account, and times 5, that's around 15.3K across all my fund accounts today. And it was just within trading 1 single hour. It's about 54 minutes of total trading time, including your hold time and everything. And that's literally all you need to really make 5 figures in a day. You need that, a good system, and most importantly, of course, the capital as well, right? Without the proper system and edge, you won't be able to make anything. You will end negative no matter if you follow your system perfectly. If you have a negative edge, you're not going to make money in the markets. Because if you truly think you could just take random trades with no data behind them, like this or whatever, then you're delusional, because that's called gambling. And we're not gamblers here. We're here to make educated trading decisions driven by data. And I always preach data, because data is how you stay profitable. You don't stay profitable, or you don't even become profitable without data, right? You need data first. Data and discipline will lead you to success, and that's how you can make this a full-time career. So here, I'm gonna be posting this to the Discord as well for free to all the Discord members. So what I'd like to do sometimes is post trade recaps videos like these to the free Discord server ahead of time, so you guys that are in the Discord, complete for free by the way, can basically see these videos before I even post them to the YouTube public. So again, if you're interested in that, make sure to just join the free Discord. There's no promotion whatsoever. It's just there, free resources in there as well, tools to help you guys just become better at trading and become more profitable. But this was literally just a 1 hour training session for me today on NQ, and bagged about 15.3K across all my accounts. And this just shows you don't need a ton of trading time. Like, you don't need to be trading for 8 hours a day or a whole session to make a lot of money. You can literally spend 1 hour every single day trading. 1 to 3 hours, I'd say, is a very good time range to trade actively. And if you have a very good system, all you have to do is wait patiently for your setups and execute, and you will basically be guaranteed to make money as long as you have a positive edge with good risk management and discipline, of course. But yeah, I'll be recapping all the trades here. Again, I post daily trade ideas and weekly trade recaps to the course members within the course content, and basically the private course members group chat. So again, if you're interested in that, take the 100 risk reward of course, and you'll get access to all that information. But anyway, here's the trades real quick. I don't want to make the intro too long here. The trades here that made me about 15.3K today. It was technically 2 valid setups, okay, but you can see I took 4 trades. But yeah, nonetheless, you see in the beginning of the day, we just had purely bullish price action, like at open here, which is New York session opens at 8:30, but the New York Stock Exchange doesn't open until 9:30. So about 9:30 right here, we just had a huge bullish push. I mean, this is a massive move, 2%. Within like an hour, and all the price was doing was going up. And I've made videos, if you guys have seen the course video, about what I say is considered good and bad price action. This to me is considered bad price action unless you are like taking micro scalps, trading with the trend, right? You should always trade with the trend, but I don't ever teach people to take these tiny pullbacks and enter off them. And the reason why is because 90% of trading days, we won't have days where prices continues trending in one direction like this. This is a rare occasion. This doesn't occur often. And so this is an outlier in terms of sample size and data. Hence, I don't teach anyone to take these internal continuations here that are these tiny pullbacks, only pull back to 50% of the range, right? Or wherever the range started down here. So, because if you're taking these tiny scalps, the reason why is if you're taking these tiny scalps or tiny pullbacks, like off either OB, some sort of PY, whatever, 9 out of 10 days you will get killed because price action doesn't deliver like this, where it's almost a straight line in 90% of those days. It only delivers like this 10% or less of the time. So you will get killed trading like that. Don't trade like that, and just stick to the system I teach you guys within the course and wait for those 50% pullbacks into valid POIs, and then use the mechanical entry model I presented and showing you guys data that works. But these days like this, man, we just had bad price action going all the way up basically. Even throughout the day, we basically had pretty bad price action. It was just consolidating the way up slowly. We don't have any major pullbacks. We do have new value being created in the market here. So 50% here did get tapped. We took out inducement here, and essentially after taking out inducement, you had an entry model to go higher. So that could have been a valid trade starting there. I don't really see anything too valid back here. We took out inducement here, so you could have taken a trade maybe here, but even then, at this point, it would be rough and I wouldn't be taking any trades. Hence why I didn't take any trades here, because when you see something like this, and it's just, to me personally, too far up in a leg to be taking a long unless I see new value being created, which is based on price and time. Meaning if after like 3 hours, this is what, about 3 hours, 3 to 4 hours, price is just going in one direction, creating small structure, then yes, that creates and shows us that there's new intent in the market and new value, and therefore we should then follow the new value with the new inducements being created rather than waiting for price to come all the way back down here to 50%, because it won't come back all the way down to 50% there until we hit the high time frame objective, right? And even then, it's not a guarantee either, because the bigger the ranges we create later on, the more new value we have in the market, and we don't always have to come all the way back down, especially when prices continues in one direction and it doesn't have it basically creates bigger ranges for us to trade off, and we'll trade off those bigger ranges on a lower time frame. So hopefully that makes sense. If that doesn't, you will understand what I'm trying to say. With enough screen time, you will notice things like this occur, and it'll finally click and you'll understand what I'm trying to say here. So like, for example, here, this would be a break of structure here to the upside. We don't care about all this imbalance down here when after 3 to 4 hours, you've just been going up and creating new inducement. So this is our break structure right here. And we didn't tap anything here. This is fully mitigated, at least on NQ. We just took out inducement here. And we came back to discount. Not my favorite discount because we're literally at the 50% level. I prefer something a little deeper, but it doesn't deny the fact we did take out the inducement and create that break structure. Well, after that, and discussing basically bad price action, I noticed we have finally a lot of good momentum. And what I'm defining as momentum is when we have price delivery where price is delivering in your favor or against you for the impulse model. But for this model here, for IFEGs, if you see price sweep liquidity, for example, we swept liquidity here above this high, and you see candles delivering in your favor several times in a row like this, where there's not only imbalances, but they're all the same exact color candles basically because they're all in your favor with a lot of momentum. That's how I define momentum. Then that's a really good IFEG entry model that increases the odds by a lot. So sweeping liquidity increases the odds for IFEGs by a lot, plus momentum. So if you have those two combined, you can achieve true like at least a 70% win rate, right? If you're taking A+ setups. This here is not an A+ setup to me. And the reason why is because we're counter trend still. So regardless of us having this liquidity that already got swept, we even manipulated. We had a fake move right here, fake reactions in the market. We even manipulated above this high and above this high here. Now there's no entry models. No, there's IFEG. So we manipulated people selling here. On the seconds, there's probably people selling here as well. But for me, I don't count that as much as manipulation, but sure, you can count that as a liquidity sweep. Internally, we have 2 liquidity sweeps here. And I marked this inverse fair value gap right here. And to me, it doesn't matter if it got mitigated or not. Some people may ask this. Well, this already got mitigated, even mitigated to the OB here, to the tick. But to me, that does not matter. At least for inverse fair value gaps, that does not matter. For my other setups, of course, if an OB is mitigated or POI is mitigated, it's not valid anymore. But when we're taking IFEGs, we're looking for the nearest IFEG within the leg, which is right here. We inverse it with the body closure below here. And stop loss here, I would never put my stop loss above here because that risk reward is awful. I never take trades that are 1-to-1 risk reward with my main system. For Stop Hunter, the risk reward is typically smaller, so you can expect like 2 to 3 risk reward with Stop Hunter. But typically, I prefer setups that are 3 risk reward or higher, and I decided to put my stop loss right above the IFEG, which is one of the setups or stop loss placements I teach within the course. There's a lot of other options that you could have done for this setup, but for me, this was the most obvious because we had a lot of momentum, and I wrote a lot of also comments here. If you guys want to read, feel free. I'm not going to read all of them. You guys can read if you like. Don't want to make the video too long, but essentially, when we have impulse moves like this, we tend to not come back to retrace to OB, which is my main favorite entry model. So because we didn't have that and we just impulse through with body closures below the IFEG, you can have a tighter stop loss. And it's probabilities, guys. Remember, price can still come back up here, and that doesn't mean your short is invalid if it does come back up here. It just means the probabilities that are low probabilities, but when they do play out, it's still probabilities in the market. Nothing's 100%. You could still take a short up here if you get confirmation anyway. So let's keep that in mind. Right here, this was a valid trade here. So 3R here was a valid trade. Now, the invalid trade here was this trade here. I kind of FOMO'd here. I'm not going to lie. I TP'd at the 5-minute PY here. And if I go in here, you guys are going to hate me because a lot of people cannot get used to seeing, especially if you're new to trading, this is going to look like a mess to you. With all these time frames next to each other, but I typically actively trade with 3 different time frames: my high time frame, my low time frame entries, and the 5-minute, because 5 minutes is very crucial to me as well. But basically, yeah, TP there for 3 risk reward, and then you can read the comments here. I FOMO'd into a short here. Why? Because I was expecting this low to actually get taken here, because I saw we had a reaction off this 5-minute and we failed. So people that are entering on the seconds here, we took them out. And yes, this could have been liquidity. This could have been internal liquidity sweep, sure. But to me, it didn't look like that because we didn't have anything visible on the 1 minute. So I was expecting price to go lower, except I FOMO'd here. So you could say technically it could have been a valid trade, but it's not like a trade I would have taken in the system I teach, which is what I trade every day. So it's not a systematic trade that I would trade that's mechanical. I just took a random short, I think, on this pullback. I don't remember entirely. Let me see if I can pull up the screenshot of my executions actually. So here's a screenshot of my executions here. You can check the prices if you like exactly, but I believe it was something around here. I just basically entered like on a wick or something when price is pulling back, and I have my stop loss covering a POI, and I was hoping for a slow to get ran basically because it wasn't holding. And we got an SMT here. If you don't know what SMT is, check one of the course videos I posted in an advanced course. It goes over exactly what SMT here is. But basically, we made SMT with ES, which is like asset divergence. Hence, we actually did take out this low, and that's why my short failed here. And I don't remember exactly. I could have entered here after we made the SMT. I don't remember exactly, but nonetheless, it was a loss, and an invalid loss. Next up, we had bullish candles here going in my favor. You can see how we have displacement, right? But displacement just means a big move, right? We had a big move above this intrinsic character here. And yeah, we basically had multiple candles in a row in my favor. Now, it's not as much momentum as here, because here you can see we had way more bearish candles. 1, 2, 3, 4, 5, 6, 7, 8 bearish candles in my favor. Here we only had 3 bullish candles in my favor. That did only have only one candle had an imbalance, and it wasn't confirmed when I entered. So you can see there still is a momentum difference between this and this, hence why price here came back to the OB. There's no exact number. You guys can backtest that if you like, but I don't really do that. It's just roughly looking at how many candles go in your favor. If it's a lot, with a lot of imbalances, less likely to come back. Here, unfortunately, it came back to me, so I entered half position because I didn't want to miss this move. This is an A+ continuation model that I teach you guys, right? Because it's pro external trend, and we tapped into the origin here. There's nothing else below. There could have been liquidity, but we took that actually with the SMT, so that's an even higher probability. This is an A+ setup here. But I've noticed we did mitigate this flip here in the 50%, but to me that wasn't too important because drawing liquidity is higher. So drawing liquidity is number one. You need narrative behind your trades, like I always preach to you guys. But we had a buy closure above, we had IFEG. I entered half my position, I believe, on this first push because I didn't want to miss the move. So half my position got 2R almost, which is, again, not part of my system. I don't like to trade 2R systems because the risk reward is part of my edge, right? And the lower the risk reward, the less my edge becomes. I will still have an edge because my win rate's about 60 to 65%. So even with a 1R system, I do have an edge, but it's not a big edge. And hence why the purpose of this video is I want to talk about basically that if you have a very big edge in the market, a high EV value of your system, you can afford to make a few emotional mistakes like this. This is only one loss, right? If you look at trading from a 1,000 trade perspective, or however many trades you take within a month or a year, within a year, take 5 trades a day, that's about 1,000. Within a month, I'd say most traders probably take 1-2 trades a day, so max 40 trades, right? 1 out of 40 is not going to affect you a lot unless you have only a small edge or small, tiny profitable system. Then yes, it could have an effect. But even then, one loss shouldn't be a problem. Now it's a problem if you take like 3 to 4 losses in a row, because not only does that have a bigger impact statistically and mathematically, but also has an impact on your psychology and how you view the markets, and you will get yourself really confused and you will stop focusing on the technicals in the chart, and at that point you start just focusing on your emotions and you just take awful setups after that, right? You go in a spiral where you keep going down, down, down. So don't do that. If you take one loss and you know it's an emotional mistake, recognize that, make sure you're present in the moment, and just continue trading your edge. Relock in, focus, train your edge. Here we had an OB on the 1 minute. This is hard to see, guys. I'm gonna delete this here so you guys can see it better. But you guys know I took the IFEG initial entry here, and I took a scale in here. This is basically scaling in. It's not my I want to say scaling in because this is not entirely my scale in strategy. My scale in strategy, I made a separate video on that, and that's basically where the first position goes break even. And my scale in would have been like higher up here if I were to scale in. So that's not a scaling method. It's just me adding on to my position so I get a full basically risk on this trade. But we had a 1 minute OB here from an OB entry model, but look at the risk reward. I mean, it's 2.28. It's still an A+ setup. It's just, again, I don't like to take that. I prefer usually, it's not even that I prefer, it's just that usually the market will give you like 3 risk reward on a good trade. Right, on a good trade that wins, you will typically get 3 risk reward, which means price will typically retrace or give you some type of entry model where you can get that 3 risk reward out of the market. From my back testing, right, I've done back testing on even using static risk reward, and 3R just works the best. Right, has the best combination of your risk reward and win rate. unless you're entering on seconds, then it's a whole different game, because on seconds you can get like absurd risk rewards, like 1 to 7, 1 to 6. But I don't like to trade off the seconds too often, only when they have a small range. And I made a separate video in the course discussing when to use the seconds, and those times that you can use the seconds in those market conditions that I explained, you can catch a ton of profit. But nonetheless, I went on 30 seconds here, and we had a 30-second OB here, so I just took it off there. I should have had a limit order here, but I kind of lagged, I'm not gonna lie. I was a little late in setting my limit order there, so I just market executed as soon as we tapped it, and I think I got my fill around here for about 4 risk reward here. So half my position at 4 risk reward, and the other half was at 2 risk reward roughly, and TP'd about at the week high, and that's basically it. I mean, there's nothing much else to this trade recap that I should really cover in this video. Again, the main point of this video is to explain you can afford to make 1 or 2 psychological mistakes and still end the day green like me. This is I wouldn't say it's a huge green day for me, because it is only, let's see, about 4, because this averages out to 2 risk reward with how my position. The other one averaged out about to 2 or 1, I think. So it'd be about like 3 plus 3 actually, I think. 6. So this is only like a 5 to 6 hour day for me. So not a huge day in terms of my typical standard, but I mean 5 hour a day, if you achieve that every day, that's still 100 risk reward in a month, which is the goal. And the reason why I named the course 100 risk reward, because you can achieve 100 risk reward a month trading the exact system I preach. So yeah, here again, it's just in a 1 hour day, so I completely don't mind. Making 5 hour in 1 hour is good. That's very good. So this is basically trade recap, and later on you can see we just continued higher. One more thing I wanted to point out was, if you just go into daily here, this was my high time frame draw on liquidity. I actually marked this and sent it to the Discord group, like literally like 2 minutes, and then 2 minutes later we hit the draw on liquidity. Like before, we didn't touch the draw on liquidity, and 2 minutes later we had a massive 1 minute candle for the closure of the market, and we just hit that high time draw on liquidity. And this is a very easy daily draw on liquidity, right? We literally we took out daily liquidity right here, which is massive, and you know, higher time frame holds bigger weight. And if you go like on the daily, we're bullish still, guys. We're still bullish. This was just a big mitigation here, really, to take out liquidity, take out sell side liquidity here, to go potentially higher. I am expecting right now, if fundamentals are good, like so far fundamentals have been, actually I think I'd say fundamentals wise with the tariffs and stuff, it's been going better now. A lot of countries are folding and such to the tariffs and negotiating. So I'd say if that continues, fundamentally we will break this high, break the all-time highs. So we had about 16% move right here to all-time highs. Very looking forward to it. If so, we would just get a lot of bullish days with a few bearish ones, and we'll reach all-time highs. So this to me was a very clear draw on liquidity. We reached the potential objective of price. We gave a good reaction on the daily, and all that means is on the daily or any time frame factually, highs are now weak if we're bullish. If we're expecting bullish pricing, highs are all weak. So I was not surprised at all. We did reach a high time frame draw on liquidity. I actually, when I was entering this trade, I was thinking low key of targeting that high time draw on liquidity. But looking at the time here, this is 3:48 p.m. EST. So the market's about to close. And you see this is the 1 minute candle that just straight shot to the high time draw on liquidity, which is absurd. But the market was about to close, and I don't want to hold my trade till like the last minute of the market closure, even though I have a high conviction in my draw on liquidity. I just don't, right? So I took out the trade, I just exited, and I'm pretty sure on funded accounts and Top Step, they have a rule: you can't even keep your position open past the market closure, which is like, was it 4? 4. I think you can actually hold till 5 p.m. I don't remember exactly, but I typically don't even trade that late anyway. This is one of those exception days where I will trade late. Other than that, I typically don't trade this late. I typically trade within the kill zones if I can. But yeah, there's definitely a rule on Top Step where you can't hold a trade to another day. That's the best way to word it. They will just automatically close your not close your account, they'll close your trade for you. But even then, still risky as hell to even, if you have a personal account, it's risky to just hold overnight like that because spread can occur and you don't want to get it spread out. So again, it did hit my high time for on liquidity, but I don't mind missing. I basically profited half of the move. I typically aim for catching at least 75% of the move, but again, you're not gonna be able to catch that all the time. So we'll optimize our systems, but not to 100%. You usually can't do that. It's impossible. Yeah, I'm gonna end it here real quick, guys. That's basically it. I hope you guys had a good trading day yourself, and I'll see you guys in the free Discord if you haven't joined that. And yeah, at 60% and compounding the account. If you have a true edge, the account will compound. Okay, and look what happens now. You go from 4K risk to 6K risk. Now you're talking like 300K a year. Now you compound even further. A few months later, maybe a year, who knows? Depends on how good your system is, how good you are at executing your system. Now you're talking almost 500K a year, almost $500,000 a year just off trading. And then you ultimately end up in the big boy. This is where I talk about the big boy club. The 10K per trade, from my perspective, my opinion, is the big boy club. This is when we're talking real numbers. This is 40. Okay, so sorry, this is not $500,000. This is basically $500,000 right here. 480K a year. Risking 10K per trade. So you go all the way from the making 800 a month to 40K a month. And all you're doing is keeping the same system, but you're just letting time and frequency play out. That's literally it, guys. Like, who knows? This could be 3 years to go from this to this. It could be 2 years. It could be 1 year. I mean, all varies a lot. And a lot of that varies on your system as well. You know, the better your system, the faster you will go from stage 1 to stage 5 or 6, right? Now, let me show you guys something amazing. So if you were not already impressed by going from 800 a month to, oh, what did we say it was? 40K a month, just from a tiny, like, mid strategy, you'll be even more impressed by this. This is just, again, number 2. All you're doing is increasing position size risk by compounding your account. This doesn't come overnight, guys. By the way, what you're looking at right now comes from hard work, sweat, tears, and consistency and discipline. Discipline is also a very big key that I want to emphasize. This year, I told GBT to make a P&L calendar so you guys can understand of basically replicating my system. I think I told it 60% win rate here. You probably had to count 4, 5, 6, 7, 8, 9, 10, 11, 12 out of 20. Yeah, so this is basically GBT at 6% win rate at 3 risk rewards. So I just gave it like the low end of my optimized system, which is 60% win rate at 3 risk reward. Now, look what happens. We're risking the same amount we originally started with in the other system, right? 200 per trade. But what's going on here? Look at the monthly P&L, guys. Instead of 800, it's 5.6K. Now, that may not sound like a lot initially, but don't forget, this is the beginning stages. You're only risking 200 a trade, and you're making 5.6K, which is people's average salary nowadays. And what's the difference here? Well, there's no difference in capital and risk. The difference is your strategy optimization, your strategy's edge. There are better strategies than others out there, guys. People just don't, I don't know why people, like some people are stubborn to believe all strategies are created equal. That is completely false. That's not even how life works. There's people that go to better colleges than other colleges. There's better ranking colleges, better college professors. I mean, there's always something like better than what you already have. And there's always, nothing's equal. Nothing's created equal, unfortunately, basically, for the most part, right? Especially when it comes to training systems and knowledge, it's not created equal. Training my system, you would have made 5.6K instead of 800, training a mere almost break-even system. Now, don't keep in mind, you don't need as good stats as my system. You can literally be very profitable trading that 60%, 70% 1R system and make a ton of money. You just need to let more time go by, and you need more trade frequency, or you just more consistency. Like, it'll just take you a bit longer, but that doesn't mean you're required. So don't always look up and be like, oh, I need to get this, I need to perfect my system, I need 100%, I need a 90% win rate. No, you don't. You can just need a small edge. But for those willing to put in the work and time to take it more seriously to the next level, they can get to levels like this. Now, what happens here? Once we go to scale to 1K per trade, you make 28K a month, which is about like 400K a year almost. And then you guys basically get the gist here. I mean, you double your risk again, you scale, you're making $500,000 a year, you scale again, and you're up to 224K a month, which is like 2.5 mil roughly a year. And then look at what happens. Instead of, I forgot what the other back test data showed, or what the other data showed from the 60% edge at 1-to-1. I have to look back to it, but I think it was $500,000. Yeah, no, it was about $500,000. Yeah. But basically, you can see you go from the exact same risk, but two different trading systems. One ends up with $500,000 a year, and this is. Today, I'm going to be going over how you can pass your funded account challenges or combines within a single day or a single trade. And this does not apply to every single firm. As you guys know, some firms, they require you to have 2 days to pass, like Top Step, which that I heard apparently that may change soon based on what they've been talking about on Twitter or X, but we'll see what happens with that. But nonetheless, this is mainly a strategy to pass combines that give you 1 day to pass. I believe Apex, I think, has 1 day pass sometimes. I don't remember it entirely clearly because I don't trade with Apex anymore. I just trade with Top Step and then my personal live account. But it's mainly for firms that, again, that have the 1 day pass where you can just pass within a single day. You can also use this on 2 day pass firms challenges like Top Step. It's just that it will take a bit, it's a lower probability. And I'll explain real quick the probabilities of why that is. But essentially, I'm going to be showing you guys 3 strategies to pass these challenges extremely fast. The first one is going to be like a normal trading strategy, but the other 2 are going to be specifically geared towards, it's almost like gambling. However, I will say, or it's purely gambling. However, I will say these are fund account challenges, right? And you focus on, remember, these fund account challenges are paper until you actually pass. So for a lot of people, if you're already consistent in your trading, then you don't want to spend too much time on these combines or challenges. Now, I would not suggest this at all. If you're someone that's not profitable yet, or you have not gotten a payout yet, or you don't have a personal account with a good track record, just click off this video and don't watch the rest, because this is not good for you, okay? Because if you pass the challenge, but you're not profitable, you're not going to be able to get a payout, so there's no point. You're just wasting more money and time. So I'll suggest only do this if you already have proven yourself profitable consistently, either through payouts, growing a personal account with a track record, things like that. So yeah, anyway, again, like I said, only if you're consistently profitable. So would I suggest doing this, because all this does is just saves you time in the valuation phase to get and stack more funded accounts to have more capital to later basically get bigger payouts. Now, the first strategy is all you do is literally wait for an A+ setup. So whatever an A+ setup is to you, I made a video going over my A+ setup confluences. It includes many of them, right? You can have obviously being pro external trend. There's waiting for internal liquidity sweep prior to your entry, waiting for some sort of fake manipulation leg to occur prior to your entry, and then waiting for your entry model to occur. So you see people getting stopped out early before you enter. Liquidity sweeps are a confluence in general, like external liquidity sweeps are pro trend. What else did I say? Data wicks, you can use data wicks for sure as a setup essentially to take. What else? There's some other confluences I did mention, internal chain indicators. Those are confluences that will boost that win rate. And just a few other things, honestly, right? Like if you have a combination of price inversing a fair value gap plus an OB entry model, that's higher probability than just an IFVG by itself or an OB entry model by itself. Things of that nature. There's only so many confluences you can really stack up onto each other before you filter out too many trades where you basically end up never taking really a trade or have too low trade frequency. So keep in mind about trade frequency and how you don't want that number to be optimized too low, right? You still want trade frequency to grow an account or get payouts. But essentially, all you're doing is just waiting for an A+ setup that you can guarantee like a 70 to 80% or 90% win rate, and you full port that A+ setup. So let's say you have an A+ setup that you know from backtesting is in 70% win rate. And let's say the A+ setup, for this example, let's just say, we'll just use this trade here. This is, we'll just use this because why not? What time is this? This is 8:30. Okay, this is before kill zone. Okay, not the best time, but you could make it work. Let's say you take this setup here. Again, not my favorite setup. Let me find a different setup actually, honestly. Okay, let's just say you take this setup here, which is the setup I took, but let's say you take this setup. Let's say this is an A+ setup to you based on your backtesting. It meets all your confluences, right? All you do is just basically full port the whole count in terms of you still have your stop loss and TP, right? The only difference is you're just maxing out the lot size so that you can pass the challenge in a single day. So let's say you have a challenge and it's a 1 day pass firm, like for example Apex. I think it's every day, or it's specific occasions, I don't remember anymore, but let's say it's 1 day pass and you need to make 3K, for example, or 2.5K. All you're doing is putting the max number of contracts, and once that 2.5K profit target meets, you just close the trade and you'll pass within a single day, right? Within a single trade, I should say. So it's a very fast way to pass, especially if you have a system that has a very high win rate. Just wait for that, wait patiently. That's the main thing about this strategy. Just wait patiently for that A+ setup and then full port it, and then you make that 3K or whatever your profit target is, and you're done and you pass. Now the other method for this is it's not another method or strategy, it's just an alternative option. Is instead of having your typical TP, let's say your first stop 100 TP for this setup is at the low here. Instead of having this force or TP, all you do is set your exact same trade entry, right? Same confluence, everything, but set your stop loss or your take profit to 1-to-1 risk reward, and then full port that. And if 1-to-1 is not enough, like risk reward to obviously make 3K, then, or your profit target, then obviously you have to increase your TP. But point is, essentially you just full port, and as soon as you get to that profit target, you exit the trade, whether that's manually or you could look at the monetary value and set your TP ahead of time. Once that TP hits, you pass the challenge. And for 2-day passes, this is a problem with Top Step or 2-day pass firms. Let's say your setup is 80% win rate. If you pass in a single trade in a single day, it's an 80% chance you will pass. However, this is how probabilities work when you have when you need to have 2 days to pass. What happens is the probabilities of winning one trade setup with an A+ setup is 80% based on backtesting. However, to win that 2 times in a row, so the keyword is in a row. These are 2 independent events. So if you have studied probabilities, you understand what I'm saying. This is probability of A occurring and probability of B occurring, not that B is given A, right? So essentially what it is these are 2 independent events. However, to get 80%, to hit both times on an 80% setup in a row, you end up with multiplying these 2 percentages in terms of probabilities, and it's a 64% chance of doing so. So instead of having 80% chance of passing, your odds go down to a mere 64%, which is, it's all right, but you want to obviously have a higher chance of passing these firms challenges, right? Especially if you're already profitable and you're just looking to scale with more accounts. Now, this gets even worse when you have also a lower win rate. If your A+ setup is only 60%, your odds of passing is pretty low. It's much lower than 50-50. You're at a 36%, if my math is right here, there's a 36% chance of passing your combine or challenge, because you have to hit 2 times consecutively on day 1 and on day 2. So 2 trades, 1 trade per day. So that is the main problem I'll see here. If you use this method on 2-day passes, it just will have a lower probability of hitting or passing. So now that we got that out the way, let's go to the actual straight up gamble method. This has nothing to do with your trading strategy or whatsoever. This is purely based on news releases. So look for, number one is go to forexfactory.com, look for red folder impact news. Filter it by, there's a filter button. Just filter it based on red impact news only. That means news releases or economic news releases that essentially actually move the market. Because typically orange and yellow folders have no effect or little effect on the candles of how the market moves. Therefore, we don't care about those. We mainly just want to focus on red folder impact, because those are the folders or economic releases that impact the market the most, right? And not every news release or red folder news release is the same equal impact. Some red folder news releases will make bigger changes to the market or alter the market in a bigger way, cause a bigger market move than other red folder news, despite both being red folder news. So what I'm going to tell you guys here is very important. Focus on these specific red folder news: CPI, PPI, FOMC, and NFP. These are basically the top 4 biggest economic news releases that will make the most impact on the market. And you will often go and backtest this if you don't believe me. You will see more often than not, majority of times, these news releases will make massive, big 1-minute candles. And that's how you will pass in a single day on your prop firm challenge accounts. You're relying purely gambling on the news release. Because what happens is news release brings volatility in the market, and not only with volatility, but time, right? You can hit your TP within a single candle. And I'm gonna show an example real quick right here. And I don't want to make this video too long, so I'm not gonna show several examples, but feel free to backtest it yourself if you'd like. But essentially, this is April 10th, Thursday. There's 2 ways to gamble this. And I don't like to say the word gamble in here, because obviously we don't want to be gamblers, but this is, again, like I said, it's just a method of passing them quickly for those that are already consistent. 8:30 a.m. So let's just turn off this indicator. 8:30 a.m. is right here. And what do you see at 8:30 a.m.? We see this massive 1-minute candle. So there's 2 methods or strategies of using news releases. Number 1 is you get 2 accounts. So first method, or it's not number 1 method, this is method number 1, is buy 2 challenge accounts, buy on one of them and sell on the other. This is literally just hedging. So you guys know what hedging is. Very straightforward. But you don't buy or sell after news releases. You always wait, so buy a few seconds, or enter. You can enter maybe a minute before the news releases. So let's say we're here. Let's say we're at 8:29 right here, or 8:28. Doesn't really matter too much, honestly, as long as it's not a huge difference in move and volatility. Let's say we're at 8:28. This was 8:29, right? 1 minute before news. It could be seconds. This does not matter as long as you're buying before news and not way before news. You don't want to be buying or selling way before news, because you have to handle all this drawdown or this period of price action that could just mess you up, right? Mess your unrealized P&L up. You just want to buy basically right before news or sell right before news. You're just hedged. One count is buying, the other count is selling, and you have no stop loss, by the way. No stop loss, because you're just full porting full porting the maximum contracts that's allowed on the firm. And you can set your TP ahead of time as well. So keep that in mind. You set your TP ahead of time. Just set your TP, predefine it is my recommendation. You don't want to manually close. You can if you want. But personally, I recommend just having it predefined, there's no reason to manually close, especially if the news release, what happens is sometimes you have very big, massive wicks that wicks for like 2 seconds and then comes right back down. So if you're waiting manually, you may just miss out on that entire unrealized profit of that wick, and you end up messing up the system. So have your TP predefined on both accounts. You buy and sell on either account. No stop loss, so ignore this position tool. There's no stop loss here. All you're doing is buying and selling separately on each account. So account 1, you're buying. Account number 2, for example, you're selling. 1 minute before news, and boom, as soon as news releases, you will hit TP on one account, which will pass you for when they pass, and on the other account, you will likely hit stop loss. There are a few circumstances where it's a candle where it has wicks on both sides, and depending on where obviously your max drawdown is or your stop loss, since you don't really have a stop loss, it really depends on when you hit the max drawdown amount. You could theoretically hit stop loss on both accounts, or you could even theoretically hit take profit on both accounts, right? So those are the potential outcomes, but typically you're basically almost guaranteed at least you'll pass one, unless you get wicked out on both, but that's a lot less likely to occur. You at least pass one. If you get lucky, you pass both of them because price goes in one direction, goes in another direction. But again, like I said, that's not as probable, because for news releases, what will happen is either it's good sentiment or bad sentiment. So either the news candle will be extremely bullish or extremely bearish in one direction. It typically won't like to go both ways. So it won't like to expand fully bullish and then a few candles later expand fully bearish, right? That's a lot less likely to occur. So that's method number 1. Method number 2 is all you're doing is, so if we go back here, you're putting a buy stop and sell stop. So if you don't know what that is, you just look it up. You can learn it real quick. You put a buy stop and a sell stop. And this is, instead of on 2 accounts, this is on 1 account. You can do on 2 accounts, it doesn't really matter. But this is for, I guess, firms that don't support or don't allow you to hedge. Some firms don't allow you to hedge, right? They don't allow you to buy or sell on separate accounts. So at the same time, so for this method, all you're doing is on 1 account, you just have a buy order there for buy stop, and you have a sell stop here. The number like price points away. This is something you kind of have to roughly estimate. No one knows exactly how big the candles are. You just basically put them at the exact same distance from current price. So if this is like 0.44%, you'll keep this sell stop at about 0.44%. So probably down here. And again, no stop loss here. Same situation as always. You're basically full porting max contracts on the sell or buy stop. So you have both these set, right? And what happens is once news releases, this one probably won't hit because we already saw what happened, but news will basically hit it will basically hit one of these sides. So we either go full on bullish or full on bearish majority of times. So you'll make money on the bullish move, or you'll make money on the bearish news move. And what happens is this is a higher probability chance of passing than hedging, because like I said, news releases are typically one directional. So what I mean by that is you're not going to take a loss and a win. You're likely just going to take a win, because you will hit you basically, if news is bullish, it will activate this trade. Otherwise, if news is bearish and you get lucky where it doesn't wick the other side and it goes bearish, it will likely just hit the other trade. So this is a higher probability chance of passing your account, your profit from account, but it's not a guaranteed chance like hedging where basically one can at least be guaranteed to pass. This is a lot higher probability passing this one account for those that don't support hedging. So that's basically the gist of this video. Just going over 2 methods plus 1 method, which is a straight up full porting and A+ setup. These are ways you can pass your profit challenges next time within just a single day. or if you're on 2 days, unfortunately you have to do this twice. And the probabilities, like I mentioned, instead of, for the hedging, it's a 50-50 odds, right? Instead of 50-50, if it's a 2-day pass, you're at a 0.25. So you had 25% odds of passing, so it's a lot lower probability. So just keep that in mind if you're gonna do this on 2-day passes. So yeah, that's it for me, and hopefully this video has helped you guys figure out basically how to pass these and take advantage of these prop firms fast to scale up your capital if you're already profitable.
Yo, what's going on, y'all? We are back with another trade recap, and I'm recapping essentially Thursday 25th of July. Okay, this day I actually passed another prop firm challenge on this day, so you guys can get to see the exact trades I took that basically passed my prop firm challenge phase 1. So this was the day where I passed Funding Pips phase 1 prop firm. Okay, so for you guys that don't know, I trade for, in terms of prop firms, aside from my personal account, I mainly just focus on Apex Trader Funding, which is for futures, as well as Top Step, which is also futures. And then the last company that I'm funding with is Funding Pips, which is for Forex. And futures and Forex, the companies work a little bit differently, so I prefer to diversify my portfolio amongst them in case something goes wrong with one firm or they shut down. So that's why I'm continuing to pass these accounts, getting max allocation, just to be safe in case something occurs with one firm, right? And of course, again, always focusing on the personal is a very good idea. Okay, prop firms are just more of a risk-free type of way of making money for me, because of course on a personal, I am risking a big amount of my own personal capital compared to a prop firm where I'm paying very little because I know I can pass these challenges fairly quickly. Like this challenge I basically passed in 3 days, right? The first 2 days I just took random small trades, okay, just to meet the criteria for the minimum number of trading days. And then the third day, or I think it was the second day, or this day basically, I actually took trades and basically got the profit threshold, right? So I'll be going over those trades, and this day it was just on gold and euro. So let's just go, we don't even need to replay tool this real quick. You guys can see how gold was looking, okay? Now for analysis, if you guys get really confused about the daily, 4 hour, 1 hour, I suggest to just stick with the 15, 5 minute, 1 minute. That way you have 3 time frames to cycle through, which is your higher time frame 15 minute, middle time frame 5 minute, and then 1 minute as your entry time frame, right? Aside from, instead of having like 6 different time frames, for me daily I don't use much. I only use it for daily bias as well as timing my trades in case, for example, if I'm expecting a bullish expansion, I will be buying below the true day open and TPing at the expansion of the daily candle if it's reasonable. But on this day, we had the 15 minute being clearly bearish, okay? So that was my analysis going into New York session. I was basically looking for sells, okay, to short gold. Try not to counter trade, okay? If you want a high win rate and maintain a high win rate, always trade with the pro trend. And clearly it was bearish, right? You guys can see, if you can mark these breaks of structure here, right here, okay? This is a complex pullback right here. This is technically very ranging price action, so we had consolidation. And for you guys that know, this is also AMD, accumulation, manipulation, and then we had our distribution in a pro trend. So that's what happened here. This was just a complex pullback to mitigate something in here, which we had imbalance here that we mitigated, and we took out liquidity to then drop down and create a new low. So we were bearish clearly on the day, and I couldn't really find too many setups here. Price was like, I don't like these market conditions. When the conditions like this, where price is delivering like this, it's not favorable to me, okay? In terms of how price is delivering. So I didn't take any trades within here. You guys can see it was just very choppy delivery to my POIs. We want clean impulsive moves to our POIs, not choppy delivery holding structure. So later on in the afternoon session, we still had good price action here. We had good volatility here, and this is much cleaner than what was happening here, right? We had an impulsive clean move down and somewhat of a clean move up. So right here on the clean move up, what I was seeing is, obviously, I marked this ahead of time. This was inducement here, okay? Because why? We had a small pullback that created internal break of structure, and this pullback did not come back to the origin. So we call that as inducement. We took out inducement, and then here, as soon as we take out inducement, we had a reaction here. And in fact, here, I'm not too sure if we created inducement or took it out, or if we actually created equal highs. But on the broker here on OANDA, you can see we created equal highs, okay? So when we create equal highs, this is acting as liquidity. So you had OB entry here, right? If you counted this as a sweep of this inducement, me personally, I did not, because it's not clear to me whether or not even took out the inducement or not. It could have just made equal highs. So this clearly was liquidity here. I waited for that to get swept here, which I did. And then we looked for origin. This origin I found on the 5 minute. If we go to the 5 minute here, 5 minute, we had an origin right here. Okay, I marked this as origin, and now I refined obviously on the 1 minute to this right here. Okay, this is two OBs here. First one, second one. You can mark this whole thing, both of them included if you want, because we're waiting for confirmation entries anyway. And we did. We entered my OB, waited for confirmation, body closure below the inverse fair value gap. I entered stop loss above the high, targeting the week low. We had a 2.5 risk reward here, not bad. If you wanted best risk reward, you would have waited for a retracement to this OB entry here. I teach you guys, this was a buy to sell here as well. If you want to refine it even further, we had a buy to sell here. Look how exactly how price wicks it. We tap into it, and then you would have had a 6R trade instead of a 2.5 like me. But sometimes I like to just catch the trades and not miss out on the move. So you could consider that kind of FOMOing, but this is not FOMOing because this is still a valid entry model here for us, right? It's just not a high risk reward entry model. FOMOing would be like entering down here, right? With no really true setup criteria and just hoping for the best, hoping that your stop loss doesn't get hit in the middle of the range, because in the middle of the range, we like to sweep liquidity, right? So you want to be careful there. And if you had your stop loss, if you had FOMO up here, this is just one risk reward, not worth it to me at all to even take the trade and take on that risk, because the risk reward is not there. But if you took the buy to sell here, OB, you could put your stop above here or right above the buy to sell. This is where you can make up business decision basically, whether you want to take the OB, entire OB, or the buy to sell. If you take the buy to sell, 11 risk reward, insane, because this trade only lasted what? About 20 minutes. I journaled this as well, of course. Okay. And it hit TP.
The results,
and if you want, sometimes when price is trending extremely heavy, you could even extend your TP. But me personally, I don't like doing that. Why? Because let's say you were in a short here. We had an OB entry here also, actually, which is pretty clean. I didn't take it. But you can see how as soon as we took out the low, we reversed. And this is not favorable. I hate when price takes out the low, and this does it very often. And it immediately creates a reaction as a pullback, because as soon as we take out external, we expect price to come back to internal for the pullback. And that's what happened here. And you really don't want to be holding all this unrealized profit, right, being diminished, right, coming back close to your break-even point. It just sucks. So I'd rather just take my 6R and call it a day. So that's what I did here, call it a day with 2.5R. And if you really want a TP, you would look for a higher time frame zone, which right here, out of 15-minute POI, right here. Refined, this was originally a 4-hour POI, but 15-minute OB right here. This is very important. Why? Because this demand caused this huge external changing character or external break of structure. So very important zone here. And you can see what happened later was price eventually reacted to the upside after hitting that high time frame demand. So this is why it's important to know that trends will trend until it stops trending, right? Because these trends will not go on forever. Price will not continually do this and this and this, expect perfect price action for like several days, okay? It will not last that long, and you have to understand when a trend is gonna reverse. And in this case, this would be the high, okay? And we made a changing character externally to the upside here. So you can see what happened later. Price clearly went back up. And we can even anticipate this, right? This is when price reaches this demand here, you can anticipate price to create this changing character here ahead of time. So you could even take buys here, OB entry here, to take out that high that used to be strong and we are anticipated to become weak. But this is lower probability because you're not waiting for structure confirmation. You're instead anticipating it. So something to be careful of. But if you were short here, I would not be targeting something crazy, knowing that we're close to a high time frame demand. So trading again is like a puzzle piece. You want to put all the puzzles together in your favor. So 2R there on gold that day. And let's see, let's go to Thursday on Euro. Thursday on Euro, I was bullish. Why? Because we made this external changing character here to the upside, which clearly could also be a pullback. We were kind of on a higher time frame in this range. As you can see, we are stuck in this range right here, really. Not much very trending structure. But on the 1 minute, for our 1 minute swing structure, we made a change of character. That was very strong. Body closures above, right? And if you guys don't know, this is why time is important. This comes from experience, okay? Typically after kill zone times, depending on the asset, they have different timing. But for Euro and gold, it's pretty similar. After a kill zone ends, typically price will create smaller ranges and it's not going to be as volatile. So this huge move up here, we're not expecting a huge move down, right? Quickly. Okay, there may be a lot of new ranges being created before this move down later. And that's what happened, right? I noticed we created our afternoon session range, which is right here. We had a range right here of high and low, okay? This is something more from experience. And I took this trade here off this origin right here. So this origin right here, OB. You can even mark the entire structural zone as an OB because this is our structure. Typically for OBs, you want to mark it with the structure, but right here, our OB here, we don't mind this closure below the OB because we know this entire area structure is demand. So we're fine. We had as you can see, we had a fair value gap there. If you guys can't see it, right here. That's why I have my POI indicator, because this indicator will show these small miniature demands, or not demands, but OBs, right? It doesn't mark the fair value gap. It marks the OB, which is what I teach you guys to focus on. Again, my indicators I'm selling right now, they're going to be charged monthly now instead of a one-time fee. So if you guys find it useful, then you guys can definitely keep it. If you don't, then you don't have to keep it. I have a free trial for 7 days as well for those that are interested in trying out before you want to commit to monthly payments. But right here, OB entry, limit order right there, stop below the low, 3R, targeting the weak high. Boom, internal break structure. And then we had another internal break structure here, right? So what happened here is we were making internal structure to take out this high. I was expecting this high to get ran because we were still bullish. Right here, we tapped into a flip zone here. Okay, this used to be strong supply that turned into demand because of how strong we created upside. We displaced very heavily. So I was expecting this high to be weak. This is a weak high. And so I was basically trading with the trend here. Okay, we took out the internal break. That's why I target the external, like I tell you guys. I try not to target far, because if you targeted here for the external break, you almost hit break even here if you move to break even. With spread, you might have missed, you might have hit break even here, and you would have just wasted 3 risk reward or 3R in profit. And so I waited again. We had a nice miniature flip here internally, right? We had a supply, we broke up, we held this new demand flipped this previous supply. This is our flip zone right here. And our origin was down here, by the way. We just missed it, but we tapped into the flip. I had a limit order here, stop below the low. I don't teach you guys, remember, don't put your stop right below the low of the OB. If you're sending a pure limit order, always give it breathing room. I had it around here. Give yourself breathing room. Different assets, you want to give it different breathing room. That's all based on your data collection, as well as your experience trading that asset, because different assets move different amounts in terms of volatility. And here you could target the external break here, but I targeted previous day high. And then later you can see, as soon as we took out previous day high, we made the retracement in the afternoon session back down. So let me show you guys what I was seeing here. This was cashing a daily candle expansion. So this is something pretty cool. I typically don't incorporate daily expansion into all my trades, but when I see it occur, I will take advantage. Let's see right here. This break structure I marked here, remember this was our target originally. This is the previous day high, right? And why was I targeting that high? It's because I was expecting bullish delivery. Why? Because we had a 1 day or daily demand here, daily OB. This is a daily POI, and you guys know daily POIs hold a lot of weight. Now this is a very big zone, okay? You would want to refine this clearly on a lower time frame, but just know we tapped into daily demand and we are actually bullish. Okay, we take out the previous high, and I'm expecting us to be bullish for maybe 1 day. Why? Because technically this demand here is way too high in the leg. This is the daily candle swing structure. We are too high up in the leg. We're in premium. I'm expecting Euro to do a pullback and then come down lower to this demand here to mitigate. And so keeping those things in mind, you don't want to target too far. So I targeted the daily high, right? Previous daily high. And that was a nice 6-hour trade. And here I could see using candlestick time theory that teaches you guys open, low, high, close, open, high, low, close. We were expecting bullish delivery. So open is here, true day open. I added this recently to my indicator so you guys can show previous day high, previous day low, and true day open, right? And then you can feel free to customize to whatever you like. True day open, okay, we opened low, high, close. Okay, this was a very bearish close, by the way, because we didn't close with a body engulfing above. So very bearish close, but we were bullish. So I noticed we already created the daily wick at this time. If we already created the daily wick and we're bullish, we're expecting price to expand to the upside and likely take out the high. And that's what we did. So we already created the wick. Let me see if I can draw exactly where this wick creation was so you guys can understand. Let's see. Okay, right here. This was the true day open at 5-ish. And then we right here, from here to here, we created the wick. So this price action on a lower time frame created this wick of the daily candle. So you guys can see a daily candle wick looks very small in the daily time frame, but it's a huge move on a lower time frame, right? You can see that we had a lot of movements to the daily time frame. So this all here was the wick of the daily candle. And then this right here, the rest was basically the body, and then we created the wick. So after we really created the wick, I'm expecting us to just have bullish delivery to the previous day high, and that's what happened. So Euro, we had 9R risk reward, 100% win rate this day. And then gold, I had 2R, 2.5-ish R here. And that basically made me 11% on my challenge, and I passed. So that's basically it. You can pass these challenges depending on how many trades you take, how many valid setups there are, in not too long of a time frame. You could pass in 1 day if you really wanted to. Certain props have different rules though. Funny Pips, it's a 3-day limit, so you must trade idly for 3 days to pass. But what I'm saying is you can definitely reach your profit targets of 10% or whatever in a single day. As long as you're trading properly with context, right? Everything revolves around context and trading. That's why bots tend to not outperform humans, because our brains can put together context and experience while bots cannot. It's extremely difficult to program a bot to put in all these confluences together. It can definitely mark out like what I do. I made a bot, or not a bot, an indicator. It could definitely mark out my daily bias off a mechanical system. It could definitely mark out my zones. Okay. It could definitely mark out my zones. And it can also mark out my kill zone sessions, things that are very mechanical and set to the point. But it's very hard for a bot to put in experience and everything together. So again, that's it for this trade recap. Hope you guys did learn a lot. This is basically how I passed my profit from challenge from Funny Picks in a single day. So take some notes. Hope you guys did learn something. The next video I'll probably make is going to be something I want to talk about in terms of fractal market and timing as well. So yeah, hope you guys enjoyed this trade recap and have a good week. Today I'm going to be talking about why you always find yourself getting stopped out by a tick, a wick, or whatever price action is going on. You always find that you're getting your stop loss getting hit and becoming liquidity prior to the move actually going towards where you originally were setting your TP. So that's exactly what we'll be talking about in the rest of this video. I'll be giving you guys specific reasons and ways to potentially avoid in the future losing money on stupid trades where you're... Welcome back to another video.
Got a lot of fans. I've been saucing. Got a lot of fans. We ain't checking in no bag, shopping when we land. Big FN bag of ball. Beat the field if I get caught, they talk. Came through dripping on them, I've been saucing.
Hey, so how's it going, everyone? Welcome back to another brand new video on this channel. It's me, JJ Trades, and today I'm gonna be talking about and giving you guys the best tips on how to simplify your trading. I know a lot of traders, they're thinking trading is very complex and complicated, which to an extent is true, but things that become complex and complicated later become simple if they're truly efficient and actually useful. If it's not useful, it's gonna stay complex and confusing forever, unless you put in the work, of course. But even then, you want to keep your system as simplified as possible to you after obviously building that screen time. If you haven't built that screen time, don't blame something for being too complex. So let me give you guys a step-by-step guide right now, exactly how you can simplify your system or simplify trading for someone that's new. And this could even apply to people that have been trading for years that have found no success, which sounds crazy to me. Because if you find the right mentor, like I have mentorship in a private course, and I got students, funded very fast after taking a course in mentorship. But again, like I mentioned, if you don't have someone like that, you need to be pushing yourself to excel and be disciplined, follow your rules and system, but most importantly, have a system that actually works. If you don't have something that's back tested, you have no data, stop trading. Do not trade live. Do not put any money in your account. It doesn't matter how much money you lose. You're going to be wasting your time unless you have something that's solidified, that's proven to work, backed by data. So the first thing what I want to do is to simplify your trading is to do not do partials. Now, I've seen a lot of SMC traders online. They love teaching about partials, this, partials, that, especially if you trade like IFVGs, they do partialing a lot. And I know when they partial at internal highs, right? Internal highs, or they break even at internal highs, or they partial after a certain risk reward. Do not partial. If you want to simplify trading, do not partial. Have only have a stop loss TP, have one stop loss, one TP, and maybe a break-even system. And if you want to keep it as simple as possible, which is known as set and forget, you won't have a break-even system. But to keep trading simple is you wait for your setup. So whatever your setup is, I don't know what your setup is. You have to tell me what your setup is, but make sure it's working. If it does work, then perfect. Instead of taking partials, let's say where you partial here, partial here, partial here. If I used to have 4 partials, guys, I know what I'm talking about because I used to do this, and we're still working. Don't get me wrong, but I was not getting anywhere close to how much I understand the market now with confidence, as well as how much more profit I'm making on my winning trades. Not in terms of monetary amount, because obviously your trading account compounds, but I'm saying in terms of risk reward, relative risk to reward on every winning trade is a lot higher. It's maybe almost double the amount because I'm not partialing at these levels here. Instead, I'm fully TPing at one area. For example, full TP here. Let's say I was trading this full TP at $5.7 instead of taking half off here and then half off here and half off at this high, right? Stop partialing. And a lot of people that that partial randomly also partial at random spots, in my opinion, they're scared. They're trading off FOMO or fear, and they're trading also off emotions, which is not how trading should be. It should be just fully backed by data. So that's personally how I view it. It's a statistical game based upon probabilities that you already set in your favor. That's what it is. You're the casino when it comes to trading if you have a system. If you don't have your system, you are the player, not the casino. You're not the house, right? We want to be the house in trading. Otherwise, what's the point of doing this? The point of doing this is to make money with a positive expectancy. So that's the point. So do not partial. Again, if you want to simplify trading, have an entry, a stop loss, and a TP. That's it. Once you patiently wait for a setup,
You enter with the right lot size, right, or contract size. Make sure risk management is on point. Risk management should be the easiest part of trading, right? You should be risking the same percent for every trade. And make sure that your risk percent is not too big so that you can endure losing streaks, because losing streaks happen for every single trader, every single system. No matter how high your win rate, you will have a losing streak, but your win rate will determine obviously how much your losing streak will be. I do have something in the free Discord server, link down below, of like an image in the free trading resources tab where I have a lot of stuff, but I also have this image of the probability of you losing maybe 3, 4, 5, 6, 7, 8, 9, 10 times in a row. Gives you percent probability of that along with the win rate that it's aligned with. So for those that are interested in that, check out the free Discord server. I have literally an image of it. You guys can just download it onto your computer or look at to help you determine how much you should be risking per trade. But yeah, all it is entry, one stop loss, one TP. That's it. That's how you simplify your trading. I can end the video right now if I want to. That's literally the point of this video. Don't do none of that random partial stuff all the time. If you want to include break even, include break even. But if you really want to simplify it, which is the point of today's video, no break even there. And that's it. And a lot of new beginners, I noticed what they have struggled with is holding through trades like this, where price is going in a lot of profit and going against them, and a lot of profit going against them. Like for example, I took this trade on my combine. Literally, I made a video on this on episode 2. I took this trade holding through this hour long of basic price going against me, just go back in my favor, right? And I held it without any issues. Even looking at the chart, I was like completely fine, because experience. I've seen this happen so many times where it just goes back in my favor. I know this is all manipulation to fake traders. And then what happens, a lot of people that close out of emotions, they just close here. And then as soon as they close, they short here to take another loss anyway, even though they could have just held their original position and made much more progress, right? Trading is about making decisions that are right and smart decisions, not about how much effort you really put in when you're trading live, that is. Obviously put in effort when you're trying to learn. That's important. So that's basically the gist of this video. Hope you guys did enjoy, and I'll see y'all in the course of mentorship.
Got a lot of fans. We ain't checking in no bag, shopping when we land. Big FN bag of ball. Plead the fifth if I get caught, they talk. Came through dripping on them, I been saucing.
Do you really want to learn how you can lock in this year and learn how to make 100K every single month, and then eventually become a millionaire making millions every single year with just prop firms? Because if so, that's exactly what I'll be diving into in today's video. I'll be showing you step by step on how you can make that a reality in 2025. I'm first gonna show you guys my website here, which talks about your strategy. So you want to make sure, before I even get into the statistics of everything on how this is possible, you want to make sure you have something that works. Make sure your strategy, put in your win rate that you backtested or live trade with, put in risk reward, and make sure this number turns out green, above 0, and make sure it is at least 0.40 expected value. So if you have a 70% win rate at 1-to-1, it is 0.40, which is good enough to be making this possible. But again, the higher the expected value, the better for a trading strategy. But after you finish that, we'll be diving into how this is possible using funded accounts. All right, so I am here in TradingView, and I'm gonna be here to show you guys the step-by-step roadmap of how you can get 100K a month off just one prop firm. Today, we're gonna be using TopStep as the prop firm of our choice, and all you need is one prop firm. You don't need all these different types of prop firms that you see everywhere that are releasing with good pricing, things like that, good rules. You just need one reliable firm that pays out, and that's going to be TopStep for today. Again, I am not affiliated with TopStep. This is my personal recommendation based on how fast they pay out, as well as the amount of freedom that you really have with these accounts and the rules. So for TopStep, you can have up to 5 max accounts, and each account can be up to 150K. So you want to pass these TopStep evaluations, or the combine they call it, within your first week of 2025. Try to pass all 5 within a week, but if you can't, that's completely fine, right? Take your time. It depends on where you are in your trading journey. But for me personally, a week is good enough to build to make their profit target, which is about 10%, depending on what you're obviously risking per trade. But I'm gonna say 10 risk reward to pass their combines. And again, the faster you pass the combines, the faster you'll be able to get to the real account to then start making actual payouts. And the thing is, with the live account or with their real account, for example, you can just copy trade your combines so you can get there faster. So for example, if you have, or once you have 150k, 5 of these 150k accounts, you will have 750k in total capital. And we're not going to go based off this capital number because everyone knows what's important is the drawdown. So each 150k account has 4.5k drawdown, if I'm not mistaken. 4.5k drawdown for each Top Step account that you're trading with. So we're going to use this drawdown as our capital to determine our risk management for this journey. So that's exactly what we'll be doing today. 4.5k drawdown with 5 accounts, we will have 22.5k drawdown. So across max funding on Top Step, you will have 22.5k drawdown after passing all these combines when you're trading the actual account that you can make payouts from. And with this drawdown, let's say you want to have your risk management set at 10% of the drawdown. Each trade you can risk about, we're gonna put it at 2k per trade. That is your risk per trade for this plan in 2025 to make 100k a month. And for this risk management system, after about, roughly about, I know it's about 11 trades, but after 10 trades, after including commissions and spread, it's not gonna be that much, but we'll keep it at that. After 10 losing trades in a row, the account is blown. So this gives you wiggle room and to make some mistakes and still come back and save the account. After 10 losing trades in a row, the account will be gone. But until then, you have your account. So this gives you enough wiggle room. Again, this 2k per trade is not risked on every single account. You're not risking 2k of every single account because every account has 4.5k drawdown. What I mean by 2k per trade is you're gonna be copy trading 5 of these 150k accounts, and each one of these accounts, adding up the risk total on every account, is gonna be adding up to 2k per trade. If you want to really dive deep into this, right? 2k, you can divide by 5. You roughly have about $400 of risk per account. So just keep that in mind. Each account, you're risking roughly 10% of that account's drawdown. So about $400 per account times 5 accounts, you have 2k risk per trade total on the line when you're copy trading. So that's another key thing. Make sure you're copy trading because Top Step X especially has a very nice copy trader tool that is free, by the way, that you guys should be taking advantage of truly. And you're able to copy trade with very, very minimal latency. There's going to be basically no delay between copy trading these accounts. And so you'll be able to have 2k risk floating per trade when you copy trade every account and take every trade. So how to get to 100k a month? That's our goal. This is our goal. So I'm going to be putting this actually on a separate page because now you guys know the rule or what the first steps are. Now we need to know how to get to 100k per month. The first step is to have the accounts, obviously, which you guys already have, 550Ks, and you want to be max allocated on Top Step. So I'll just write this out real quick, 750K with basically 22.5K drawdown, copy trade all accounts, total risk per trade for risk management is 2K per trade. And to be able to make 100K a month, you need to make 50 risk reward. You need a working system to make 50 risk reward per month. So you need to do your back testing. Make sure you have your back testing done. If you already have that, that's great. Check your results, see your numbers in terms of risk adjusted returns, see if it is close or near 50 R a month. If you're able to net 50 risk reward per month, this equals 50 times your risk. So your risk is 2K. So you'll be able to make 100K a month by making 50 risk reward returns per month, copy trading all 5 accounts. That is how you can ultimately get to the goal of making 100K a month. And what this ultimately becomes is 1.2 mil roughly per year, because 12 months, you'll be making 1.2 mil per year. This is literally the outline right here to get 100K a month achieved in 2025. This is very possible. Take your time passing those combines. If money is like a big thing to you, you don't even have to start off with 150K accounts. You can even start off small. Maybe just trade 150K account, get some payouts from those, and then reinvest your money, right? Be smart with your money. You're the best person that knows where you are in terms of the position of your trading, whether you're profitable already, whether you've already proved yourself that you're consistent. If you have, then you can go straight into buying 5 accounts, copy trade them all, pass them, trade them, make 50 risk reward a month, and you'll be at $1 million a year. Now, obviously, the main thing here is not just money, but the main thing really is a lot of people cannot make 50 risk reward a month. And some people would say this is unrealistic, but I'm telling you, it is definitely possible. It is possible. And I'm personally vouching for this. It's possible because I have my students, one of my students at least, he's shown me proof he's made 150 risk reward in a month. So keep that in mind, 150 risk reward in a month. So he's tripling these risk reward numbers I'm setting for you guys. It's just that a lot of people, they don't have a good strategy that performs very well. If you don't have a strategy that performs very well in terms of your win rate and risk reward and your expected value, then it's not going to be very good for you, right? You want something that generally has a very good expected value and good really risk reward return. So that's why finding a very good strategy, which is what I teach in my course and mentorship, is crucial to be able to achieve this. Or maybe you do your own research and maybe you find something for free and that is close enough to 50 risk reward a month. But again, that's going to take you a lot of digging and research, and I don't even know if you'll be able to find it for free online, because a lot of the really exclusive stuff truly is in paid education. Just like a degree, it's the same thing. You're not going to be learning all the things you learn in a degree, traditional degree, for free online. So keep that in mind here when it comes to trying to find a strategy that makes 50 risk reward a month. Okay, my system is able to make 100 risk reward a month, but again, I'm trading my personal account majority of times nowadays, so I don't need to be using this to be making 100K a month easily. Okay, I could do that on my personal, but again, just showing this for you guys to set more realistic expectations of 50 risk reward a month. It's definitely achievable for sure. And I'm gonna real quick switch to my website here so that I can show you guys something real quick. So my website here, if you go down here, you go to Prop Firm Earnings Calculator. Let's put in your total capital. Your total capital will be 750K for Top Step. Now the thing is, your max drawdown for Top Step, like we said, it is not the same as Forex. It's not gonna be default 10%. It's gonna be 22.5K of 750K. So your max drawdown is about, I don't think I'm calculating this right actually, hold on, 33. All right, let's see average gain per month is how much the returns are of your strategy. Again, the better your expected value, the more R return you'll have. Maintaining a solid risk management system. A number of trades you'd like to lose before blowing an account, that's going to be 10, right? You're gonna have around 10 trades that you're gonna be losing per month. Okay, so give me 1 second here. I'm gonna be doing my calculations. These are even right. All right, so we're back, and basically I did my calculation a little bit wrong. It's actually basically 3.3%. We're gonna keep it at 3% as max drawdown. For this is about 22.5K of drawdown for 750K of capital at Top Step. And number of trades you like to lose before blowing the account to hit the max drawdown is gonna be 10, meaning as long as you're able to maintain not losing 10 trades in a row, essentially, you'll be able to keep the account live and it'll be likely in profit with a working system. And average R gain per month we're targeting is going to be 50. So let's see what happens. You can risk probably 2,250 per trade, like we said, around 2K per trade. This is a calculator that I basically just programmed real quick for you guys to use for free. Anyone can use this just to have you basically outline roughly what you can expect, right? So what you can expect after what I just mentioned about how to hit 100K a month is daily you'll be making an average 5K a day, 28K a week, 112K a month, and yearly you'll be at already over $1 million. So after watching this video, I hope you guys will know now the statistics and the math and the effort and work you need to make from now on throughout 2025 to be able to reach these goals. If you already have, again, something that works, something that has a 50R gain per month at least, follow this risk management system and you'll be on your way to be making 100K a month. I know it sounds crazy, but honestly it's a lot simpler than you think if you simplify it down to what I showed you guys in today's video. Again, the main thing is really having a working strategy. If you have a working strategy and good psychology, you'll be able to make this possible. So if you don't have something that really works very well or doesn't have great risk reward returns, one thing you can try for free, I'm gonna tell you guys, is increase the number of sessions you're trading. So if you're trading just New York session, try to trade 8 a session as well as London session. This increases your trade frequency. And I'm not saying to force trades, but rather you're following the same strategy. You're increasing the number of trades you're taking, and therefore you're able to make more potential risk reward per month. And if you're following the same system you have, just trading more sessions. Now, this does expose you to also more risk in terms of the losing streak, but doing the math, if you do a statistical calculator you can find online, a Monte Carlo simulation, you'll be able to see what your average losing streak would be over across that number of trades. So just update that and see how well it works. And just remember, trade based upon probabilities and something that generally works. If you are interested actually in something that does work, check out my website right here. I have the course and mentorship ready for all of you guys. Released it. So we have the 101 private 101 mentorship. It's currently 50% off along with the advanced course. I'm looking for people that are really interested in changing their life and learning something that can make those 50 risk reward per month returns on average, right? And of course, I have two other things that I do offer. I condense the indicators into just one package now that includes all 4 indicators, right? All in one, really. And this is monthly, $99 a month. This is the journal. If you are interested in seeing exactly all the trades and all the data that I'm collecting when I'm backtesting and live trading, you can see the exact trades I'm taking through my trading journal, lifetime access. Again, this is not going to be signals here, but rather past trades I've taken. You'll be able to see the chart and everything there. And then you have the course here. This is the thing majority, I would say probably 99% of my viewers buy that are making these great returns. They get the course, they learn on their own, they ask me questions after they finish the course, and they start implementing these strategies. And again, this is everything that's included within the course. There's a lot of information, ton of content. I put in a ton of time really personally into making this course. Really hope you guys do enjoy. It's likely going to be my last course ever that I'll be making. It's going to be like the final edition because, you know, everyone improves as a trader over time. I used to have another course which was much cheaper, but I've just continued that just because it doesn't have the most up-to-date information. And I want to provide you guys the most up-to-date information as well as the most optimized system that has the best win rate and risk reward. And that's it within an advanced training course. And then one-on-one training mentorship, again, this is basically including everything that I'm basically offering as well as one-on-one private sessions. So, and hope you guys did enjoy. Thanks for watching and check out the free Discord server down below. The higher your win rate will be.
Got a lot of fans. We ain't checking in no bag, shopping when we land. Big FN bag of ball. Plead the fifth if I get caught, they talk. Can't do dripping on them, I've been saucing.
Today, I'm gonna be discussing how you can drastically boost your win rate with this one little simple trick. This is mainly for people that have a low win rate but a high risk reward system, or you're just not satisfied with the win rate you're getting right now, or you don't know where to target when you're trading, and so you get really confused and you have really unrealistic RR. Now typically you guys know risk reward ratio and win rate are typically inverse. The higher your risk reward, the farther your targets are from your entry, the lower your win rate will be. The closer your target is from your entry, the higher your win rate will be. And that's just naturally how it is based upon mathematical principles. For example, instead of someone, let's say you're someone that takes a high risk reward trading system, maybe you target this off this IFEG. For example, if you know, you know. If you don't know, then you can probably look this up for free on YouTube. But I do also teach it within my course. It's just one of the entry models, but it's not an entry model I like because the risk reward is very poor. The entry model I would use in this case would have been about like 7 risk reward, right? So it's almost double the IFEG entry model risk reward, but you know, it is what it is. Right? So rather than having your typical targets based upon price action or based upon a flip or an origin or liquidity, right, which is what a lot of people target, have and change your trading system to either incorporate a break-even method. So let's say you want to break even at a higher low. So maybe we can break even at this internal changing character right here. You could break even. In this case, you would have got hit out at break even, which is fine. This is part of your trading system. You should be back testing this as well. You don't want to be just blindly following what I'm saying. You want to make sure that it works well with your trading system. And preferably, this is good for people that already have a profitable strategy that's mechanical enough. But if your strategy is not mechanical enough and it's not profitable, this low-key could make your strategy also profitable, because maybe it just is highlighting a weakness that you just don't completely understand where to really set your targets when you're trading. And that's completely fine, especially as a beginner, right? This is something you definitely do need to work on. But again, there's two things you want to incorporate, or you can incorporate both. So break even aggressively and targeting 1R static. And you can incorporate both, right? You can break even here, and let's say price never hits you out break even, rather than targeting maybe something up here or somewhere farther that you typically target with your lower win rate system, you just target a static 1-to-1 risk reward, and you let math play out and carry your trading account. So you can either have, again, your target at static 1 risk reward, or target somewhere very close based upon price action. So again, you could be targeting an internal high or internal low, depending if you're shorting or longing. But I'm gonna give you guys some examples today. So let's say you want to incorporate a system where you target static 1-to-1 risk reward, okay, and you include break even at the internal training character. Okay, so let's say you take a trade off here, right? And I don't know what your entry model is, guys, but let's say you take an IFUG entry model right here, off here, and instead of having, let's say you usually target here, right? This is also a valid target here for me, right? Let's say you usually target here for your trading system, and eventually we get to it, but until way later. And typically this is because we took out high time frame liquidity, external liquidity. That's what happened here. So I would not be targeting that low. But let's say you were someone that was trying to trade a continuation here, targeting that low, and obviously you get hit out at break even, if not a stop loss, if you just set and forget. So instead of doing that and having a loss here, given you have a win, incorporating this break even and win rate trading system, where you found a break even point based on price action. So let's say you break even here. Well, in this case, you actually do indeed, unfortunately, price does hit your break-even point, and a mini hits your break-even anyway. So this would be a break-even trade, but your target would be a 1-to-1 risk reward. So in this case, rather than your typical trading system targeting here, you have a winner here. So you have two wins here instead of having this is probably going to be a break-even and a break-even. So you'll be up 2 risk reward, net 2 risk reward, then down 2 risk reward, or at break-even. Another good example, we could, let's say we take out this inducement here, okay, and we get a nice entry model here, we enter off here, you would break even here, for example, at a point, but typically, look, in this case, you hit 1-to-1 risk reward, which is your TP, static TP, before it hits your break even, and that could most definitely happen as well, right? So again, this is up to you, up to your back testing, how you want to really incorporate this break even and 1-to-1 risk reward static trading system. But I'm just showing you guys here how you can be a very simple, intuitive way to or mechanical way of really just increasing your win rate if you are someone that is not good at handling your psychology when it comes to trading, right? Again, for example, right here, let's take an entry model here off a liquidity sweep, and you would break even. Oh, you would break even right here. This would be your break even point, but if you're targeting 1-to-1 risk reward, you actually, oh my gosh, you would hit about a 2 risk reward even before your break even point. So you would hit break even, or you hit your TP literally within 5 minutes, roughly 5 minutes. So again, this is also really, really good for people that actually have a personality that's close to scalping. Typically, you want to match your personality with your trading system. No, you want to match your trading system to your personality. So if you're someone that can hold trades for a very long time, and you know you're very patient, swing trading, or maybe cashing the big trades is your thing. But if you're someone that is very impatient, that struggles and finds yourself FOMOing a ton, that means you need a trading system that is a lot more faster. You need a strategy that's a lot more faster, a lot more executions to keep your brain and personality going and maintain yourself, rather than trying to fight your inner thoughts, right? It'll be very hard for someone like me, for example. I'm like a scalper, intraday trader. It'll be really hard for me to do swing trading. I used to try it, and it just was not easy for me because you have to be very patient and waiting for the entries, right? I can personally hold the trades, but it's just for me, based on my data, I could make a lot more better returns day trading my strategy I'm teaching to all the course members and private 101 students. So that's why I've ever since stuck with really intraday day trading rather than swing trading. But again, everyone's lifestyle does depend. Some people don't have time, right? So all depends on how you make use of that time. But literally, you can see in these examples, you'll be hitting TP sometimes within a minute, 1 to 3 minutes, not even sometimes, if you're targeting one-to-one risk reward. And in this case, if you're targeting where you typically would target, you might actually catch a 1 to 7, right? But again, you gotta keep in mind, catching that 1 to 7 might come with 3 losses here in a row, or 2 losses in a break even before that 1 to 7. And if you miss out on this 1 to 7, you end the day with literally -1 risk reward. So rather than catching and risking potentially ending the day with -1 risk reward, if you were to do 1-to-1 risk reward TP, you would be up 1, 2, 3, 4. You'd be up 4 risk reward for the day. Even if you miss the big winning trade, you'll be still up 3 risk reward for the day. And that is one of the big benefits also of having very short targets, or targeting something that's very close, like 1-to-1, because you're fine. Like your drawdown in terms of equity curve is going to be very nice. You're going to have a very smooth and nice equity curve that's making higher lows and higher highs, in comparison to a trading system where you have a low win rate and high risk reward, where you could have a very unsteady equity curve, something like this, right? You could have a lot of periods of drawdown, but of course with a high win rate system, you have a lot less periods of drawdown. So it's a very good option. I highly recommend for people that have problems with their psychology and always figuring out that they're missing the big trade that's going to carry their account. Because when you're trading, here's the problem. When you're trading with a super low win rate system, what I consider low win rate is honestly anything below 40%, right? If you miss the 4 out of 10 trades in that system, or even 2 out of the 4 winning trades in a 4 out of 10 win rate system, you're gonna potentially be negative after 10 trades rather than up, right? If someone's trading some system that has a 70% win rate, you could miss like 2 trades and they could be the losing ones, right? And you'd still be up a lot, right? So again, there's pros and cons to every trading system. There's no perfect answer for all. It's more so matching the trading system you want to trade with your own personality. That way you're not fighting yourself, because trading, as people know, is also part psychological, right? I hate to say it, but there is some sort of psychology in trading, but that only comes after you have built a trading system that you have backtested properly. Otherwise, psychology is not gonna, a psychologist, right? A therapist is not gonna be profitable in trading unless they have something that's proven based upon just backtesting, really, honestly, and having something that statistically works. Otherwise, you're wasting your time trying to guess the market, right? So for example, let's say you take the IFVG entry model here. Look how fast you hit TP. You hit TP in about 3, 4, 5, 6, around 6 candles, 6 minutes. You hit TP 101, instead of having to maybe be worried about where to set your targets, things like that, right? So this also reduces really the need to think as much, especially someone that deals with a lot of stress. When you're in a trade, you have a hard time holding your trades to your target, so you get out early. At that point, just incorporate a high win rate system. Either have a very aggressive break even, or target a very close risk reward, like 1-to-1. I wouldn't suggest people doing like 1 to 0.5 risk reward, which is negative risk reward, because your winners are twice as less, or your winning trade in general is less than your losing trade, in terms of you're making less than how much you're losing on your losing trade. So you're losing more than what you're making per trade. I wouldn't suggest that, just because it's a lot harder mathematically to have a good expected value statistically based upon a negative risk reward system. If you have a 1-to-1 reward system, even after spreading commissions, you know, if you can at least maintain around a 60 to 70% win rate while trading live, you will be guaranteed profitable at a 1-to-1. So math is also a lot easier to calculate when you're trading a static 1-to-1 risk reward system. And again, it doesn't have to be my strategy, it could be any strategy, but you just want to backtest to make sure that does work. But if you truly are interested in learning a strategy that generally works, and you want to speed up your equity curve, or how fast you're progressing in trading, maybe you're new, maybe you're someone that's been trading for 1 or 2 years. I've had people come to me that have 1.5 years of trading experience and they still weren't profitable, but once they learned everything I taught them, they slowly started seeing success and results, passing funded accounts, getting payouts, all sorts of things, right? So I'd highly suggest, again, if you really want to invest in yourself, to check out the course or one-on-one mentorship. Again, it's not a requirement, but I'm just trying to help a lot of people out to speed up their learning curve, because I know it definitely took me a while to get the hang of how profitable trading really works, not only on the charts, but also from the mental perspective, and using math and combining all these things together to make someone profitable in the long run. So hope you guys did enjoy today's video on really a very simple tip and trick on improving your win rate, while also what type of people this type of trading system is really built towards.
Hey, what's going on, guys? Welcome back to another brand new video, and today I'm going to be going over whether or not you as a trader should be trading a static risk reward or dynamic. So for those that don't know what this is, let's first break this down. There's two ways really for risk reward. There's either a static risk reward, and what static risk reward means is you keep the same risk reward target for every trade, regardless of situation or context. So for instance, let's say for every single trade, your rule is you target minimum 2 RR, or you target 2 RR. So for instance, target 2 RR is a static risk reward. Let's just say 3 RR. This is static risk reward. So let me first actually clear off everything here on my chart. Okay, now everything's clear on my chart. I was just taking some trades earlier before I wanted to record this video for you guys. But I don't know if I have a video on this yet, but let's just anyway get into this. So static risk reward versus dynamic risk reward. Static risk reward is keeping the same risk reward target for every trade regardless of the situation or context you're in. For instance, targeting 3 risk reward. Now dynamic risk reward is a system where you have different risk reward targets for every trade dependent on context, but its TP is placed based off price, not a number. So for example, in a dynamic risk reward system, you would not be doing a static target, meaning you won't be targeting the same number for every single trade. You would be going off based off market structure, liquidity, as well as all the other things that teach you guys: flips, origins, inducements, internal liquidity. Even there's so many things that I teach you guys about, and how you can properly have your targets, as well as of course your high time frame draw and liquidity and your POC origin types. So for example, if you guys don't get this still, static risk reward is if I was to have every trade I take, regardless of what it is. For example, let's say I have my setup and I'm supposed to take long there, or I'm supposed to take short here. Regardless of what the setup is, or entry, or how big the stop loss is, my TP, I'm always going to place it at a 1 to 3. That is static risk reward system. And then a dynamic, there'd be times where you might have a 2 risk reward trade, right? And then there'd be other times where you might have a 1 to 10 risk reward trade. It all depends on the outcome and how you prefer to trade, or not even how you prefer to trade, but depending how good you're at reading, understanding, and anticipating price, your draw and liquidity. All these things have to be factored in mind when it comes to dynamic risk reward compared to static. So now, what's the pros and cons of each? Well, let's break them down in this video. So the pros of static risk reward is that you have easy mathematical calculation for your EV value of your system. Meaning, all you have to focus on is your win rate. So that's the first thing. All you have to do is focus on your win rate. For example, let's say your static risk reward is 3R in this system. All you have to do is maintain around like I think it's 25% risk reward. Not if I'm not mistaken. But all you have to do is go on my website if you're not sure of what risk or win rate you need to maintain for a 1 to 3 to be profitable. But preferably, obviously, having an EV value over 0.40 is what we are looking for, at least minimum, to keep a profitable, consistent system over a long period of time. But let's just say all you have to do is focus on your win rate. So let's say you have 50% win rate at 3R. All you have to do is focus on hitting 50% of your trades and you'll be good. So pro number 1 is easy mathematical calculation, and that ties into pro number 2, which is less stress and thinking, a lot more mechanical. So with the static risk reward system, it's a lot more mechanical. The only thing you're looking for is your entry and your stop loss. Your TP, every single time you will target the same exact number. And for static risk reward, this will also alleviate not just the stress and thinking, but also things like second guessing, as well as other psychological issues that you might have. So let's say you're someone that has a psychological issue of, no matter how much you tried, you still have a psychological issue of holding your trades, or maybe knowing that maybe you have too far targets, your expectations are very unrealistic. You can have a static and adapt a static risk reward system to potentially help you build that bridge and gap towards a dynamic risk reward system. But in my opinion, I honestly prefer that you just focus on the dynamic risk reward if you want to maximize the most out of your trades. So let's go into the cons. The cons is you don't maximize the most out of your winning trades nonetheless. So hopefully you guys enjoyed watching, and I'll see you guys in the next one.
Got a lot of fans. We ain't checking in no bag, shopping when we land. Big FN bag of ball. Plead the fifth if I get caught, they talk. Came through dripping on them, I been saucing.
In this section, I will be going over handles. See you guys in the next one.
Got a lot of fans. We ain't checking in no bag, shopping when we land. Big FN bag of ball. Plead the fifth if I get caught, they talk. Came through dripping on them, I been saucing.
Hey, what's going on, guys? Welcome back to another video, and today I'm gonna be showing you guys my TradingView essentials. So essentially all the tools, indicators, as well as all the little functions I utilize in my day-to-day trading on TradingView. And some of these features might require premium, so for those that are interested, you can also get TradingView Premium, link in the description, or you can use my link in my Discord. It gives you additional discount on top of the current ongoing discount, which I believe is like 70% off or something, and 1 free month for premium. You can ask me questions and learn my strategy. Alright, so we are back with another video, and okay, so yo, what's going on, y'all? JTrades here, back with another brand new video. And in today's video, I'm going to be going over my view on trading multiple pairs and assets, because this has been a very controversial topic for a very long time in the trading space, of whether trading one pair, like one trade a day, is a good set of rules, or if you should trade multiple pairs. And today, my job is to basically just go over the pros and cons of this to you guys. So if I can just turn all my indicators off. But all these indicators are on the website if you guys are interested. And there's also a 7-day free trial for those that are interested in trying out before locking it in. But
let's go over the pros and cons of trading multiple pairs versus one pair. So one pair. And when I say pair, I'm also talking about asset. It's the same thing, right? Same meaning. Hope you guys understand that. So one pair and one asset versus multiple pairs and assets. Now let's go over the pros. The pros of one pair and one asset is more focus and likely higher quality setups / win rate, because you're a lot more focused on one pair and you already have, for example, your structure, your draw and liquidity, everything prepared ahead of time for that one pair. You've been preparing maybe the day before for this asset. You've done a lot of like your own analysis on this asset ahead of time. That's the pro. So you typically have a higher quality, higher win rate because you're focusing on the pair more. You're putting in all the confluences in sync, versus if you're trading multiple pairs, you could get yourself confused between a bullish pair versus a bearish pair, and then get your confluences and bias wrong or just mixed together, and that leads to lower quality setups. So pros of one pair, one asset is more focused and high quality setups. And oh, just disappeared. Okay. Higher quality setups, higher win rate, more focus. The cons, I would say, is less trade opportunities and less focus, well, which is pretty contradictory right there. So we'll just leave it like that. And then the pros for multiple pairs is you have more trading opportunities, and the cons is less lower quality setups. This is literally like the main difference between the two. Okay, because let's say you focus on one pair, one asset, you will be able to master how that asset moves. Because each asset, they all follow the algorithm of the market. However, they move slightly different based on their personality. I can give you guys one example, which is oil. I love trading oil, but in oil, it's a lot less likely to trade reversals, and you have a higher win rate just trading continuations, because oil loves to trend when it trends. And when it trends very heavily. So there'll be times where I'll be holding a target much further than my draw and liquidity, because the draw is on the higher time frame because of how volatile and how much movement oil provides. So I will maximize my risk reward on oil in comparison to maybe trading something that's more reversal based like gold, where I'm not targeting these high risk reward trades, and I'm maybe like sometimes trading in the range and I'm getting out, right, at opposing supply or demand, for example. So now when it comes to these pros and cons, well, what does this con really mean? What does this pro really mean? The pro, you guys already know, it just means you have a higher win rate. The con is less trading opportunities, which also leads to one thing: less trades, which is common sense, right? And less trades, typically less profit in terms of your expectancy. So that's less profit expectancy. And I'm gonna do the math for you guys real quick. It will make a lot of sense why. So pros, more trade opportunities, less trades, more profit expectancy. Okay, and then obviously you guys get the gist of what I'm trying to get to. Now the main thing here is, if you are a beginner, here's my recommendations. If you're a beginner, I'll say maybe you're 1 to 2 years of trading only. I'll say within it. This really depends on the person, right? Because each person learns at a different pace. Each person's brain is wired a little bit differently in terms of psychology and how they manage their emotions from a natural perspective, as well as how much time each person has to dedicate to trading and learning and backtesting and all these sorts of things that are necessary in order to build that positive screen time, right? So this all depends on where you are really in your training journey and how much time, your personal experience you have. But I'll say beginner, 1 to 2 years, stick with one pair or asset. And the reason why is because during your first 1 year or 2 years, you're still locking in on your strategy. Maybe you're still even looking for a strategy, which I teach in my course, that I teach a strategy that completely works, that has proven to be profitable. Over 4,000 plus trades of backtested data, and I've proven it live as well. So if you're a beginner, I'll recommend sticking with one pair of asset because you still probably are currently refining or have not found a strategy or system that fits your psychology yet. Okay, that's why I highly recommend sticking with one pair of asset if you're a beginner. If you're an experienced trader, maybe 3 years plus, okay, this is just a rough timeline. For example, like if I had a good mentor when I started trading, I didn't, by the way, but if I did, like for example, if I just started trading and I took my course, for example, I could probably be profitable within less than a year, right? If I'm putting in all the time and effort that I put in my personal journey, less than a year, learning from the right mentor, which is what I provide in terms of value in my course. I'll let you guys know the straight to the point, the correct information in trading and what is wrong in trading, because there is such thing as a wrong in trading in a sense, because there's a lot of false information online that's being spread about trading as well. So definitely be careful of that. But if you're an experienced trader, I would say it's completely okay to expand to trading multiple pairs or assets. And the reason why is because you will make more profit in terms of expectancy. And when I'm talking about expectancy, I'm talking clearly about your risk reward, your net risk reward. Okay? Because at this stage in your trading, you should, by 3 years, I hope, have a refined trading system, trading plan that you follow. So like an exact trading strategy to the T that you know. So if I open a chart right now, you can tell me exactly what your strategy is, your entry, your exit, your stop loss, how you manage your trade, your TP. Those are the main things in your strategy, as well as confluences you use and any external factors you also utilize in your trading plan, as well as certain rules that you have in your trading system, as well as what sessions you're trading or what time frames you're trading on, what's your time frame entry, what's your analysis entry on, what's your structural entry on, what's your high time frame analysis on. There's so many things I can name right now on top of my head that I go over in my course, specifically tailored to you guys. But for those that are still beginners, those are things you definitely want to be thinking of, okay? And that is where the experienced traders are ahead in the game. They have all this down to a T. They don't even need to write this on a piece of paper or maybe in your journal. I would recommend definitely to write it somewhere. But at some point it becomes muscle memory, right? Just like, for example, your first time working out, you're not familiar with the form of working out, things like that. But trading works the same exact way. You create these neural connections inside your brain and you know exactly what to do. And if you're executing each and every single day, it will become a habit for you, right? So once you build this habit and consistency, it becomes like second nature to execute your trade. Once you see your entry confirmation, boom, you enter. Stop loss, TP, you let it run, right? You don't hesitate. You don't have any emotional mistakes that you're really making. Everything is very solidified at this point. So that is why it's completely okay to have multiple pairs on your screen. But if you're a beginner, right, again, you're still not too familiar with the trading system, stick with just one pair asset. Because if you try as a beginner to trade multiple things, you're just going to confuse yourself even more trying to do all this analysis on several different assets. Also, you want to collect data on one asset first on your strategy, right? You don't want to be collecting data in the beginning on every single asset possible, because first of all, you're not going to be trading every asset possible, and second of all, you're still not familiar with how your trading system works. So why add in more confusion and more mess to your trading plan or backtesting results when you can simplify it down to one asset and collect data on that? And once you collect data on that, then you can go from there to determine whether or not you should add more pairs, or maybe collect data on a different pair, or make refinements to your trading system. Because at the end of the day, it's all about your trading system and how much refinement you can make and how much profit you can optimize out of your trading system. because you want to be able to find the best optimal way where you can maximize your winners as well as maximize your win rate. And that is something I've already done for all the course members, because I teach them my exact way of managing my trades as well as contextual things that will maximize their expectancy. So this are my recommendations right here. Now here's the thing. Let's go over the more profit expectancy part. Okay, let's say we have two traders. Trader A trades just one pair. Trader B trades, let's say, 3 pairs. Because for me personally, I trade 4, for those that are wondering. I teach in my course, I trade 4. I trade gold, ES/SPY, oil, and Euro USD. 4 pairs for me. So let's just say 4. Screw it, we'll just put in 4. And one more thing before I get into the math of this, I want to talk about how this also depends on if you're intraday trading, scalping, or swing trading. That matters a lot to this as well. Because, for example, I can give an example real quick. Scalpers, you can, depending on what your time frame you're scalping on, like you could be entering on the seconds and exiting within a few seconds or minutes. You could like take up to, let's say, 10 trades a day for scalpers. That's like very realistic for scalpers, right? Everyone's definition of scalping is different, I know. My definition is typically you're holding trades only for a few seconds up to a few minutes, no longer than 30 minutes really, or even 15 minutes. Most times it's very fast, in and out, catching those high volatility moves. So up to 10 trades a day. Now, if you're a scalper, you really do not need multiple pairs. You just need one. Why? Because you're taking up to 10 trades a day, and 10 trades a day, if you just think about it in terms of time wise, that's a lot of dedication, right? That's a lot of analysis, right? And if you're taking 10 setups a day on, let's say, 4 pairs, that's 40 trades a day. And I guarantee you will not be able to manage your positions and manage entering and exiting 40 trades a day, because you're basically going to be jumping from one trade to the next, to the next, to the next, without enough analysis and focus on one asset. You're most definitely going to confuse yourself. So for scalpers, for example, it's more probable to just stick to one asset or pair. Now, if you're intraday trading like me, most of my trades last 30 minutes. Okay. That's just based on my data collection that I got from 4,000 back tested trades, the trading system I teach. Most trades last no longer than 30 minutes to hit TP. So intraday trading, I'll say up to 5 trades a day. For me, I roughly average about 5 trades a day. So that would be me, 5 trades a day. This could be honestly low-key. It could be up to, right? So it could also be 1 trade a day. All depends on your own trading system and rules and what you have backtested data on. But for example, for intraday trading, you can have multiple pairs. You can have multiple pairs assets, because you're taking a lot of setups. Your setups are occurring a lot less frequently, so you have that time management to be able to switch between assets and pairs and catch those different opportunities. Last but not least, swing trading. This varies a ton. If you're swing trading or position trading is more like shares really, and holding for like months to months. Swing trading I'll define as, let's say, 1 trade a week. Okay. 1 to 2 trades a week. I think that's fair. So typically you're holding your trades for about 2 to 3 days, or maybe 1 full day. Swing trading, you can have several pairs or assets. You can have even more if you're swing trading. Why? Because your setup does not occur often. So it's an inverse correlation. The more often your setup occurs, the less pairs you want to trade. So as your frequency of your setup occurs, number of pairs decreases. This is an inverse correlation that you want to be following, because we don't want to overload our brain with information, and that's why we follow this rule. The more setups you have, the less pairs you should be trading, because you already have enough trading frequency. You already have enough trades. You don't want to overdo it. And that overdoing will lead to taking bad trades, taking revenge trades, and many other problems, right? You have even more drawdown as well. So once I cover this, you guys should know this is how it works. Now, one thing I do also want to mention is market conditions. This is why for people that intraday or swing trade, having multiple pairs is actually a very big pro. Again, I'm not talking about now for beginners. Beginners, regardless of what type of trading you're doing, I say stick to one asset. Okay, even if you're doing swing trading, then maybe have two if you're a beginner, but still try to stick with just one as a beginner, because your goal is not to make money as a beginner. Your goal is to master a skill, know your system in and out, and the strategy, right? You want to have that set down to a T. You could care less about what the asset is, because most assets, if your strategy works on one asset, it will likely work on any other asset. If it doesn't, then there's a flaw in your strategy. Okay, and that's why I teach in a course everything inside my system strategy that makes me profitable on any asset. I backtested my strategy on all these assets and they all come out profitable. They have slight variations in terms of their win rates and risk reward. Like I mentioned, oil might have a lower win rate, but my risk reward that I catch on my winning trades are way bigger than, for example, gold, where I have a high win rate, but the risk reward is not as high as oil. So you want to be collecting data for sure on this. Right now in this session, I'm talking about strictly to people that are experienced traders. So for experienced traders, again, make sure that you're following this rule, right? This rule right here. And the thing I wanted to talk about was market conditions, because if you are an experienced trader, and let's say you're swing trading, if you're only focusing on one pair, if that one pair consolidates for 1 month in a range where it doesn't fit your entry or setup criteria, like for example bad market conditions where the prices goes in one direction without any pullbacks for a month, or maybe when price does tiny consolidation ranges, accumulation where you cannot trade at all for that whole month, you don't want to be sitting on your hands as a trader. Especially as a full-time trader, you need income coming in, right, every month, typically, at least, unless you're making a like big months where you can have these breaks. Otherwise, typically for most people, you want to be taking trades every single month to have that steady cash flow of income. And people say trading is not steady income, as in you're not going to win 100% of the time. However, you can definitely make it very steady and stable income applying the proper strategy. Like for example, the strategy I teach, like 80% of my days end green, and 20% I would say, sometimes less than 20% of my days are red. And on those 20% or less days are in red, they are either very close to break even because of risk management, or they are way smaller than my green days. My green days are typically 2 to 3 times bigger than my red days. So that outweighs the red days by so much, where I can fully cover one single, I can cover multiple, like 3 red days and 1 single green day. That's it. Now I'll be at break even or even in profit. So that's why having multiple assets is very important, because you don't want to be forcing trades on one asset if there's bad market conditions. Same with intraday trading. If one day, for example, Monday, gold is consolidating, you don't want to be focusing on gold then. You want to be focusing on maybe an asset like oil where it's trending that day, because all these assets have different fundamental characteristics that affect how they move. That is why you will find seasonality differences between these assets. Like summer gold will move a lot more different than winter time for gold. And all this comes again from screen time as well. Seasonality, trading different seasons, that all completely comes from screen time and experience. And I'm just telling you guys this ahead of time so you guys can prepare for that. So now we can finally move on to the last thing, which is the math, statistics. Okay, here, actually we have it right here. We do right here. The statistical edge. Let me delete this. Trader A trades just one pair. Pretend these are both experienced traders, okay? You should remember, you shouldn't be comparing yourself like this if you don't have experience or don't know your trading system enough. This is for people that have their system down and they just want to maximize their profits. Trader A just trades one pair. And let's say, pretend both these traders trade intraday. Both intraday traders. So let's say they're both intraday traders. They both take 2 trades per day. Let's say, yeah, we'll say 2 trades per day. Let's say they both take 2 trades per day. I wouldn't say take 2 trades per day. This is their setup occurs 2 times on average per day. Now here's the thing, trader B, they trade 4 pairs, meaning they can have up to 2 times 4, which is 8 trades per day, because they have their setup potentially occurring 8 times in a single day because it's spread across 4 different assets. Not necessarily, but that's up to, right? Versus trader A, they just have 1 asset, so 2 trades a day on that 1 asset because that setup occurs twice a day on average on that 1 asset. So hopefully this math so far makes sense. This is very, very basic math. Next thing we want to focus on is, let's say they both have the same expectancy. Let's say both traders have a 50% win rate with 2R. This is very, very minimal. Like, you can have way better statistical edge than a 50% win rate at 2R. What I teach is way better than this, but I'm just showing you guys just using like very, I guess, the most mid trading statistics possible. So let's say they both have these stats. In fact, let's say, yeah, we'll go with this for now. I want to prove something real quick. So let's say 2 trades a day, actively about 20 active trading days a month. So times, we do times 20, so that's 40 trades per month on average. Now this trader is 8 times 20, which is 160 trades per month on average, right? And now using math here, 50% win rate. So 20 losses, 20 wins, 20 losses. But those wins are 2 times, right? So 40 for their wins, risk reward, and then their losses is just 20. So their net return is 20 RR for the month. Taking 2 trades a day, 40 trades a month, trading 1 asset. Not bad, right? If you're risking 1% a month or a trade, you're making about 20% return. Now, other trader, they have 80 times 2, 160 risk reward, and then the other half is their losses. So minus 80R, their net return, which makes sense now, is literally 80 RR, which is 4 times the return of trader A, because they're trading 4 pairs compared to 1. So you guys can see this is a huge difference in return. 20 RR versus 80 RR is a significant difference in return. Over the span of a year, trader B will have way more returns in terms of the account balance than trader A, considering they have the same risk management of risking 1%, for example, per trade. So this is why this is very important, and I wanted to talk about this. So let me put this somewhere here. Okay, I think this is good here. Should be a good format. So you guys can see the difference between these 2 traders, right? In fact, let me make this cleaner, so if you guys can also take a screenshot if you want. So trader B, if this thing cooperates, trader A, trader B. So you guys can clearly see a difference, right, in return. Even trading the same strategy, but you're taking more setups, and eventually you will have way more profit. Now, you're not forcing more trades here. You're just taking more trades based on your setup. So make sure you also understand that difference. Now, remember what I mentioned earlier? If you trade 1 asset, you probably have a higher win rate than someone trading 4 because you're more focused on one thing. You know, you have your bias less mixed up in your head, and the more focus you have on 1 asset, there's diminishing return, right? Someone focusing on maybe doing analysis for 1 hour ahead of time is not going to necessarily have much of a better return or win rate than someone doing 4 hours ahead of time of analysis or pre-market plan, for example. Just give me an example of the trading system, right? So I would say, let's do it this way. Let's say there's a 10% win rate difference. At 2R, this is pretty significant. So 60% of 40. You know what, let's just change this to make the math easier. Let's say they are at, what were we at, 50% before? We'll say, yeah, screw it. I think 60% of 40 is 24, if I'm not wrong. So that's 48 RR minus 16. Your return outcome now becomes 32 risk reward, which is almost double 20 risk reward, right? You can see 10% win rate difference still makes a very big difference in your net return right here. I'm doing the math right here, I believe so. That should be good math, yeah. So yeah, you guys can fact check me on this, but I'm pretty sure I did the mental math right there. But you can still see, even with a better performing system for Trader A, they still don't make as much return as Trader B. Trader B still is making more return than Trader A with a worse trading system. Now at some point, if Trader B starts failing his system, or Trader A's system becomes extremely good, like an 80% win rate, then of course Trader A might potentially catch up. So if 80% win rate, that'll be, this should be 4, 8. That should be 32 and 8. So in this case, Trader A is catching up now. 50, 54? No, 56. Nope. But yeah, no, it was 56. Yeah. So you can still see, even with the 80% win rate at 2RR, Trader A is still making less money than Trader B in terms of net return, even with a way better system. So this clearly tells me statistically why I personally prefer trading more assets, because I already have a lot of experience. I know my exact setup, and I would love to take my setup a lot more times in terms of frequency, because then that means a lot bigger return, and I don't have to manage or maintain as high or as good as of a trading, for example, system in terms of stats to match up with this, right? You guys can see there's still a difference here, regardless of Trader A having a way better trading system, given high quality setups. Now, I would say your win rate is not going to jump from 50% to 80% if you're trading just one asset. At most, probably 70%. But giving Trader A the edge, Trader A still makes less money than Trader B. So this basically sums up today's video that I want to talk about, essentially, of what my view is on trading multiple assets and whether or not you should or you shouldn't. So again, follow my recommendations here. If you're a beginner, trade one asset only, please, until you're profitable consistently. Once you're profitable consistently, you can completely okay to expand to trading multiple assets. Again, also keep this second in mind. So this is number 2, this is number 1. Number 1, focus on this. Number 2, focus on this, right? And then these 2 boxes are just general knowledge to be aware of. But mainly, again, if you check the box for an experienced trader, you can then move on to this box, number 2, which then you decide whether or not you want to take more trades or not. If you're a scalper, you really don't need to increase your assets. If you're intraday or swing trading, you definitely should at this point to maximize your compounding of your trading account. And trust me, when I say compounding is real, I'm talking from experience. Personal account compounding is legit, okay? So keep that in mind and just continue trading, and just make sure to stick to your trading plan at all times. And yeah, that's it for this video. Hope you guys did take a lot out of this video. If you guys are interested in indicators I use on my trading system each and every single day, feel free to check the link in the bio at essentialtradersuniversity.com. Also have my beginner course as well as my advanced course as well. They are both currently around like 50% on sale for those that get in early. If you don't get in now, you're gonna miss out on the sale, and it's gonna go back to its original price, which is a lot more expensive. So I'm trying to make it as affordable as possible to those that can still get it now, that are eager and willing to really put in the money and effort into monetizing the skill of trading and making money basically whenever and wherever you want with the freedom and time access that I have. So again, that's for watching, and I'll see y'all in the next one. Yo, what's going on, y'all? In this section, I will be talking about probabilities in trading, as well as being able to keep your head up while you're in a losing streak and things like that, as well as having to understand that trading is all about probabilities. So in this game, we want to create a probability-based mindset, and that is exactly what I'll be showing you guys today, and how you guys can create this type of mindset rather quickly. Because I remember when I started trading in the beginning, first year or so, I was trading off no data. Okay, I wouldn't say it's pure gambling because I knew technical analysis. I had analysis. Obviously, it's not as good as what I taught you guys now is and what I have now, but I didn't have clear, concise data that I kept track of for all my trades, and just a lot of things that would help me think in more probabilities, right? There's a reason why all these hedge funds, when you interview for them, they give you a lot of puzzle-based questions about probabilities rather than giving you tons of technical analysis questions. Because technical analysis you can teach anyone, right? Of course, it does take time to develop the experience of technical analysis, but being able to not go on tilt while trading, keeping your emotions stable, and having this probabilistic mindset is very important as well. I personally, you guys know, I don't vouch for psychology that much, mainly because I believe that trading should be 80% technical, 20% psychological. Of course, you can mix in risk management in there as well, but it's because if you don't have an edge, you're not going to be profitable. But also, if you don't have good psychology, you can't control or stick to your plan's not going to, your edge is just not going to play out, right? So in today's video, I'm just going to be going over real quick probabilities, right? How to think in probabilities and what type of probabilities you should expect. So let's say there's two types of traders. We have traders in this section, and I'll see you guys in the next one. Peace.
Yo, what's going on, y'all? J Trades here, back in our banger. And recently, based on the support you guys have given me, I noticed I want to do more psychology trading videos, things lifestyle, things like that. So that's exactly what I'm going to be doing in today's video, all right? So in today's video, I'm literally going to be talking about just reasons as to why most people fail in trading and why most people just aren't built mentally and psychologically for trading. It's not even the technical aspect of learning trading, it's more so the psychological aspect of trading, why most people fail, why most people cannot continue. And this is exactly going to be giving you guys the reason exactly what's going to happen. All right, so typical trader, let's say you start here. This is a typical trader's journey, all right? Let's say you start at, I don't know, you deposit, let's say $500. $500 right here, you deposit it. First few days or so, you're just probably gambling. You're probably lose some of that, even half of that, depending on how you trade. And then every trader is gonna have this journey where you have that one massive moment where you're like, oh my gosh, I just made so much money, like that, boom. You're in an ego and confidence, everything's gonna skyrocket. And this is, by the way, early on in your career, like first 6 months in your career, you're gonna be like, wow, no way, I just made this much money, this is crazy. So you flip that 500 to about 5K, pretty absurd results in a short time frame. You're like, damn, I can actually become a millionaire doing this. But what people like that don't realize is you're basically gambling, because first of all, paying 500 to 5K within like even a month or less, most of the times I would say is gambling. There's no proper risk management in doing that. You're probably full porting or even half porting, no risk management, not good habits to build in the beginning. But point is, everyone reaches that high point where they think they're a pro trader. You're like, damn, everyone else took 5 years, 2 years, 3 years. I just took a few months and I'm good. But what happens to these traders here is they basically blow the whole count. That's basically legit what's gonna happen. You're gonna go back to starting point zero. This is 100% facts. I'm not even gonna lie to you guys. This is gonna happen to almost every single trader during the training career. You're gonna go back to not even your initial deposit, but lose everything you put in, all the time, all the effort. And let's say this is 6 months in, right? You lose everything and you're like, damn, I just quit my full-time job. Even some people quit their full-time job up here because they're like, damn, that's crazy how much potential there is. Yes, there's so much potential in trading, but you have to understand this is a long-term game, not a game where you get rich fast and you exit out the market and you're done, right? This is a long-term industry. You have to stay consistent throughout years and years. To be able to even like sustain a really high lifestyle that you're looking for in trading, you got to be able to maintain that consistency. So most people, what happens is they quit. This is exactly where most traders quit, right here. This is where people quit, you know, everyone just starts quitting. People are mad, lost all their money, you know, depending on how much you put in. A lot of people put way too much money into the markets in the beginning, and it's just quite unfortunate, but I see what they mean and why they do that, because I had the same exact experience, put way too much in the beginning, and then this happened to me. But it depends on what type of person you are here. That will change your whole career. Straight up.
It's gonna change your whole entire career. All right, so I'm just gonna draw these deals real quick. Point is, a lot of people, they quit here. All right, part of the statistic that says 9% traders fail, 9% fail is completely true. I do completely believe that. Only 10% are profitable long term. Now, out of the 10%, I'm guessing half of that is going to be insider trading. Don't forget, we have insider trading, or even more than half, 5%. The rest 5% are profitable, long-term, sustainable traders that make a lot of money and time freedom, financial freedom. All about freedom in this situation or in this industry. All right. 5%, people will be like, damn, that's literally impossible. That's like make the NBA. That's nowhere close to make the NBA or making pro or even going D1. D1's way harder in almost every single sport. Way harder than the 5% probability. And don't forget, this 5% is, again, including gamblers that just joined into this market, because you gotta consider, literally, the entry to trading is so low. You can literally trade, make an account as long as you're over 18, make an account, put in 20 bucks, 50 bucks. You can put so much money so easy, so fast. You can flip that money so fast as well. You can also lose all of that money super fast as well. Like,
Got a lot of fans. We ain't got a lot of fans. We ain't checking in no bag, shopping when we land. Big FN bag of ball. Plead the fifth if I get caught, they talk. Came through dripping on them, I been saucing.
Yo, what's good, y'all? Jay Trades here, back with another brand new video. And in today's video, I'm just gonna do a quick video talking about psychology and what my personal opinions on psychology really is in the market. It is very different from what other traders promote online. I'll tell you that, that's for sure. So again, before I get into the video, I just want a quick feedback from you guys, whether you guys prefer videos where I have webcam and then the chart as the main screen, or if you want these videos to just be a webcam. Up to you whether chart distract you or not. But me personally, today's just gonna be a quick talk about psychology, right? All these people on YouTube, they talk about psychology first. Trading is 80% psychology, 20% strategy and system. But I think you need to flip that first. When people say trading is 80% psychology, what that brings into most traders is, in my opinion, part of it is a gambling mindset, because they don't understand what they're doing. So let's say you have a trading system, trader one. Let's say you have a trading system where this trader has no profitable edge, no proven profitable edge or system in the market, but they have the best discipline, okay, in psychology. They don't overtrade, they don't revenge trade, they limit the number of trades they take per day. All these are very great rules to have in your trading system that helps with your psychology. Trader number two, I mentioned today. They have a proven track record of profitable edge or system, whether that is back tested or forward tested demo, all I consider and count. But they have a let's just say bad psychology, okay, and discipline. Now, in these two situations, which trader would I rather be? Well, these two, I would say right now, in this current situation, is pretty even, okay? You cannot have the best psychology. You can have the best psychology, best discipline, follow the rules you have in your system, trade once a day, whatever rules you want. But it doesn't matter if you don't understand the technical analysis aspect of it. Not even that, but you don't understand your full setup and what you're looking for every single day in the market, as well as there's certain discretionary things that come with experience and screen time that you can't really teach, right? So this trader one will not be profitable. Trader number two will also not be profitable. Both of these traders are not profitable. And the reason why is trader number two, they have a strategy, they have a system, they have rules, but they can't stick to their rules. So let's say their system data shows one trade per day. Okay, let's say they break that rule, overtrade, revenge trade, all these things. These trades that they take are because of bad psychology and bad discipline, which does not mean their trading system does not work or their strategy does not work, okay? Your strategy could work, but if you have bad psychology, you're not sticking to your actual setups, and being honest with yourself is also super important. If you're not being honest with yourself and you're not taking actual setups within your trading system,
then you're not following your training system, and therefore you're losing because of bad psychology and discipline. Now, a lot of people, they have a problem distinguishing between the two of these. They don't know which part they're on, okay? And I'm gonna make this video today, guys, a very fast breakdown of how you can easily tell which trader you are currently and how you can fix it, right? As you guys can tell, clearly Trader 1, all they need to do to fix and get the profitability is have a proven profitable edge or system and repeat that. As they already have discipline, psychology down. Number 2, they just have to work on their psychology and discipline. It sounds super easy, but sometimes this takes like months to years for some people to fully comprehend. Some people, like me, when I started trading, I was very ignorant, okay, stubborn. I was not really caring too much. It's not that I wasn't caring, but I was not listening to and seeing the facts. I just kept on thinking I have a proper trading system when in reality I don't, okay? Now, after a few years, I do have a proper trading system and I do have the best psychology and discipline to stick to it every single day. And that's why I make money. Otherwise, I would not be making money, okay? So basically, these two traders are clearly lacking one thing, and if these two combine with each other, the good parts, they become the profitable trader. Now, how you know is, first, what I want you guys to do is run a back test. And when you're back testing, be honest with yourself. Don't like lie to yourself saying, I'll take this trade in reality in live. I know I would not, or things like that. Don't go backwards once you see it's a losing trade and back testing. That just ruins the point of back testing, okay? We're not here to strive for best results. We're here to optimize our strategy and make it profitable. So number 1, back test your system and strategy. The reason why I say system and strategy is system is a set of rules, in my opinion, okay, that you follow. This is where the psychology and discipline comes into consideration. Strategy is entry, exit, TP, or I can say entry and exit, yeah. There's just stop loss, TP, break even, etc. How you manage a trade. That's your strategy. Your systems is set of rules. You need to have both of these. You can't have a strategy without a system. I'll give you guys some examples of certain things you can implement in your system. I go more into depth in my course, but some things you can implement into your system would be things like time of day, time frame, time trading, okay? When you're trading, give yourself a time limit of how long you're trading. You're gonna burn out as a trader, especially if it's a bad day, if you trade the whole entire day. Don't ever trade a whole session, okay? I know some people teach that. Me personally, it's not good in my opinion, and I just find trading the most volatile times to be better than sitting there waiting for an entry 40 minutes later just for a stop loss to get hit, okay? There's many benefits when you're trading high volatile hours, which sometimes, yes, there are wicks that stop you out, things like that. But majority of times, if you can properly trade and identify those situations ahead of time, that won't happen to you majority of times, and you will hit your TP much, much faster than if you're trading non-volatile session hours. For example, sometimes my TP of 1 to 5 R gets hit in 5 minutes or less. It could be 2 candles on a 1 minute chart and I make 5K, or however much I'm risking, right? While if I'm trading, let's say, a non-volatile session or non-volatile hours, bro, it could take like, man, who even knows, an hour to hit the same amount. So a huge time difference, and most people, they can't, you have to get used to holding a trade for a certain amount of time. You can't switch between holding for a few seconds, a few minutes, to then holding for an hour, 2 hours. It's just 2 different psychological things you have to handle, right? 2 different, you gotta build habits when you're trading. So time of day is one thing. Another thing is max number trades per day, session, things like that, okay? These will help you stay in check, and these rules, actually, if you follow them, they will help with your psychology indirectly. Time of day makes your psychology less burnout. Max number of trades, you won't go into as much drawdown. Very simple things, guys. So number 1 is you want to back to the system strategy until profitable. So if it ends up profitable, that means you are not trader number 1 anymore. You have a profitable system. Now it's your psychology you have to work on. So step 2. Okay, let me make these a different color real quick. But this is super important. Most traders, they take years to become profitable. Maybe like 5 years. I heard some traders take 7 years. It's absolutely ridiculous in my opinion. Yes, people learn at a different pace, and it also does depend how much time and effort you're really putting into trading. If you're not putting much effort and time into trading, then you're not gonna be profitable. Okay. Step 2 is then focus on psychology and discipline. I would say discipline is more important because discipline directly affects your psychology. Focus on following your system rules. Boom. I'm making it direct and straightforward. Most people, this is common sense actually, if you think about it. But most people that trade lack common sense, just being honest. Mostly some non-profit traders, like just come in here, no barrier to entry really for trading. You can open an account, put $10, $100, $1,000, $10,000, $100K, whatever you want, without any type of like merit, right? That's why so many people lose in trading, because of that. They don't know what they're doing. You can't trade without knowing what you're doing. Focus on the skill first, then you focus on the capital. That's how it works. So after you finish step 1, you have a profitable system. Step 2, focus on your psychology discipline, mainly just live trading. I would say for this, all you have to do really is just live trade or forward test demo money and just stick to your rules. And punish yourself if you break them. For example, you can run a mile and if you break one of your rules, if you break 2 rules, 2 miles that day. You must have these things in place to keep you in check. Otherwise, you're just gonna go chaos, okay? Another thing I highly recommend is for step 2, for this report, I highly do recommend going no demo actually. I'll put no demo. Because when you go demo, it does not really have actually the psychology same effect as live money. Now, if you start live trading with live money, then it's a little different. But I would highly recommend just live trade with real money that you're able to lose, okay? Not something huge, not something too small where you don't care, but money where you care enough to follow your rules, all right? So there's that. Now the last but not least step, which is something that is not as crucial, but I still think all 3 steps are 100% significant. Journaling every day, every trade actually. Keep yourself accountable. Me, I still journal even though I know my data on my system. I know everything, how it works. I follow my rules. I follow my discipline. The reason why I journal is just to keep myself accountable, okay? Take screenshots of different time frames, see what happens, see what you see as a bigger picture to a smaller picture, high time frame to lower time frames, many of these things that you guys should probably already know. And honestly, doing this, it will help immensely because this keeps yourself accountable and you can potentially learn new things you didn't realize or see in backtesting.
Got a lot of fans. We ain't checking in no bag, shopping when we land. Big FN bag of ballin'. Plead the fifth if I get caught, they talkin'. Came to drippin' on them, I been saucin'. This that brand new dose.
Yo, what's going on, y'all? Jay Trades here, back with another brand new video. And in today's video, I'll be going over and showing you guys ways that I personally have found and figured out how to break even, ways that I manage my own trades, and things like that. So in this video, I'm just gonna show you guys many different ways of how you can determine when you want to break even for your trades. I know a lot of people have their own different ways. You guys must have heard there's many different types of traders out there, and this all depends on your trading system, your style, and your strategy. But today I'll give you guys some pointers that you guys can just personally adapt to your own trading system and just test it out and let me know how it goes for you. But for break-even purposes, usually what a lot of people do is they break even at a certain point, right? The thing is, some systems work better without break even. So some systems are, I'll just list them out here. We can just make a note today for this video. Break-even systems, I'll just write them out here. Hope you guys can see this. Also, the mic quality may not be the best right now. I'm using my laptop mic just because I forgot my wire for my, I lost my wire from my Blue Yeti. I'm gonna get that soon fixed for y'all. But yeah, so for break-even system, first one is the most common and a lot of people do is set and forget. This depends on your trading system. Again, I highly recommend you guys test out these trading break-even systems that I've taught you guys today implement it into your back testing or your forward testing, and then look at the data and results and pick whichever system has the best combination of risk reward and win rate, as well as the overall expected value of your trading system, right? You want to have the highest expectancy possible while also maintaining a solid win rate so your psychology does not get damaged and you're able to basically manage drawdown better. So the first system is set and forget. What this means for those that don't know is, let's say, let's just pick a trade here. Let's just say we enter off this break structure right here, right? We enter off this break structure, stops right here. What set and forget is essentially I have a profit target level, and I also have a stop loss and an enter, and that's it. Basically what I do in these kind of systems for trading is all I do is I basically go on TradingView, I set alerts at the stop loss, set alert at the TP. You can name these alerts if you want, if you double click on them. It's up to you. Personally, I don't really care, so I just set them. And then usually if you're trading on like MetaTrader or something, I believe there's a sound if you have like an EA to manage your trades. There's a sound that you guys can use, or if you're trading futures, you can also enable TradingView to play a sound when your stop loss or take profit gets hit. So you technically don't need these alerts, but that's just an example of how these systems work. You just have a take profit and stop loss entry, and that's it. You don't touch the trade at all. You let price play out how it is. You don't care in these types of systems how the price moves. It can get very close to your stop loss, hover around, and then continue going down. You don't care. So let's say I entered like here, for example, right? And this would probably be a better example here. 1 to 5 risk reward, really high risk reward trade right here, which is typically my average 1 to 4, 1 to 5. So there's that. But some people, they have low risk rewards. Anyway, for example, let's say you enter here, right? A set and forget trader, what they would do is they just set and forget, right? Now, sometimes what happens is if you break even too early, there's some other traders that break even too early. When you break even too early, what happens is sometimes price hits your break even point and then it hits your TP again. So right here, let's say for example, I enter at this candle right here, 246. This is very late. I don't trade here, but this is just for example purposes, right? And let's say you enter off this right here. So you see this right here, this is a break structure down, right? So today I'll teach you the second break-even system, which is break-even at break of structure, first break of structure. So for those that understand market structure, you know how market structure works, okay? You break market structure here. This is where you go break even. As soon as the last low gets violated, depending on what time frame you're using, and then body candle can close or it can wick. It's up to you. That all depends on how you find in your backtesting. Me personally, I like to see a strong candle closure. Okay, I don't prefer a break of structure where it's a wick. I want a body closure below. So that's a break of structure. This is when traders go break even as soon as that happens. Okay, which is, you know, pretty common. Some traders do that, but what happens you see in this situation is breaks the structure, then it comes back to mitigate this zone right here, and then continues down to your TP. So this is something you just have to be really comfortable with and just understand every system has its pros and its cons. For set and forget, your con is you will most likely lower win rate, but you will not miss winning trades. Okay, this you can have higher win rate, but miss a few winning dubs. Again, this all depends because honestly, sometimes when I say lower win rate, the set and forget might actually be a higher win rate system for you. It all depends on your entry, your stop loss, and how you trade and how you enter. Okay, so this is why data collection is so valuable and why you can't just focus on what others are doing. You have to focus on what you're doing for yourself because everyone trades differently. I don't really know many people that trade exactly the same or manage their trades exactly the same, okay? Everyone's a little bit different in how they like to handle it. This break even has to do with their psychology as well. Some people prefer to be risk-free as soon as possible, and that helps them hold to their TP. So other people, they don't really care. They'd rather let the whole trade breathe and run. So there is that. So that's example number 2, where you break even as soon as this break structure happens. Okay, this, for example, this would be my break even right here. All right, that's where I break even. Now the third system is what I've taught many people, okay? This is a lot more mechanical. Me personally, I'm a mechanical trader, but I also do add discretion sometimes in terms of which zones to pick. Sometimes when there's a certain criteria that I do teach in a course that no one else talks about really,
I will not take the trade. And I've seen it play out many times where people get liquidated because they get in too early, right? So I do teach things like that, how to spot liquidations and inducements, and just get super advanced into that kind of stuff that I won't be teaching on YouTube. But nonetheless, this is the third way to basically break even. You can use a mechanical fib. Okay, this was what I don't really see many traders teach this. Actually, most people do teach the set and forget or just break even at first break of structure. This third way is kind of like a special thing that I do for my system. Actually, I've been trying it out recently. It's been going pretty well, and I break even at 50% of the fib. So you want to create a Fibonacci, get your Fibonacci's or Ganna box, whatever you want to use. I know there's a tool called Fibonacci retracement. Yeah, this honestly Ganna box is the same exact thing. I don't really care what I use, but yeah, nonetheless, use whatever tools you guys want. But essentially how this tool works is you want to take the tool from your entry point, not your stop loss, okay? Take from the entry point to your take profit, okay? Once you do that, you want to have these settings here. This is my settings right here, 0, 1, 0.25, 0.15, 0.75. You can not have it if you don't want. You can like remove, like for example, which point you want to break even. But me personally, I keep them all just for data collection purposes, because you have to understand we have to adapt to the market, right? The market 2022 is not the same as 2023, it's not the same as 2024. You have to adapt to how the market moves. There's certain years where certain assets move a lot in a bigger range, and certain years where assets move in a much smaller range where you have to manage your trade more wisely, okay? In a bigger range, you can let it run farther. In a smaller range, you gotta manage it more wisely and have a smaller RR basically. But basically, what I like to do is I just include all 0.5 levels to keep it very mechanical, very simple. As soon as 0.5, this level gets hit, I usually set a TP, or not TP, an alert here. As soon as that level gets hit, I'm setting my stop loss to break even, risk-free trade, running to TP. I don't take partials or anything like that, okay? For those that know how I trade now, I don't take any partials, I just run straight to TP. It's much easier in terms of data collection, and me personally, I'd rather, let's say, cast like a 2 or 3 RR trade, 1 TP, than take all these partials at 0.5 RR. I've seen some traders do that, and me personally, don't recommend it. It's not good or easy to backtest and use data collection. Me personally, I do recommend just 1 TP and you just exit out. Or some people, what they do is they exit here 80% and let the rest just run forever and see however long it goes with the trailing stop loss. Me personally, this is just my very simple system I like to keep. Okay, so mechanical fib, 50% break even. Okay. Now the last but not least thing you can try out is mitigations. Okay, I do go very in depth into mitigations in my course. Not gonna go super in depth into mitigations here if you guys don't fully understand how they work and why they work and things like that. But basically, this is what this break-even system is once you mitigate a zone, essentially is you want to wait for a strong reaction, and then that's where you break even. Okay. Now the strong reaction is, you could say, discretionary, right? For me personally, what I found that works best is a certain RR that I would only tell people in the course or in my group, just because I don't want to have certain things out there that people pay for and then they see it getting released out here for free. So again, you can figure that out yourself. Basically, these are 4 break-even systems you guys can use to manage your trades for break-even. Again, you can also incorporate trailing stop loss, things like that. But I only have 3 outcomes for my trades: stop loss, break-even, or TP. That's it. Make it very clear and simple, and that's how I personally trade. And it's a lot less stressful than doing all these trailing stop loss, things like that. So again, that's it for today's video. Hope you guys did find something new, especially the Fibonacci break-even strategy. Most people don't teach that ever. So if you guys did find out interesting, make sure to backtest and collect data on which one works best for your system. And yeah, let me know which other videos you guys want to see in the future of my channel. I do have the free Discord link down below, as well as the course and also the indicators that I use personally on my day-to-day trading that help me immensely. This way I don't have to do as much marking up and having to add my own discretion into trading, which I think too much discretion in trading is not good in the long run. So again, thank you guys so much for watching, and I'll see you guys in the next one. Peace.
Got a lot of fans. We ain't checking in no bag. Shopping when we land. Big FN bag of ball. Plead the fifth if I get caught, they talk. Came through dripping on them, I been saucing.
Yo, what is going on, y'all? Jay Trades here, back with another brand new video. And in today's video, I will be going over my personal day trading journal and any advice that I could give you guys, or things that you guys might find that you can implement into your day-to-day journaling. Especially as someone that's full-time trading, you definitely want to be keeping track of all your trades and your journaling in case your backtested system performs differently in real markets. Yes, not every single month is going to be the exact same results. There will be variations depending on price action, but if you figure out later on that your system does not work anymore, you can then have data to go back on. So that's why I think it's super important to have a journal, also to keep yourself very accountable. My webcam today, unfortunately, I think it broke or something, so I don't know, it's not connecting, so no webcam for today's video, but nonetheless, I will go over the journaling. So you guys know I used to use TradeZella for my journaling for trading. Now I've switched over to Notion. In the past few months, I've gotten pretty used to Notion and its platform, and there's just so much more customization that Notion offers that TradeZella does not offer. So that's why I highly recommend you guys use Notion as well. Me personally, there's so much more flexibility in the way you can organize things, right? You can see on the left-hand side, I have a journal for each one of my strategies. I have a few more strategies outside of these, but these are the main ones that I am trading day to day. So basically, those are strategies, private strategies that I'd be teaching, and some I don't even teach at all actually, because they're just my own strategies I made, and I have tons of data on them as well. So that's why I know why they work and how they work as well. Yeah, you can see on the left hand side, I have goals for the year, monthly trading goals that I move month to month, my full training system, and then the journal for each one of my strategies. On Notion, you guys can probably figure it out yourself. I don't have a link to the exact Notion that I'm using, like the exact journal I'm using. However, you guys can definitely figure out yourself how to create a calendar view, things like that. I'm sure if you hit add a page, I think you can create something like this yourself. But again, I might release it to the private students if I want to later on, if enough people request it. But nonetheless, here's my journal. I have my strategy journal, the session I trade. Some people trade multiple sessions, but I like to at least put down a time frame. I always restrict myself and try as much as possible to trade during a certain time frame, so there's no burnout, as well as no over trading as well. So I usually trade the first 3 hours in every session. Sometimes I trade in Asia and London, but that's pretty rare. Most of my setups are found within this 3-hour session. Most times from my data, my trades don't even hit 11 o'clock, so it's usually the first 2 hours. But here are just some general guidelines I have from my trading system as well. Simplicity is key. Make sure to keep trading. Make trading, which is something very advanced in nature and hard, make it simple for your brain to understand. So that's why I use simplicity is key. Follow and live by that for trading. Doing more does not always mean making more money in trading. Include entry time frame, risk reward, and money. I don't include the money amount anymore. I used to because I was messing around with spread and some R things for the strategy, but I do include time frame and risk reward of each trade. Next, let your edge play out. This just reminds me, honestly, to keep trading. Even if you're in drawdown sometimes, that will happen. Your equity curve is never gonna shoot straight up. There's always gonna be ups and downs, just like market structures. So always be pullbacks, things like that. So let your edge play out. Keep your risk consistent, okay? My back tested results on my strategy for this one strategy, 40% win rate, about a 5 RR average. Max drawdown for me personally, trading is 4% down per day, then I'm done trading. And the max number of trades per direction is typically 2. So these are just some rules I have myself. People have different rules in their systems. Definitely make sure to backtest your rules, or at least forward test them, and stick to them each and every day out. This will help your psychology greatly. Now that you have your rules in your system, things to look at, you then want to basically, okay, I have a calendar, and what I do is I write down the asset I'm trading, how many trades I took, how many trades I won, how many trades I lost, how many total trades for the day, do I end the day green or red, and that's basically what this journaling here is for. In other few months or few weeks of October, I didn't really trade. I started journaling October 16th right here, as you can see. The rest of October, I took a break just to enjoy life and chill, because this was a really good week for me in here, October right here. This was an insane week for me. Most times I will not have a 77-hour week is not normal. I will say that, even for most traders, in a week is very not normal. But this is probably one of my best weeks I've had. Not my best week, but probably one of the best ones. So there's that right here. I just have basically this whole week I ended up green, and it was not even slightly green, it's very green. Okay, super deep in profits right here. I trade gold, S&P, SPY, you guys know that it is, EU, and oil. Those are the main four that I'm trading. I don't really trade anything else. Sometimes I look at NASDAQ, but that's super rare because usually ES and NASDAQ are very similar. So I try to mainly just look for confluence if that's the case, but most times I stick to one of them, so it's SPY. That's the one I trade. And I also trade option contracts with SPY, not just Forex and futures. So that's another thing right there. So yeah, you know, these things are the ones I'm trading. List them out, list the RR net total, number of trades, win, losing. And then in here, I'm not gonna click on the trade because it's gonna show my trading with the screenshots that I only share to my private Discord or private members and things like that, that people really want private mentorship. But if you click on this right here, you will be able to essentially access a panel that allows you to copy and paste screenshots in. You can add comments, things like that. That's what I add in here. Any comments I need, any things that I noticed during the trading day that I didn't pick up on before, but mainly just screenshots of multiple different time frames. I used to only include my entry time frame, which is the 1 minute and sometimes seconds. It varies, but usually it's the 1 minute. However, now I've started including 1 minute, 5 minute, 1 hour, and a few other high time frames to see if I spot anything that could help me boost and improve my trading, right? Make better decisions. So that is basically it for the journal. There's nothing else much to this. The only problem with this is some people don't like to manually take screenshots, manually add up these numbers. They like the automated journaling, which is with TradeZella, which is basically linking to your broker. And this is much easier for me to access these trades as well. One click and I see the whole entire chart. I don't need to see anything else, things like that. I used to use TradeZella, but not anymore. I just find this a lot more easier. And this keeps you very disciplined and sticking to your routine, which is crucial in trading. So after 11:30, after I'm done trading, I immediately go journal and take screenshots of the trades, okay, and what I see. I review them for about 30 minutes to an hour, and then I go about my day. I don't try not to stay on the charts the whole entire day because not every single day is also an opportunity. That's something you definitely need to know when you're trading in the market. So yeah, anyway, that's gonna be it for today's video. Hope you guys did enjoy this quick little video on how I personally journal. You guys can try out these Notion templates yourself. There are free Notion templates online as well. You guys can try out for trading. This is just my own personal one that I personally use. I don't really share with many people. So if you guys are interested, again, let me know. Let me know what else you guys want to see in this channel. And of course, the course is down below. Free Discord server group is down below as well. And many more things on my website, Essential Traders, that we are implementing on there, such as things, certain indicators that I'm using each and every day. No, they are not your typical indicators like EMA, crossovers, MACD, things like that that you get for free. These are custom coded indicators that I made that are basically related to price action, okay? So they're nothing to do with all these things you guys might think of. They're either mathematical or algorithmic. So just indicators that I personally had helped me save so much time when it comes to trading and making better trading decisions. So again, thank you guys so much for watching, and I'll see you guys in the next video. Hopefully when my webcam works.
Got a lot of fans. We ain't checking in no bag, shopping when we land. Big FN bag of ball. Plead the fields if I get caught, they talk. Came through dripping on them, I been saucing. This that brand new
Yo, what's good y'all? J-Trades here, back in a brand new video. And in today's video, I just want to be discussing about a psychological thing that I've noticed with me myself when I was starting to day trade, that I think a lot of day traders, especially when you're starting out, or even intermediate traders and even advanced traders, still potentially struggle with, which is very, very simple. But stop trying to control the market. Okay, there's so many traders out there, they're like, oh, liquidity. Price has to go here. It has to go here. 100% will go here. That's so BS. Okay, price does not have to go where you're telling it to go. Okay, it can or it won't. Nothing is guaranteed in the market. Okay, and when I mention stop trying to predict or control the market, what I'm trying to say is stop trying. Once you put on a trade, right? Stop trying to stare at your screen the whole entire time when you're in a trade. That is not healthy, first of all, and that's going to cause a lot of emotional stress when you're in a trade. When trading should be yes, trading is like the most stressful thing you can ever do in life. I 100% agree, but you want to make it as less stressful as possible for you This way you don't get burnt out, you don't overtrade, and you don't just make a lot of bad trading psychological mistakes, right? So again, once you put on a trade, stop trying to think you are a market maker this, oh, they're targeting me, they're targeting that. Okay, some of that may be true. However, there's nothing you can do about it in terms of what you can control, right? You are controlling your own risk, your own trade, your take profit, your stop loss. That's stuff you can control. Once you have that set, stop trying to manipulate the market. Like I see dudes like blowing on candles right on the screen, like bro, you know how stupid you look, dude. There's people blowing on the screens, you know, doing crazy stuff, thinking the market has to go their way, which is 100% not true. Okay, that's how you get punished upon a market. A market can do whatever it wants, whatever it naturally does for each asset. Okay, and our job here is to capitalize on these big moves in the market and make money. That's the end goal of every single profitable day trader. And that's full time. We're trying to make money out of these markets. We're not trying to get the whole entire move to the dot, know exactly pinpoint where it's going to reverse. Okay. Yes, there are a lot of technical analysis ways you can pinpoint things like reversals, things like that, but you're never ever going to expect to sharpen your edge to the point where you can exactly pinpoint where and when the market is going to go, exactly what price, things like that. Stop trying to fully predict the market and try to basically stare at the chart thinking you're doing something. Okay, look at these candles move up and down, up and down, up and down while in a trade. Sure, yes, you can see if the momentum is going in your favor, right? If you're going short and you see a lot of selling pressure, that is very good. However, like I mentioned, when you keep on staring at the screen and looking at these candles move, essentially you're almost as if putting yourself in a market maker shoe. You're trying to like almost control the market so it goes in your favor, right? Yes, we do want it to go in our favor, but just staring at your screen, putting all this additional stress, and it's not going to affect the outcome of your trade. The market is going to do what it wants and what it always does, okay? So you putting additional stress, staring at a screen all day, sitting in your room and doing nothing else with your life, not touching grass, not going outside, things like that. I can go on forever, not getting vitamin D, not seeing the sun, dog. Bro, you're missing out on a lot of life, okay? Life is not just about the charts. Life is not just about day trading. Once you get past that, you will understand, okay? Because don't forget, we are becoming full-time day traders. We want to become full-time day traders, or a lot of people want to become full-time day traders. That's the point why they start getting into day trading, at least. Hopefully not to get rich quick, because that's not how day trading works. It takes time and effort and a lot of emotional burnout to get to that really professional level. But we're here to basically extract profit and use the rest of our time as free time. Okay, we're not here trying to sit on the chart from a 9 to 5 or 9 to 11 or 9 to 12 or 9 to 8 p.m., 9 a.m., 9 p.m. Okay, we're not here to be sitting on our chairs all day trying to stare at a screen and try to predict the market. Okay, we're here just, again, like I mentioned, to capitalize on the big moves in the market and make our money and exit. That is it. We're not here targeting liquidity this time it's going to target liquidity here, stop loss hunt here ASAP as soon as possible. Price has to go here. Doesn't make sense if it doesn't go here. Don't be like ignorant or have a huge ego when the price doesn't reach where you want it to be. That's just where the market's going to move, where the market wants to move. Okay, you're just going to accept that fact and stop staring at your screen and trying to think that, you know, staring at your screen is going to change the result of the trade. A lot of that comes from more so anxiety, I would say, as well as no confidence in your trade. Okay, if you're very confident, done tons of back testing, tons of data with a take profit, stop loss, and your trading system in general, a lot of these professional day traders, they're not sitting there on the chart whole day. In fact, they set take profit, stop loss, they enter, find confirmation, things like that, and then they go on with their day. The reason why they're able to do this and leave the screen is because they're very confident in the system edge they built from personal backtesting, as well as years and years of an experience looking at the market and how it moves. Okay, you're not going to be able to do this first off in the first year of trading. Probably within the second or third year, you can start transitioning to doing this. But you want to get in the habit of not staring at every single candle unless it's getting, of course, near like an alert or a point of interest of yours, right? After your entry, you don't want to be staring at your screen the whole time, okay? You want to be confident, and in order to be confident, you can't just be egotistical. You want to be confident from inner confidence that's based on experience and profitability. think about this. If you are a day trader that's not profitable for 3 years, what makes you think standard screen is gonna make you profitable and any more stress? You're most likely, you just waste your time, right? Versus day traders have been doing it for a long time, let's say 3 years profitable. They know where price is realistically going to go. They're not trying to cash a whole entire move to the dot. Don't forget this. This is a very key thing. We're not here to try to cash a whole entire move to the dot, because that's what something that a lot of traders would focus on in the beginning. Of course, we want to maximize our profits, right? But no one truly knows exactly at what point the market is going to reverse. We know roughly what area, right? For example, and with a lot of experience, you can even pinpoint a very small price range, but you can never know exactly to the T every single time, okay? So that's why we need realistic take profit levels. And with realistic take profit levels, that gives us very high confidence to just set and forget the trade, or however you want to manage your trade. For example, some people have multiple take profits. That's gonna be different. Me personally, I'm very confident in my trading system now, to the point where I've seen it results from back tests as well as live forward testing, where I just have one take profit and one stop loss. And I rarely ever, if I do, I would move my stop loss to break even, but that's the only thing I touch in the trade. I don't, for example, take partials anymore, things like that, right? That's something I would say in terms of trading, something like a beginner would do in the beginning, because it gives you security, you know, knowing that you took profits off the table. However, later on you will realize this is ruining your risk reward ratio, and it's better to just exit in one spot because it's also less stressful. But it's also harder to pinpoint at what take profit level can I maximize the most and have the highest hit rate. So again, all these things just a lot come from experience. I'll say a lot of experience in becoming profitable. So again, that's gonna be it honestly for this video. Just know we're not here to cash a whole entire move. We're here to just make a profit off the market. And if we can do that consistently, we can become full-time, or you can become a full-time day trader. Are you a day trader looking to get funded with 6 figures of capital, or wanting to become a full-time profitable day trader? Well, look no further. At ETU Essential Traders University, that is exactly our main goal. We're here to teach traders of all skill levels the understanding and skills needed to become profitable in these markets. And we also offer many different services, like a full comprehensive day trading course that goes over A to Z on everything you need to become a successful trader, as well as a premium Discord membership that gives you access to our private community of traders and day trading signals. If you're really dedicated to mastering this craft, we also offer one-on-one private mentorship lessons for those looking to speed up their profitability to journey, and as well as answer any specific trading related questions that they are facing. So now visit essentialtradersuniversity.com to enroll in the day trading course and secure your spot in our premium membership community. Let's embark on this exciting journey together and make every trade count. And I'll catch you on the trading floor.
Got a lot of fans. We ain't checking in no bag, shopping when we land. Big FN bag of ball. Plead the fifth if I get caught, they talk. Came through dripping on them, I been saucing. This that brand new dope.
Yo, what's good y'all? J-Trace here, back in a brand new video. And in today's video, I just want to be discussing about a psychological thing that I've noticed with me myself when I was starting to day trade, that I think a lot of day traders, especially when you're starting out, or even intermediate traders and even advanced traders, still potentially struggle with, which is very, very simple. But stop trying to control the market. Okay, there's so many traders out there, they're like, oh, liquidity. Price has to go here. It has to go here. 100% will go here. That's so BS. Okay, price does not have to go where you're telling it to go. Okay, it can or it won't. Nothing is guaranteed in the market. Okay, and when I mentioned stop trying to predict or control the market, what I'm trying to say is stop trying. Once you put on a trade, right? Stop trying to stare at your screen the whole entire time when you're in a trade. That is not healthy, first of all, and that's going to cause a lot of emotional stress when you're in a trade. When trading should be yes, trading is like the most stressful thing you can ever do in life. I 100% agree, but you want to make it as less stressful as possible for you. This way you don't get burnt out, you don't overtrade, and you don't just make a lot of bad trading psychological mistakes, right? So again, once you put on a trade, stop trying to think you are a market maker this, oh, they're targeting me, they're targeting that. Okay, some of that may be true. However, there's nothing you can do about it in terms of what you can control, right? You are controlling your own risk, your own trade, your take profit, your stop loss. That's stuff you can control. Once you have that set, stop trying to manipulate the market. Like I see dudes like blowing on candles right on the screen, like bro, you know how stupid you look, dude. There's people blowing on the screens, you know, doing crazy stuff, thinking the market has to go their way, which is 100% not true. Okay, that's how you get punished by the market. The market can do whatever it wants, whatever it naturally does for each asset. Okay, and our job here is to capitalize on these big moves in the market and make money. That's the end goal of every single profitable day trader, and that's full time. We are trying to make money out of these markets. We're not trying to get the whole entire move to the dot, know exactly pinpoint where it's going to reverse. Okay, yes, there are a lot of technical analysis ways you can pinpoint things like reversals, things like that, but you're never ever going to expect to sharpen your edge to the point where you can exactly pinpoint where and when the market is going to go, exactly what price, things like that. Stop trying to fully predict the market and try to basically stare at the chart thinking you're doing something. Okay, look at these candles move up and down, up and down, up and down while you're in a trade. Sure, yes, you can see if the momentum is going in your favor, right? If you're going short and you see a lot of selling pressure, that is very good. However, like I mentioned, when you keep on staring at the screen and looking at these candles move, essentially you're almost as if putting yourself in a market maker shoe. You're trying to like almost control the market so it goes in your favor, right? Yes, we do want it to go in our favor, but just staring at your screen, putting all this additional stress, and it's not going to affect the outcome of your trade. The market's going to do what it wants and what it always does, okay? So you putting additional stress, staring at a screen all day, sitting in your room and doing nothing else with your life, not touching grass, not going outside, things like that. I can go on forever. Not getting vitamin D, not seeing the sun, dog, bro, you're missing out on a lot of life, okay? Life is not just about the charts. Life is not just about day trading. Once you get past that, you will understand, okay? Because don't forget, we are becoming full-time day traders. We want to become full-time day traders, or a lot of people want to become full-time day traders. That's the point why they start getting into day trading, at least. Hopefully not to get rich quick, because that's not how day trading works. It takes time and effort and a lot of emotional burnout to get to that really professional level. But we're here to basically extract profit and use the rest of our time as free time. Okay, we're not here trying to sit on the chart from a 9 to 5 or 9 to 11 or 9 to 12 or 9 to 8 p.m., 9 a.m., 9 p.m. Okay, we're not here to be sitting on our chairs all day trying to stare at a screen and try to predict the market. Okay, we're here just, again, like I mentioned, to capitalize on the big moves in the market and make our money and exit. That is it. We're not here targeting liquidity this time is going to target liquidity here. Stop loss hunt here ASAP as soon as possible. Price has to go here. Doesn't make sense if it doesn't go here. Don't be like ignorant or have a huge ego when the price doesn't reach where you want it to be. That's just where the market's gonna move, where the market wants to move. Okay, you're just going to accept that fact and stop staring at your screen and trying to think that, you know, staring at your screen is going to change the result of the trade. A lot of that comes from more so anxiety, I would say, as well as no confidence in your trade. Okay, if you're very confident, done tons of back testing, tons of data with a take profit, stop loss, and your trading system in general, a lot of these professional day traders, they're not sitting there on the chart whole day. In fact, they set take profit, stop loss, they enter, find confirmation, things like that, and then they go on with their day. The reason why they're able to do this and leave the screen is because they're very confident in the system edge they built from personal backtesting, as well as years and years of an experience looking at the market and how it moves. Okay, you're not going to be able to do this first off in the first year of trading. Probably within the second or third year, you can start transitioning to doing this. But you want to get in the habit of not staring at every single candle unless it's getting, of course, near like an alert or a point of interest of yours, right? After your entry, you don't want to be staring at your screen the whole time, okay? You want to be confident, and in order to be confident, you can't just be egotistical. You want to be confident from inner confidence that's based on experience and profitability. Think about this. If you are a day trader that's not profitable for 3 years, what makes you think staring at a screen is going to make you profitable and adding more stress? You're most likely, you just waste your time, right? Versus the day traders that have been doing it for a long time, let's say 3 years profitable, they know where prices realistically going to go, they're not trying to cash a whole entire move to the dot. Don't forget this. This is a very key thing. We're not here to try to cash a whole entire move to the dot, because that's what something that a lot of traders would focus on in the beginning. Of course, we want to maximize our profits, right? But no one truly knows exactly at what point the market is going to reverse. We know roughly what area, right? For example, and with a lot of experience, you can even pinpoint a very small price range, but you can never know exactly to the T every single time, okay? So that's why we need realistic take profit levels. And with realistic take profit levels, that gives us very high confidence to just set and forget the trade, or however you want to manage your trade. For example, some people have multiple take profits. That's going to be different. Me personally, I'm very confident in my trading system now, to the point where I've seen it results from back tests as well as live forward testing, where I just have one take profit and one stop loss. And I rarely ever, if I do, I would move my stop loss to break even, but that's the only thing I touch in the trade. I don't, for example, take partials anymore, things like that, right? That's something I would say in terms of trading, something like a beginner would do in the beginning, because it gives you security, you know, knowing that you took profits off the table. However, later on you will realize this is ruining your risk reward ratio, and it's better to just exit in one spot because it's also less stressful. But it's also harder to pinpoint at what take profit level can I maximize the most and have the highest hit rate. So again, all these things just a lot come from experience. I'll say a lot of experience in becoming profitable. So again, that's gonna be it honestly for this video. Just know we're not here to cash a whole entire move. We're here to just make a profit off the market. And if we can do that consistently, we can become full-time, or you can become a full-time day trader. Are you a day trader looking to get funded with 6 figures of capital, or wanting to become a full-time profitable day trader? Well, look no further. At ETU Essential Traders University, that is exactly our main goal. We are here to teach traders of all skill levels the understanding and skills needed to become profitable in these markets. And we also offer many different services, like a full comprehensive day trading course that goes over A to Z on everything you need to become a successful trader, as well as a premium Discord membership that gives you access to our private community of traders and day trading signals. If you're really dedicated to mastering this craft, we also offer one-on-one private mentorship lessons for those looking to speed up their profitability to journey, and as well as answer any specific trading related questions that they are facing. So now visit essentialtradersuniversity.com to enroll in the day trading course and secure your spot in our premium membership community. Let's embark on this exciting journey together and make every trade count. And I'll catch you on the trading floor. Yo, what's going on, y'all? Jay Trades here, back in a brand new video. And in today's video, I'll be going over when you should trade and when you should not trade. And this is completely dependent on the most obvious, which is your session, right? If you're trading Forex, so you know we have London session, New York session, and then the relevant Asia and Australia session, okay? So obviously those two are pretty relevant. I would mainly focus on London session, New York session. You obviously gotta be trading in the right session, and we wanna be trading during high volatility hours, okay? And you guys can look up the high volatility hours. I will tell you guys right now, if you guys really are interested. The volatility hours depends on what asset you're trading, okay? So that's something you guys need to dig into, look into charts, look at key times, and basically see what times for what asset you're trading are active hours that fit into your own schedule. You want to be trading when there's high volatility, high volume. This gives you your best spreads, which is extremely important, especially when you're scalping with tight stop losses. You don't want to get stopped out too early. You want to get the best fill, as well as just in general getting these big, nice risk reward moves, okay? If you are trading when there's very low volatility, most often than not, you're gonna get these very small and tiny consolidating moves, and it's just very boring and no one wants to sit through it. Times of consolidation, right? Everyone wants these big moves and secure profits. So therefore, basically, of course, time of day in session and basically volatility is the first things you should be looking at. Now, the thing after that you should be looking at is also extremely important. I'm getting straight into this video, okay? And that's gonna be basically market conditions. Now, this is something that you could say comes with more experience. The more experience you have, the better you're able to identify what is a valid and good market condition, what is not good market conditions for your specific strategy. For my strategy that I teach in my course, I know exactly what is considered good market conditions and what is considered bad market conditions. This way I can amplify my wins and understand when I should trade and when I should not be taking a trade. So for example, I'm going to mark out you guys a clear example of bad market conditions right now. This right here from 8 o'clock, this is even during session too, right? First off, you want to identify, are we during the right session? Yes, I am during the right session. This is high volatility session hours. So this is a valid area I should be looking at. Now, look at the problem with this price action here though. Once I start seeing this in the first few hours, I'm just not looking at the chart for the rest of the day, or at least during this session. Why? Because market conditions are horrible. You guys can see this is on the 5-minute time frame. The 5-minute time frame should be looking smooth. For the people that are scalping intraday, 5-minute is a great, excellent time frame to be looking at market conditions on. 1 minute, I would say, is not the best because 1 minute you could have moves going up and down within minutes, and it may look extremely clean, but on a higher time frame over a period of time, the moves are actually looking like this on a 5-minute, extremely choppy. On a 1 minute, this could be looking very smooth, but when you go on the 5-minute, this looks like a lot of chop. And basically this makes it so you get stopped out so many times too often. You just can't, it's just hard to get very precise entries when prices move like this, okay? Choppy price action. And of course, you can tell hindsight is going downwards, but if you're looking at this real time, you have no clue if it's going downwards or not, okay? You have no clue where price is actually heading to. So this is considered very bad market conditions. When we have extreme chop like this, we need good clean movements. This is a perfect example right here. Great market conditions right here. This is not even during my session. This is the Tokyo session. I don't trade during this session, but look at what you got here. This is excellent market conditions right here. Even here is pretty good. You could be trading this as a demand zone, supply zone if guys really wanted to. I wouldn't trade this supply zone because it is below. This is basically in discount. I would be trading that supply zone, but nonetheless, this is a perfect example of great market conditions. When you see something like this forming of previously, you can expect clean moves right after. Now, when you see something like this right here, all of this accumulation, like this here in the middle of nowhere, as well as just like nasty price action going on previously right here, it's just not clear. It's not strong, does not give great conditions. You can expect it to be followed by bad market conditions. So you can kind of even see these things ahead of time depending on how price action was moving previously. Because how price action moved previously basically gives the market like resistance and support levels, and they're gonna be all over the place, which creates this choppiness. Okay, orders gonna be all over the place. People don't have orders everywhere. There's no concise area how pricing move. So this is an example of clear direction bias. Clearly price is going up. Price went down very clear as well. There's no chop when we're going down. This is horrible. We're chopping up and down to come down here. For a move down, I want to see something clear. They're like, this is solid right here. That's a solid move. This is even better. This is clear as day that's going down. Okay, we want these fast moves of high volatility, high volume that are very clear. Very good move right here. This is also very clean. Again, this very clean move up as well. This is very good market conditions. Now let's see and identify another area of good and bad market conditions. So let's see what we see real quick. I'm just gonna do something real quick. Okay, so I would say right here, from here to here, and from basically here to here, excellent market conditions going up and down. When you see price going up very clearly, it's gonna make a very similar clean move going down. Okay, excellent market conditions right here. This is great. This is what exactly what we're looking for. Okay, great market conditions. Now, bad market conditions again would be like something like this. This is even during session too. This is horrible. Like the fact that the price is moving in such a tight range, and giving very minimal opportunities for us to trade in. Now, of course, if you have very high or big stop losses, you can definitely trade this. But me personally, I don't have stop losses that big. I like to get sniper entries, and you just can't get a break of structure or fair value gaps or things like that, especially when price is chopping around like this. It's horrible, right? So that's bad market conditions, okay? Again, excellent market conditions right here. As you can see, clear indication, even live right now, market is going to be pushing up. And I do think gold is going to continue pushing up all the way above here before we see further resistance and even potentially clearing all the way back up here. We'll see what happens. But that is an example of great market conditions. Now let's go to one more example, okay? This is a perfect example right here. This is on the 15-minute time frame. Even the 15-minute time frame can roughly tell you, like this move right here we previously saw, it looks clean on the 15-minute. Now, this does not look that clean on the 15-minute, okay? This right here, another example, bad market conditions. Horrible. Price is barely ranging, barely moving. Horrible market conditions, okay? This is a really good market condition right here. Clearly going down, clearly going up. Very nice moves. Again, it has some accumulation here. You know, as from this video, you guys can clearly tell when we have good market conditions, when you should be trading, when you should not be trading. Like this whole place right here, excellent market conditions. Very clear and concise moves. Very, very clear indication of where the market is gonna move. Something like this is not the best. This I don't like, okay? This is things you want to be avoiding. You want to be avoiding when you see price moving like this. I'd rather wait until we have a clean state of price action. Like I'd rather, when I see this, I'd rather just, I'm not gonna trade this, okay? I'm just gonna wait it out. Once we have indication of a clear move, that's when I'm interested in looking to trade market again. For example, we got a save supply zone right here. Something like that, okay? So that's gonna be it for today's video. If you guys did enjoy and learn a lot, if you guys did enjoy, make sure to leave a like, comment, subscribe, and I will see you guys in the next video.
Are you a day trader looking to get funded with 6 figures of capital or wanting to become a full-time profitable day trader? Well, look no further. At ETU Essential Traders University, that is exactly our main goal. We are here to teach traders of all skill levels the understanding and skills needed to become profitable in these markets, and we also offer many different services like a full comprehensive day trading course that goes over A to Z on everything you need to become a successful trader, as well as a premium Discord membership that gives you access to our private community of traders and day trading signals. If you're really dedicated to mastering this craft, we also offer one-on-one private mentorship lessons for those looking to speed up their profitability to journey, and as well as answer any specific trading related questions that they are facing. So now visit essentialtradersuniversity.com to enroll in the day trading course and secure your spot in our premium membership community. Let's embark on this exciting journey together and make every trade count. And I'll catch you on the trading floor.
Yo, what's going on, y'all? Jay Trades here, back in a brand new video. And in today's video, I'll be going over a really good trading system that I've implemented personally that has helped me basically maximize all my profits on every single winning trade. I personally believe that the way you manage a trade is extremely important to your profitability, because if you can enter a trade and you know where to put your stop loss, but you don't know how to manage your profits on the winning trade, you're gonna basically cut into your profit factor and how profitable you are, because you're not you're not maximizing your winners. Okay, maximizing your winners is gonna help you build a cushion for your losers when those probabilities don't work out. Or when you go on a losing streak, you will still protect your capital, and that is the number one thing about trading, which is protect your capital and slowly grow it. We're not trying to get rich fast here, we're trying to grow it in a smart way. So that's what I'm gonna go over in today's video. So let's just, I'm just gonna basically essentially pick out some trade examples, okay? And we will be using trade examples, and I'll show you guys essentially how I would be managing my trades. This is a trading system that I've been using for quite some time, and I did back test this as well, and I found it to be the best possible solution. Now, there are essentially 2 ways, okay, to manage a trade in terms of taking profits, at least. One is you have set and forget, meaning you set a stop loss and a final TP, you just let it run, okay? That is a very easy way, the easiest way basically to manage a trade. Basically, in that situation, you're not really actively managing, you're passively managing, you're just setting and forgetting. Okay, number 2 would be having multiple take profits. So multiple losses when you have to actively manage your trade. And personally, what I found best is I like to have a maximum of 3 TPs. So these again are the two choices you guys have: set and forget and multiple TPs. This is all up to you, okay? Depending on what type of trader you are, your scalping, swinging, this matters a lot. So again, this is also a personal preference thing. Some people have the personality and psychology to be able to, set and forget. Other people, they can't, and they need to have that safe cushioning in mind of having multiple take profits. So for me personally, I like having multiple take profits, okay? I don't like necessarily setting and forgetting, because I do believe it is a good idea to read price action while it's coming out live to see how price is reacting at certain levels. That is when I can determine whether I should get out of a trade earlier or if I should hold it to a full TP. But for me, when you have the multiple TP system, what I like to do for taking profits, so let's just call it system, is my rule is 3 take profits maximum. Okay, only 3 take profits. First take profit, okay, every take profit level, actually, here are the rules. You need 3 take profit max, right? The take profit levels are going to be at key levels. You want to set these areas at key levels of imbalances. So key levels of imbalances or liquidity. These are the areas or levels you want to be taking profits at, okay? Everything else, you should be looking at other things. Just straight key level imbalances or liquidity. This is where the market is targeting, and these are areas where reversals against you will happen. Any other areas are basically dead areas where it's just random, okay? There's not much significance going on. My system is after first TP, so let's just say, I'll write like this way: TP1 hit. After TP1 hit, my stop loss usually, most of the times, goes to break even. This depends a lot though on the trade. Every trade situation is different. I don't always set it to break even. I sometimes move it down